Hi friends, so finally I'm going to upload something called as concept videos for your CA inter cost accounting as well as financial management. So cost and management accounting, I've released a concept book, as well as financial management, I've released a concept book. Using this concept book, I am going to upload something called as concept revision videos. These are going to be extremely useful at the revision phase for you guys. Only 2-3 special points which I want to tell you. These are for revision purpose. So you can use this only to revise concept, which means you have to be aware of the concept first. If you are not aware of the concept and then use these videos, it may not give you the required result. So please do prepare first at your end, be it the cost and management accounting concept, which is there for all the 15 chapters, or your FM concept, which is there for all the 9 chapters, the practical chapters. The theory chapters are obviously not covered. For theory, I've separately uploaded theory videos which are added in the description of the video. In the description, you will find the theory videos link. Now, what disclaimer I want to give is, when you watch these videos, first you prepare at your end, then watch it. Second, in costing, we are discussing around 300 plus MCQ. These MCQ are concept based MCQ. They will help you in answering your exam MCQ as well as answering the detailed question. Only thing is, I've discussed as a part of my class when I taught that concept, and immediately I did this revision. So students were fully aware of the concept. At your end, you may not be aware of the concept fully. So you can take time to read it, and whenever I discuss an MCQ, please pause the video when an MCQ is discussed. You answer it, then unpause the video, and then look at the answer which is discussed. Don't go with the explanation I give before you solve it. So you will have to keep pausing your video multiple times. Pause, solve, unpause, look at the explanation, again pause, because multiple MCQs are discussed. In costing, around 300 plus MCQ. In FM, around 200 plus MCQ are discussed. Entire subject of costing is around 10 hours. FM could be around 5 to 6 hours. Entire subject will get revised. You will not missing out on any concept. If you are clear on this, you can handle any type of problem in costing as well as FM. So what you should do is, after this is done, you pick few questions from my question bank. I'll share the link for that also. You pick few questions and solve it, and that is sufficient to score 60 plus in my paper and costing, and FM obviously 30 plus, and balance you manage through your SM. This is what I want to say. Now the concept video will start. You can keep going through it. Chapter wise, the timestamp are attached in the video. You can go through whichever chapter you want. You need not follow the order in which I'm uploading. Any order you can follow as per your preference. Thank you, friends. The concept video will start now. Okay, let's start now. From the concept book, we are going to revise cost sheet chapter. So first, broad classification. We classify the cost into, the first classification is direct and indirect. When it is direct, I'll have to classify the second category, which is on the basis of the nature, where we classify them into what? Material, labor and expenses. Material is basically the physical thing which you can touch. Labor is basically the reward which you pay to your workforce, and expense is a residuary category, which is neither material nor labor, will go under the category of expense. The first categorization, direct cost, indirect cost. Direct cost is something which is directly and economically identifiable with the end product. What is directly is, when you see the end product, you can say that this cost is there. Example, when I'm manufacturing a chair, plastic which goes into the manufacturing of a chair is a direct cost. Some labor would have worked on it, some machine would have done the work. All those are called direct material or direct labor or direct expense. Something which is not directly identifiable or which is not economically identifiable or which is both is an indirect cost.
If it's indirect, indirect is otherwise called as overheads. Indirect cost is otherwise called as overheads. And when you have overheads, you have a three-way categorization. The three-way categorization is people who are doing manufacturing called as production, works. I want participation, guys. Production, works, manufacturing, factory. Different names are there for that. And one who sell the products, they are called selling and distribution. And the third category is who's helping them doing this, they are called as administration. So this is the categorization for cost sheet purpose. First is I classify direct and indirect. Direct is something which is economically and directly identifiable. Example, if I look at the shirt, thread is not economically identifiable. I don't want to know how much thread has gone into the making of a shirt. Also, materiality is very critical. If something is material, it will become direct expense. Something is immaterial, it will become factory overhead. We always have this confusion between direct expense and factory overhead. Depending on the materiality, the answer will keep changing. So this is the first classification, direct and indirect. If it's direct, club it with direct material, direct labor or direct expense. Indirect, not material, indirect manufacturing, indirect administration, indirect selling and distribution. This is our classification. Format of cost sheet, we start with direct material. Direct material, in that what is your first item? Opening stock of raw material, add purchases, net of purchase returns. If you have any purchase return, you net off, are deducted. Then incidental expense. What is incidental expenses? All expense incurred to bring the material to the factory. Everything which is incurred to bring the material to the factory is incidental expenses. Freight, carriage inwards, insurance, anything till you bring it to the factory. After you bring it to the factory, it will become factory overhead. It will go to the factory overhead. So that is incidental expense. Deduct closing stock of raw material. Deduct scrap. If there is any scrap, please deduct it. You will take it to the outer column. Direct labor, direct expense put together is called prime cost. After prime cost, we have factory overheads, which includes all expenses related to the factory. Then I have gross works cost, add opening WIP less closing WIP. I am adjusting the WIP figure. I get net works cost, and then I have 5 line items. These are separately written. These are separately written because I want to have control on these 5 items. First is quality control, research and development, primary packing cost, AOH relating to production, and less credit for recoveries or scrap. You will get cost of production. In bracket, you will have to write the number of units. In bracket, you will have to write the number of units. Whenever you write cost of production in bracket, number of units, add opening FG in bracket number of units into the price, less closing FG, either in the FIFO method or weighted average method. I will discuss that again. FIFO or weighted average, you will get cost of goods sold. Again in bracket, you write the number of units, and then you have your general and administrative overhead, selling and distribution overheads. In between, you may have item called as interest and finance for non-long-term funds or non-equity funds. Non-long-term or non-equity funds. You will get cost of sales, profit and sales. We learned certain equation. The first equation is gross profit. Gross profit is equal to sales minus COGS. Sales minus COGS. Purpose is to calculate the cost of goods sold. Net profit is equal to sales minus cost of sales. Every cost is included in this. Then have cost of goods available for sale, which is equal to debit side or credit side. What is debit side is opening stock plus cost of production. What is credit side is units sold plus units unsold. Units sold is called COGS, unsold is called closing stock. Then this is the equation I was talking about. Opening stock plus production is equal to units sold plus closing stock. Opening stock plus production is equal to units sold plus closing stock. In labor, they may use a term called productive labor, non-productive labor. Productive labor means he is employed in the production, direct labor. Non-productive means he is not employed directly in manufacturing. He is not employed directly in manufacturing. It will go under the category of factory overhead. It will go under the category of factory overhead because the labor is going to be there in the factory. The labor is going to be there in the factory. Reward which you pay to providers of capital. Reward which you pay to providers of capital. Equity guys get equity dividend, ignore. Preference guy get preference dividend, ignore. Long term get long term interest, ignore. Only item which you consider is in case you are taking a loan for non long term purpose or non equity purpose. Equity means long term, so it's basically non long term purpose. If you're taking suddenly in between this money, then you will have to consider that as an expense. Then you'll have to consider. Logic for this is consistency is needed. PepsiCo will have this cost, other company may not have, depending on the capital structure. What is capital structure? Is debt equity mix. So because of this reason, I want consistency. If you have equity dividend, you are ignoring. Interest also needs to be ignored. Then packing, two types of packing is there: primary packing and secondary packing. Primary packing is for the quality of the product, which is a separate line item, and secondary packing is either to distribute or to attract the customer. Distribution is called distribution overhead, attraction is called selling overhead. We call it a selling and distribution overhead. Freight inwards or outwards. Freight inwards is related to raw material incidental expense. Freight outwards is related to finished product, we call it a selling and distribution overhead. Income tax is going to arise only if I make profit. My purpose of costing is not to calculate profit, it is just an allied objective. Purpose is to calculate the cost of a product or service, so income tax is ignored in the calculation. Clear? Now notebook, calculator, both of them have to be done together. You will have to keep doing things. Let's discuss. The following details are given to you. Raw material consumed 2,40,000, factory overheads 3/4 of direct wages, quality control 20% of factory cost, cost of production 7,50,000, amount of direct wages will be. We could have done this when I've done the regular discussion, but I don't want to get into that. I will keep doing all MCQ so that you're able to revise the entire cost sheet in a faster manner. So here, what is the requirement of the question? Direct wages. Direct wages is asked. I've been given certain data points. Let's keep writing them. Direct wages will automatically come. Particulars and amount. Particulars and amount. Particulars and amount. What's the first data there in the question? Direct material. It will be little faster only. You will have to pick up speed. Direct material, how much? 2,40,000. No. Direct labor, which we are required to find out. Which is X. Direct labor is X. Prime cost 2,40,000 plus X. Prime cost is 2,40,000 plus X. Factory overheads. What is the factory overheads? 0.75x. 0.75x. GWC, NWC. Gross works cost or net works cost. 2,40,000 plus what? 1.75x. 240 plus 1.75x. GWC slash NWC, 240 plus 1.75x. $2,40,000 plus 1.75x. Quality control 20% of factory 48,000 plus 0.35x. 48,000 plus 0.35. $48,000 plus 0.35. Cost of production. First add this 2,88,000 plus what? No. 2.1x. 2,88,000 plus 2.1x is equal to how much given in the question? 7,50,000. You will get an answer to x. 288 plus 2.1. You will get answer to x. 2 lakh So that takes care of this question. 2,20,000 is the direct wage. We have put it in the cost sheet format. Certain data points were missing in the question. We have just put it in the not the detailed cost sheet format. Just to quickly go through the concept, we have put it in the format. We have got the answer. Any doubts? Materials consumed 8 lakh, opening stock 2 lakh, closing stock 175, raw material purchased is asked. Nothing is there in the question. Nothing is there in the question. It's just a quick concept discussion. What is the formula we have? RM consumed is equal to what? No need to write. Do it in the calculator and tell me. Opening stock plus purchase minus closing stock. Opening stock plus purchase minus closing stock. 8 lakh, 2 lakh plus purchase minus 175. Minus 175. What's the purchase figure you get? 7 lakh 75,000. Any doubts on this? Clear? Third one, again, it's a calculator's work. Production cost is 80. Production cost for 1 unit of finished goods is 80. Direct material is 1/4 of the total cost. Direct material is 1/4 of the total cost. How much is direct material? 20. Balance 60 is labor and factory overhead. Balance 60 is labor and factory overhead. In that 60, direct labor is how much? 45% of the balance. 45% of the balance. So 45% of 60 is how much? 27, and factory overhead is balance 33. Balance 33. Any doubts on this? Clear? Next. A company has produced 40,000 units of product A and 1,20,000 units of product B. Direct wages for product B is 60% of those of product A. If you remember, this was equal to the normal pen and super pen example question. Normal pen and super pen example question. Here, I have been given production of A, production of B. Wage cost of B is how much? 60% of that of product A. Wage cost for B is 60%, means wage cost per unit. Wage cost per unit is 60%. Per unit is 60%. Now write 40,000 units into plus 1,20,000 units into 40,000 units into 1,20,000 units into 40,000 into and 1,20,000 into. Question says wages for product B is what? 60% of that of product A. Wages means wages per unit. Wages per unit. So this is A and this is what? 0.6 A. Total this 40,000 A. Total equal to 4,48,000 equal to 4,48,000. 1,12,000 is equal to 4,48,000. You get answer is what? 4 per unit. Any doubts on this? Any doubts on this? Clear? We saw this in one of the question. Wages for 8,000 units is equal to 1,20,000. 10% is rejected and sold. 10% is defective. Defective has been rectified at an expenditure of 20% of proportionate wages. I'll give you 2-3 minutes. Think and let me know the answer. Do it. Try it. Okay, 8,000 units is 1 lakh 20,000, which is 15 per unit. 15 per unit. 10% is rejected and sold as scrap. So in 8,000, 10% get wasted. I'm left with what? 7,200. In that 10% is defective, which is 720, and cost for that is 20% of 15 rupees. 20% of 15 rupees. 20% of proportionate direct wages. 20% of 15, which is 720 into what? 3 2160. 2160 is my rectification cost. Clear? Any doubts on this? Next, company incurs semi-variable cost of 5 lakh per annum at 50% capacity. It will incur 1 lakh for every 15% increase in capacity or thereof. That is my semi-variable cost will keep changing with the capacity. It will keep changing with the capacity. In this situation, we used to prepare a table. What is the table? 0 to 50%. What is the cost? 5 lakh. What is the next band? 51 to 65. How much? 6 lakh. 66 to 80. 7 lakh. 81 to 95. 8 lakh. 95 to 110. Technically, I can go even to 110. So the answer is 8 lakh, but I have to calculate for how much? 3 months. I have to calculate only for 3 months. So 8 lakh into 3 by 12. 8 lakh into 3 by 12. This is how semi-variable cost works. 2 lakhs. Now, leather sheet and cotton cloth are the main input. Estimated requirement per bag is 2 meters. 1 meter of cotton cloth. How many bags have been manufactured? You know this. Please tell me the answer. Calculate and tell me the answer. No major calculation here. What formula will work? Answer is 1000. What is the formula? Raw material consumed is equal to production into input by output. Production into input by output. You can take either leather sheet or cotton cloth. Leather sheet is 2000 is equal to production into 2 by 1. Production into 2 by 1. I get 1000 bags as the answer. I get 1000 bags as the answer. Next, in one more question, production was calculated like this. Opening stock is 10,000. I purchase how much? 1 lakh. So it becomes 1 lakh 10,000. Closing stock is 20,000. So leftover is 90. Raw material is scrapped how much? 5,000. So leftover is 85,000. Opening WIP is 2. 85 plus 2, 87. Closing is 4. 87 minus 4 is 83,000. 87 minus 4 is 83,000. Next, a company has a manufacturing capacity of 60,000 per annum. 60,000 per annum means 5,000 per month. For the first 3 months, I'll operate at what capacity? 40% means I'll produce only 2,000 units per month. I'll produce only 2,000 units per month. And for balance 9 months, I'll operate at what? 80% capacity. Labor cost per unit is 5 and minimum expenditure is how much? 12,500 per month. So, first 3 months, I'll operate at 2,000 per month. First 3 months is 2,000 per month. Next 9 months is how much? 80% is how many units? 4,000 per month. 2,000 per month means 2,000 into 5 is how much? 10,000. But I have to pay minimum how much? 12,500. I have to pay minimum 12,500. First 3 months, 3 into 12,500. And last 9 months, 4,000 units into 5. 4,000 units into 5. No minimum condition because you are above the minimum. You are the above the minimum level. 3 into 12,500 and 20,000 into 9. 20,000 into 9. All put together is 217,500. Here we have a minimum condition. We have a minimum condition in this question. So you will have to opt for that minimum condition. What is minimum condition? Whichever is higher. 12,500 is the minimum payment I have to make for my workers. If it's lesser than that, you will have to pay the minimum amount. You will have to pay the minimum amount. Any doubts on this? Think about it and give me the answer to this. It's a small calculation. Start doing, please. Get me the answer to this. Direct material is X, direct labor is half of X, half of X. You will get answer to X, which is direct material, which is 62 lakh. Direct labor is half of that, which is 31 lakh, which is 31 lakh. Any doubts on this? Clear? Next, again a question on deciding the production number, because lot of cost sheet question, getting the production units will be very critical. Many a times we make a mistake there. I have a target production of how much? 1 lakh. In this defective, how much? Defective means you are not going to do anything with that. It is gone out. Leftover is 96,000. In that 96,000, closing stock is how much? 5,000. No opening stock. So unit sold is 91,000. Unit sold is 91,000. Get me the answer to this. There isn't anything tricky there. No calculation. It's just a calculator's job. Nothing to write. Nothing for you to write. 1 lakh. You have to consider this and not this. Material consumed is opening stock plus purchase minus closing stock. 67,500 plus 45 plus 15. That's all. 67,500 plus 45 plus 15. So this was first segment of the discussion, where major focus was that units calculation. Then I do this coming to the second segment, which is valuation of stock. Valuation of stock. We have two methods of valuation. What are the two methods? Participate. FIFO method, weighted average cost. FIFO method, earlier lot is sold first and then the later lot is sold. This is used in case closing stock does not have opening stock units, or the entire opening stock is fully sold. They may give different name, or closing stock comes from the current year production. Closing stock comes from the current year production. Weighted average is used if closing stock includes unknown units of opening stock, or the question tells you that way. If problem is silent, assumption is critical. In case a question does not have opening stock, my headache is over. I need not worry about it. No opening stock, ignore it, and then you keep proceeding with your calculation. FIFO or weighted average does not matter. FIFO method says cost of production divided by units produced into closing stock units. The other method says cost of production plus opening stock units plus opening stock units plus opening stock units into what? Closing stock units. Under weighted average, I am taking a weighted average of the last year cost and the current year cost. Last year cost and the current year cost. I am taking a weighted average of that. I am taking a weighted average of the last year cost and the current year cost and doing this calculation. Clear? Any doubts on this? So FIFO method, closing stock does not include any units from opening stock. Entire closing stock is from current year production. Get me quickly the answer under FIFO and weighted average. Quickly write in your notebook. FIFO weighted average. Quickly write the answer FIFO and weighted average. I'll anyway then explain it. Yes, last line. Last. P4 method answer is 40 lakh divided by 10,000 into 5,000. Answer is 20 lakh. Weighted average 40 lakh plus 5 lakh. 40 lakh plus 5 lakh divided by 10,000 plus 1,000 into 5,000 into 5,000. Any doubts on this? Do it. Do it. Keep doing the example given below. S- Same formula, but you will need some data point. What is the missing information? Units produced, which is sales plus closing stock is equal to opening stock plus production. Opening stock plus production. Credit side is equal to debit side. Sales plus closing stock is equal to opening stock plus production. What is the sales number? 22,000. Closing stock 5,000. Opening stock. Production balancing figure 25,000. 10 lakh divided by 25,000 into 5,000. Answer is 2 lakhs. Get me the answer to this. P4 method was very simple. 16,000 into 22 divided by 16,000 into 2,000. Answer is 44,000. Weighted average is 16 into 22 plus what? 4 into 20 whole divided by into 2. Into 2, what's the answer? 43, 200. Any doubts on this? Sales is 10 lakh. GP margin is 25%. GP is 25% means COGS is 75%. COGS is 75%. What is the formula for cost of goods available for sale? Other formula. Closing stock plus COGS, and that will give me the closing stock figure. That will give me the closing stock figure. Cost of goods available for sale is equal to closing stock plus COGS. COGS is 7 lakh 50. Closing stock balancing figure 50,000. Balancing figure 50,000. You will have to keep using the interlinkages. Interlinkages very critical. Unless you use that properly, you will keep struggling. So the interlinkage is very critical. Get me the answer to this. You should be in a position to tell me the answer. Speed is very, very critical. By this time, I need the answer. 230 plus 30 divided by 10 plus 3. Closing stock units is not directly given. Sales plus closing stock is equal to opening stock plus production. Closing stock is how many units? Participate, guys. 5,000 units, and answer is 1 lakh. Scrap of material versus scrap arising out of manufacturing process. We have seen this adjustment in few questions. If the question says scrap, listen, if the question says scrap of production, scrap arising out of manufacturing process, scrap of wastage, all these words is separate line item. But if question says scrap of raw material, raw material yielding scrap, all those words will indicate it will be deducted where? In the direct material. Any scrap arising out of manufacturing is considered as a separate item in cost sheet, but certain exception is sale scrap of material, scrap of raw material, scrap of material or scrap of raw material, or raw material yielding so much scrap, or raw material yielding so much scrap. All this will be deducted directly in the material cost. GST is something which we pay on purchase of material or certain expenses we may pay it. If you have input tax credit, it is not a expense, and if ITC is not there, it will become part of the expenses. It can be direct material if you are buying something. It can be administration overhead if you are paying telephone expenses for administration office. It can be a selling and distribution overhead if you are paying for your sales office some expense on which GST is charged. Wherever ITC is not available, it can go under any of the category. There was one question under some reverse charge mechanism where we were taking it as part of some selling and distribution or somewhere, I don't remember, but in that category we had put it, administration overhead or wherever. So depending on where the category will go, we'll have to classify the cost. Variable versus fixed cost, very critical explanation. Any change in variable cost means a change in variable cost per unit. Any change in fixed cost means a change in total fixed cost. By rule, direct material, direct labor, direct expense, selling overheads are variable. Administration overhead is fixed. Factory overheads is assumption. You can make a choice and then proceed ahead. Now example, factory overhead 40% fixed. They have mentioned how much is fixed here. So 40% is fixed means 4 lakh fixed, 6 lakh variable. Fixed factory overhead increased by 10%, variable factory overhead increased by 15%. Any change in fixed overhead means a change in what? Total fixed overhead. So 4 lakh plus another 10%, 4 lakh 40,000. 4 lakh plus 10%, 4 lakh 40. 6 lakh divided by 100 units. Assumption last year 100. Assumption last year 100. How much per unit? 6,000. Add 15% on this. 6,900, and now multiply with 160 units. 60% increase in volume. 11 lakh 4,000 put together is 15 lakh 44,000. Put together is 15 lakh 44,000. Very simple kind of a calculation only, but extremely critical. All these are extremely critical adjustment. My profit margin can be given on sales, can be given on cost. If it's on sales, sales is 100, profit is 20, cost is 80. Cost is 80. If it's on cost, cost is 100, profit is 20, sales is 120. Sales is 120, and then equate and then keep getting the answer. So you can have any situation. For example, cost is 8 lakh, profit is 40% on sales. Sales is 100, profit is 40 on sales, cost is 60. 60 equal to 8 lakh, what is 100? 60 equal to 8 lakh, what is 100? Other way around. Sales is 10 lakh, profit is on cost. If it's on cost, take cost as 100, add profit which is 24, and total is 124. Total is 124, and then keep getting to the answer. Any doubts on this? Certain special items are ambiguous items in classification. This is just to quickly close them. Royalty, I don't see any confusion. Every problem will take it as direct expense. Power and fuel, few question I'll take direct expense, few question I'll take factory overhead. I say in one of the exam question wrote a note also saying that you can do either ways. You can do either ways. Molds and patterns, if it's related to manufacturing, which is normally, we'll take it as direct expense. Job charges is basically amount which I pay on outsourced work. So whenever somebody else is doing work for me, I have to pay him job work charges. I'll have to pay him job work charges, which is a direct expense. Raw material for vehicle used by director. Director will mostly be in the factory. Will be mostly in the administration. So administrative overhead. Insurance premium for stock of raw material is factory overhead. Raw material in transit is direct material. Raw material in transit is direct material. Salary to production control manager. His job is to administer the entire factory. So AOH relating to production. AOH relating to production. Lease rent of production asset. Technically your choice, because lease rent and hire charges both are same. Term meaning is same. In one place I said factory overheads, in another place they have said direct expense. This is slightly a tricky kind of a situation. In exam it comes, write a note and then proceed ahead. Special drawing is something specific to the project. We take it as direct expense. Carriage on return. Inward, incidental expense. Outward, you have selling and distribution, but in return means you're returning the raw material. I do not have any category on this, so it goes under factory overhead. It goes to factory overhead. Participation in industrial exhibition, mostly for the purpose of selling products, selling and distribution. Warehousing for storing finished product, selling and distribution. For storing raw material, it will go as factory overhead. It will go as factory, or it cannot go as direct material, because all expense incurred after it reaches the factory is part of only factory overhead. It cannot be part of direct material. Utility is direct expense. Administration overhead can be treated as administrative overhead relating to production, or it can be treated as general and administrative overhead. It's an assumption only. What I say is, if it's given in rupees, take it as general and administrative overhead. If it's given as a percentage of some item which is before your cost of production, take it as administrative overhead relating to production. Otherwise take it as general and admin overhead. Administrative overhead. This is again an assumption only, but this assumption will make sure our answer matches with the ICI answer. And the last part was, there were certain abnormal items, fines, penalties, demurrage. All this is ignored in costing. I'm not going to consider any of the abnormal items in the calculation. And if you get any subsidy, grant, incentive, this will be deducted from the appropriate expense. Any doubts on this? This revises my entire stuff, what I have to revise on the concept book, from the concept book. Give me 2 minutes. I'm not going to solve the questions, but whenever you are going to revise it, if you see the video, you will understand the crux which I want to explain. Question 1, 0 adjustment, nothing is there. Just for practice you are doing. I'm not going to tell you what is question 1. I'm not going to explain any of them. I just want to tell what I want to tell about the question, so that whenever you revise, you just hear this 5 minutes, you'll understand what is there in the 18 questions which are there. 18, 19 questions are there in cost sheet. Question 1, nothing is there. Question 2, again nothing is there in the problem. It's more of a formality kind of a question, where some basic data is given. You analyze it and then close it. Question 3 has little bit of adjustment on inventory valuation. So whenever you revise, at least check the inventory valuation part in question 3. How is the closing FG has been valued in the question? How it is valued is, you have a closing FG of, opening FG of 1217. You need not go open the book and all, you will not understand anything, because unless you remember the question, you will not understand anything. So I will quickly explain it. My understandings, you have already seen all of this. With that understanding, I'm explaining it to you. So whenever you revise, first thing you will do is you go through all the question and then quickly see this video to understand what I wanted you to go through. So 1217 is opening stock. Production is 14,000. Closing stock is 14,153. Sorry, sales is 14,153. This will give me closing stock units, and I can follow FIFO method or weighted average cost method. Question 4, nothing is there. Question 5, no special adjustments. Question 6 is a rework question. Two good adjustment. One is what is gross margin, which I have already seen in one MCQ which I did. And second is what is cost of goods available for sale. These two adjustments are good to see for you to get more clarity. Anyway, I've seen that in the MCQ. I've seen that in MCQ some time back. I've explained that in one multiple choice question. Question 7, again nothing much is there. Question 8, the only adjustment when you read the entire question, they would not have given how many units have been sold by the company. The number of units is not given in the question, which is indirectly said as 500 per unit is selling expense and total selling expenses 2,50,000. Total selling expenses 2,50,000 and they've given selling expense per unit, and this will give you the number of units. This will give you the number of units. Balance is more of a formality for you to take it forward. In this question, there are 2-3 adjustments. One is how do you calculate direct employee cost? I did one example where I said direct material is so much, employee is 50% of it, x 0.5x, and you gave me an answer. That adjustment is this. That adjustment is being discussed in this question. Second adjustment which you discuss in this question is defective manufacturing. Defective output. I said one example saying that 1 lakh, there's a defective unit, there's a closing stock given in the question, and the gap is what you sell. The gap is what you sell. So 1 lakh minus the defective units minus the closing stock will give you the unit sold. Will give you the unit sold. Apart from that, it's more of a formality for you to take it forward. Question 10, very good problem to understand. Change in fixed cost means change in total fixed cost, and change in variable cost means change in variable cost per unit. Change in variable cost per unit. Question 11, lot of ambiguous items are there. All those ambiguous items I've already discussed when I've explained in the concept book. When in the concept book I've discussed all those ambiguous items. Technically nothing for you to see in this question. Nothing much in this question. Question 12, nothing special is there. Only thing is your works cost will keep changing based on the production. So the works cost per unit will be different for 30% capacity, will be different for 100% capacity. Works cost, and then you consider all the items and then calculate the profit or loss. Okay, very good problem 13. 2-3 unique adjustment. One is how do you calculate semi-variable cost? How do you calculate semi-variable cost? I did that question, no, MCQ 0 to 50, 51 to 65, 65 to 70, 71 to 85, something like that. Same thing you will have to do it here for the semi-variable cost and do the calculation. And second adjustment is on the labor cost. Minimum 48,000 per month. I had an example of minimum 12,500 in the MCQ. So that is also discussed here. That adjustment is also discussed as part of this example. 14, nothing much is there, similar to 13. In this 15, only one thing which you understand is how do you calculate the number of units raw material consumed is equal to production into input by output. That cotton cloth example which I had, you will get the number of bags. You will get the number of bags, and after that it's the same calculation. After that it's going to be a formality for you to do. In this question, nothing much is there. 16, nothing much is there. 17, this is a question where we have disproportionate use of resources. What is disproportionate use of resources? We have two products, super pen, normal pen. The cost of raw material for super pen and normal pen is not going to be same. So one you will take as X, another one you may take 0.5x, 2x, 1.5x, 3x, and then do the calculation. We have seen that in one MCQ example. In this question, administrative overhead was taken as administrative overhead relating to production, because it was related to direct labor. I told you to take it as administrative overhead relating to production and not general and administrative overhead. This is what I had explained in that one of the concept which was there. In this, nothing much is there. One item you may want to see it, which is more of your indirect tax adjustment. That is how this GST part is calculated under reverse charge mechanism. Under the reverse charge mechanism, how the GST was calculated may be something for you to see. GST will be applicable on hiring charges as well as the reimbursement of diesel cost. You will have to consider on both. And they wanted earnings per man shift. Earnings per man shift is labor cost divided by number of man shift. Output per man shift is number of units produced divided by number of man shift. 19, no major adjustment. Only thing is calculating the number of units, where you will have to track opening stock, purchase, less closing stock, less scrap, or add opening WIP, less closing WIP, and get the number of units, which I had shown in one of the MCQ example. In one multiple choice question, I had shown you this example. So calculating, that is the only tricky part. Otherwise, certain ambiguous items could be there in the question, but doesn't really matter. Most of it is already discussed. Calculating number of units is the tricky part. Number of units is the tricky part. 20, nothing much is there. 21, I don't see any major adjustment in 21. 22, again no major adjustment. The only thing is inventory valuation. Good problem on inventory valuation, because there is some opening stock of finished goods is there. I have to follow FIFO method for doing the inventory valuation. Otherwise, most of the numbers are readily available. Most of the numbers are readily available. You will have to put it in the format and do the inventory valuation. Do the inventory valuation. 23, yeah, good problem on one adjustment, which is how do you calculate this 20% of proportionate direct wages, rectification cost. How do you calculate the rectification cost on those defective units which have been manufactured by the company? Nothing for me to explain. I've already told you when I did that MCQ example. So rectification cost calculation is good. And other ambiguous item like carriage on return, participation in industrial exhibition, all that is already written as part of my ambiguous items. Only part which you may have to understand is how was this calculated, this item on proportionate direct wages or rectification cost. Okay, nothing much is there in this question. 24 is straightforward, simple question. 25, okay, there is something called as scrap, which is fetching you 45 per unit. 10% of the production have been scrapped as bad and fetches you 45 per unit. So in this question, I will have to first understand how many units have been produced by the company. How many units have been produced by the company? What is produced? Good units is 12,600. Bad units will be 10%. Bad units, good is 90, bad is 10. Total units get, based on the total units, calculate material cost, calculate all other item, and then subtract credit for recoveries and scrap. The most important item for me is just calculating this 14,000 and doing material cost. Doing the material cost. With this, I've done all concepts. We have done all problems also. Obviously, you may have to solve it. So at any stage when you're going to revise this chapter, if you just go through this with full attention, you will get full grip, and then you can start solving whichever question you want to. Clear? I'll need some rest. I'll take a break of 10 minutes and then we go back to materials chapter. We'll take a break of 10 minutes and then we resume back. Okay, we'll do revision of introduction chapter. In introduction chapter, it's predominantly theory based area, but few practical concepts were there. My focus is discussing those practical concepts. First concept I had discussed was classification of cost on the basis of variability or behavior. We had three categories of cost: fixed cost, variable cost, semi-variable cost. Fixed cost by nature is expected to remain constant at overall level, so that fixed cost per unit will keep going down, as you increase the volume. It will keep going down as you increase the volume. So fixed cost per unit is inversely proportional with volume. Total fixed cost is constant. Variable cost is something which what changes. It is something which is going to change with the change in production. As number of units go up, total variable cost will go up. Number of units go down, total variable cost will go down. Variable cost per unit remains, I want participation guys, variable cost per unit remains constant. Total variable cost is directly proportional with volume. Semi variable cost does not remain constant at per unit level, also does not remain constant at overall level, because it has a fixed element as well as a variable element. So by nature, total fixed cost remains constant. If question says any change in fixed cost, it means total fixed cost is changing, because what can change is only something which is to be constant. So if question says there's a change in fixed cost, it means a change in what? Total fixed cost. And if a question says there's a change in variable cost, it means a change in variable cost per unit, because per unit is remaining constant. Per unit is remaining constant. Any change in fixed cost would mean change in total fixed cost, and any change in variable cost would mean change in variable cost per unit. Cost for 10,000 units is 1 lakh. Production for next year is how much? 15,000. There's an increase in fixed cost and there is an increase in variable cost. I cannot directly do anything on 1 lakh. I'll have to split this 1 lakh into what? Fixed and variable. In fixed, give me the overall number. In variable, I need the per unit number. In fixed, I want the overall number, and in variable, what? I want the per unit number. Of the 1 lakh, how much is fixed? 60,000. How much is variable? 40,000 is of no use. Or how many units in the last year? 4 per unit. It is 4 per unit. This 60,000 will go up by how much? 5% will become 63,000. 40,000 will not go up. 4 will go up. 4 will go up by how much? 10%. It will become what? 4.4. How many units? 15,000. So 4.4 into 15,000. Put together 1,29,000. Put together it's 1,29,000. Again, I'm repeating, very powerful and most important concept. Till now, you would have seen me using it in many questions, and you will keep seeing this used at multiple places. A taxi provider charges minimum 80, thereafter 12 per kilometer of distance travel. What is the behavior of this? Semi-variable, and this is what practically happens for you. If you ask 1 kilometer, he'll say 50 rupees. If you say 2 kilometer, he'll not make it 100. He will say 80 or 90, something like that. So there is a fixed component, there is always a variable component. How do I split semi-variable into fixed? Is change in total cost divided by change in units. Change in units. This will give me variable cost per unit. Substitute that in the formula, you will get total fixed cost. This formula will work only if there is no change in the cost given in the question. When I say no change, there is one problem where they said fixed cost is going down. If it's going down, then you have to form two equations and solve the equations to get to the answer. You cannot directly apply the formula and say change in cost by change in units, because change in cost by change in units can work only if there is no change happening in VC per unit and total fixed cost. VC per unit should not change, total fixed cost should not change. If it's changing, then I'll form an equation called number of units into A is the variable cost per unit, plus B is the fixed cost, is equal to so much. Next year, number of units into, it could be A, it could be 0.8A, 0.9A, 1.1A, 1.2A, because the question can say there's a change in variable cost. The question can also say there's a change in fixed cost. You'll form two equations, solve them, and then get to know what is A and B. I can do that A and B equation forming even for a normal problem also, but I find it easy to do it in the formula. We find it easy to do it in the formula. Cost for 10,000 units is 1,10,000 per unit, 15,000 128 per unit. Overall cost is not remaining same, per unit cost is not remaining same. So this is what? Semi-variable cost. Overall cost is not remaining same, per unit cost is not remaining same. This is semi-variable cost. We apply a formula, change in cost. What is the change in cost? 20,000. What is the change in units? 5,000. So how much is the variable? 4. In this 10,000, 10,000 into 4 is variable. 10,000 into 4 is variable. Balance fixed is how much? 60,000 for 18,000 units. 60,000 plus 18,000 into 4. 60,000 plus 18,000 into 4. You get 1,32,000. You get 1,32,000. Any doubts on this? Like we have change in cost by change in units, you can do change in cost by change in sales also. Change in sales. If you do change in sales, you will get to know what is called variable cost ratio. Variable cost ratio. What is variable cost ratio? Variable cost as a percentage of sales. Variable cost as a percentage of sales. Example, 1 lakh is the total cost when volume is what? 1 lakh 50 sales, and it is 60,000 when it is 70,000. What I do? Change in cost divided by change in units. You want, you can do units also. How can you do units? Assume 10 rupees is the selling price. If 10 rupees is the selling price, units is what? 15,000, 7,000. This will also give you variable cost. This can also give you variable cost, or easy ways to do what? Change in sales. Change in sales. If I do 15,000 and 7,000, for your understanding, you will get 40,000 divided by 8,000 units. Variable cost is 5 rupees per unit, which is 50% of 10 rupees, which is 50% of 10 rupees. I assumed the selling price to be 10. You can assume any number. Anyway, this formula you will learn when I go to marginal costing. In marginal costing, we are doing this formula. Marginal costing says variable cost ratio is equal to change in cost by change in sales. Apply this in one of the sales volume, you will get the variable cost, balance is fixed. For example, in this 1 lakh 50, 50% is variable, which is, guys, participate please, 75,000. Balance fixed is 25,000. Balance fixed is 25,000. Get me answer to this. Start doing it. Please start doing it. Semi-variable expenses 3,000. In this, degree of variability is what? 70%, which means variable is fixed is remains same. This will go up by 20% because volume is going up by 20%. So 2520 plus 900. 2520 plus 900. 3420. Give me answer to this. Please do calculation, do the computation. How much? Variable cost per unit is how much? First tell me. 20. 10,000 divided by 500. So in this 1,000 into 20 is variable. Balance fixed is 30,000. Balance fixed is 30,000. This is where I was talking about that if fixed overage change or VC per unit change, you will have to form an equation. You will have to form an equation. A manufacturer produces 2 lakh units at a cost of 4.5 per unit. Later he produces 3 lakh 50 at a cost of 4.2 per unit. When its fixed overheads have decreased by 30%. What is the marginal cost and originally planned fixed overhead? Originally planned fixed overhead. How I do this is, last year how many units? 2 lakh x plus y is equal to 9 lakh. What is 2 lakh x? 2 lakh into variable cost per unit plus the fixed cost is equal to 9 lakh plus the fixed cost is equal to 9 lakh. Next year how many units? 3 lakh 50,000 into the same X, because there's no change in variable cost. There's no change in variable cost. Fixed overheads, what has happened? 0.7y is equal to 3 lakh 50 into 4.2 is how much? 14 lakh. I'm not doing the solving part at all. If I solve, I'll get answer to this. So I'll multiply the first equation with 0.7, 0.7, 0.7 will get cancelled, and I'll get to my answer. Any doubts on this? Any doubts on this part? Clear? Can you proceed? Now, next is types of responsibility center. First, responsibility center is basically some department head who has been given responsibility of that department with certain focus. What is the focus? I can tell him to control cost. He is called as a cost center. If you're going to control cost, you are called as what? Cost center. I can also tell you to increase revenues. You are a revenue center. If you're going to increase revenues, you are a revenue center. You have to focus on both cost and revenue. You are a profit center. And along with this, you are also can make investments. You can also make investments. Then you are technically called as investment center. In cost center, we have two types of cost center. Standard cost center, where I can measure my output in proper financial terms. Example, I have a steady input output ratio of production compared with input. And there is a discretionary cost center where results cannot be measured. Example, advertising. If you do advertising, I don't know what results have come out of it. It is difficult for me to exactly measure. So I have a standard cost center and I have a discretionary cost center. So responsibility centers are basically those department or functions who have been given specific duty, authority or accountability. Why did I give this? Mukesh Ambani cannot manage everything. He has to give work to the other set of people. So he can give responsibility only for controlling cost, or for earning revenues, or for both, and doing investments. Both and doing investments. Clear? Any doubts on this? Any doubts on this? Let's see example. Decentralized branch of an organization is. Participate. Ideally should be a profit center, because these branches will not be given approval to do investments. Investments will be from the top end. Mostly should be a profit center. Maharatna is an example of. It is a government PSU where government does not intervene. Government does not intervene. Government says you do investment, you do whatever you want to do. It is a investment center. Which type of cost center is associated with production of goods or service and subject to predefined performance standard? Predefined input output ratios, standard cost center, where you cannot measure it. It is called discretionary cost center. There's nothing like a revenue cost center or investment cost center. It's only standard cost center or discretionary cost center. So you are responsible for the invested capital, also earning return on that. So it is called investment center. Investment center. Read this example first fully. The same example will keep continuing. Read it first fully. Okay, H Holding Limited has 5 subsidiary companies spread over 5 states in India. All subsidiaries are further divided into units which manufacture goods. Only the H Holding Limiteds have the power to make decision on capex. Only the parent company can make. The subsidiary company have the liberty to fix prices. Manufacturing units plan for material procurement and production. Subsidiary has R&D, publicity, all that. What type of responsibility the subsidiaries are? Profit center, because they cannot do investment on their own. They cannot do investment on their own. What type of responsibility center the H Holding Limited is? Because he can take care of everything. He can take care of everything. What is for CSR? Discretionary cost center, because CSR you cannot measure the output. You cannot measure the output. They don't earn any revenue. It's a cost center, but I cannot measure. I cannot measure the output. Manufacturing units. It's a cost center, and if I want to make it more clearer, it is a standard cost center. They have not given that, but it's a standard cost center because you can measure the output. You can measure the output and proper input output ratios are there. Research and development. Discretionary because output cannot be measured. Output cannot be measured. Publicity and advertisement. Discretionary. A Limited has 3 production department and each department has 2 machine. Which of the following cannot be treated as a cost center for cost allocation? What is cost allocation? Is distributing the cost. When I'm distributing the cost, I can distribute to machines, I can distribute to production department, I can distribute to production department, but I cannot distribute to A Limited. A Limited is the major. From there only I'm distributing. So A Limited cannot be a cost center for the purpose of distribution. Within A Limited, anything for Bharadwaj Institute, CA Inter can be a cost center, CA Final can be a cost center, but Bharadwaj Institute cannot be a cost center because the cost of Bharadwaj Institute only has to be split among the various departments. Ticket counter in a railway station, revenue center. Purchase of bonds, stocks or real estate property should be an investment center. Ticket counter is revenue center. Decentralized branches, profit center. Maharatna, Navratna, sales department, revenue center. Next is cost driver. What is a cost driver? A cost driver is a factor which influences the cost to take place. Which influences the cost to take place. Our electricity cost is driven by the number of units we consume. Is driven by the number of units we consume. Number of units is driven by the number of light points there. Number of light points there. Number of light points is driven by the area which is there. Is driven by the area which is there. So you can have multiple level of drivers. You can have multiple level of drivers. Rent cost is driven by area square feet, but it also depends on the location where you are keeping. It also depends on the location where you are keeping. In a hotel industry, which is an appropriate cost driver for laundry services? Number of occupied rooms, because you will incur laundry service mostly only for occupied rooms. In a service industry, which could be a driver for customer support? Number of customer enquiry. Number of customer enquiry. Office rent, employee salary and all cannot be the driver. Number of customer enquiry. Next is cost unit. Cost unit is basically a product, service, time or a combination thereof which is ultimately passed on to the end customer, for which we typically determine the cost. Bharadwaj Institute will determine cost for CA Inter classes. They can also determine cost for costing classes or for FM classes. So wherever we are determining the cost, that is technically called as a cost unit. In transport, I have passenger kilometer or ton kilometer. We have multiple industries. All these are very critical. You can keep going through them whenever you do revision, but these are the different industries which are there. I'm not discussing it again, but it is basically a product, service or a combination thereof against which what we are going to determine the cost. Types of cost. There are multiple categories of cost. First is controllable and uncontrollable. What is controllable is some cost which I can bring it down, for Bharadwaj Institute. Rent is an uncontrollable cost. Rent is an uncontrollable cost. I cannot do anything now. Next year I may decide to reduce the rent and all, but today I cannot do anything. Whereas printing cost is a controllable cost for us. Printing cost is a controllable cost. We can reduce the amount of printing. We can increase the amount of printing. So controllable, uncontrollable. Normal cost means cost which is incurred under normal circumstances. No penalties, no fines, no demurrage. We saw all that in the materials chapter. I don't want any abnormal item to be there. Abnormal cost is cost which is in excess of normal. This will go to my costing P&L. Predetermined cost or standard cost is something which is determined well in advance so that I can do comparison at the end of the year. Before we started your batch, we would have determined the cost, that is called predetermined cost. Or standard cost. Marginal cost means cost incurred for additional output, technically variable cost. Estimated cost means again The predetermined cost are the standard cost which we estimated before the actual incurrence happened. Differential cost means the difference in cost between two levels of activity. Marginal means for 1 unit. Differential could be for 1 lakh units vis-a-vis 2 lakh units. Method 1 vis-a-vis method 2. Method 5 vis-a-vis method 6. Process 1 vis-a-vis process 2. So difference between two processes, difference between two methods, difference between two level of activity is called differential cost. Whereas your marginal cost is cost for only 1 unit, is extra 1 unit. Imputed or implicit cost is what? It is a notional cost which does not involve any outflow. Capitalized cost means I do not record this in my P&L, but I take it to my balance sheet, record it as fixed asset and charge depreciation. Product cost are those costs which are considered for inventory valuation in your cost sheet till COGS, till COP is called as product cost, till cost of production is called product cost. Period cost is cost which is after that, your general and administrative or selling and distribution, which is not considered for what? Inventory valuation. You charge it in that year itself. A product cost, what you do is you charge, if there is a closing stock left over, you carry it forward to the next year. Opportunity cost means cost of the foregone opportunity or cost of the next available opportunity. Out of pocket or explicit cost means cost which will involve outflow of money. Implicit or notional cost means cost which does not involve any cash outlay. Shutdown cost means those costs which will be incurred even when what? Plant is under shutdown. Even when the plant is under shutdown, you will incur these costs. Sunk cost means cost which is already incurred and has zero linkage on the decision making. For example, I am planning to introduce one more batch of CA Inter, let's assume. Rent is a sunk cost for us in that, because rent anyway we have already incurred it, or we are going to incur it, because whether I do this batch or I do one more batch, my rent does not change. But printing cost is not a sunk cost. Rent cost is what? A sunk cost. Absolute cost means cost which is expressed in totality rather than telling per unit or percentage. Cost which is expressed in totality. Discretionary means avoidable cost. Engineering is related to machinery, where you have a clear input and output relationship. Related to machinery. Let's go through each of the example. Go through the example and tell me the type of cost. Opportunity cost. Loss of interest on bank deposit is opportunity cost. The money which you withdrew and invested, that is called capitalized cost. Because it will be capitalized in my books of accounts. Imputed or implicit cost. They do not involve any cash outlay. Which of this production manager cannot control? Administrative salary. What can he do with administrative salary? He cannot do anything there. So it's an uncontrollable cost for him. It's at least an uncontrollable cost for the production manager. These are your product cost. Overhead in the production of goods is called factory overhead. Other overheads will go below, which is not considered for inventory valuation. Shutdown cost. I'm shutting down the factory but still incurring a cost. It's a slightly tricky one. It can be an out of pocket cost. It's not an out of pocket cost. It could be an imputed cost. I'll tell you what is an imputed cost is. Rent on own building. Is an imputed cost or an implicit cost. Because I'm using my own building, I want to charge a cost on that. cost on that. Engineer cost is specific relationship between input and output. Can be imputed cost. Let's see. Okay, they have taken engineered cost. They have taken engineered cost. I can also argue for an imputed cost. What is imputed cost? Is relationship cost of own building, rent on own building, interest on own capital, interest on own capital. I am paying this because I'm using this resource. I'm paying this because I'm using this resource. Difference between cost of two alternative. Differential cost. Difference between cost of two units is called marginal cost. One unit and second unit is marginal cost. Two different alternative is ideally what? Differential cost. Shutdown cost. Imputed cost, they do not involve any outlay. Interest paid on own capital, implicit or imputed cost. Withdrawing money for the purpose of expansion. Opportunity. Rent paid for the building which is temporarily closed. Shutdown. Cost associated with acquisition and conversion. Product cost or conversion cost. There are two technical names. Product cost. Then there are certain techniques of costing. What are the techniques of costing? Is something which is going to be useful for decision making. We have uniform costing. What is uniform costing? Is everyone in the industry follows the same method of costing. What is the utility of this? I can do better comparison. I can do better comparison. But only the issue is for uniform costing, everyone should agree to share data. Normally, data sharing will be very difficult in costing. Then marginal costing is a technique which distinguishes cost into variable and fixed for the purpose of decision making. Standard costing is comparison of your predetermined cost with the actual cost and finding out if any variances have happened. Marginal costing is one chapter for you. Standard costing is also one chapter for you. Historical costing means recording of cost after they have been incurred, and absorption costing means considering both variable and fixed for valuation of inventory. Absorption costing also you will learn in marginal costing. In that chapter you will learn it. Tell me answer to this. Absorption costing considers what? Both variable and fixed. This one. Only variable cost is considered for inventory valuation under which method? Marginal costing. More clarity will emerge later. Then there are methods of costing. I'll not discuss the MCQs of the method of costing because unless we complete all the methods, some clarity gap will keep coming in. But I'll discuss the method. One is job costing, which is used when work is done according to customer specification. According to customer specification. Example, interiors. Batch costing means work is done in batches of production, where every batch could be a unique product. Batch 1, 500 units of same product. Within the batch, it's identical. Outside the batch, it becomes unique. I have multiple designs for the toys. So batch 1, 500 units of design 1. Batch 2, 500 units of design 2. Like that, you will keep. Contract costing is something which is going to take more than 1 year to complete. Operating costing is for service industry. Operating costing is for service industry. Single costing or unit costing or output costing is used when my production is measured as number of units and it goes through single process. It goes through single process. Multiple processes process costing. Single raw material, multiple units is called joint and byproduct costing. Single raw material, multiple units is called joint and byproduct costing, and multiple costing is using combination of various techniques. Using combination of various techniques. Clear? Any doubts on this? Okay, we are kind of done with this. I'll take a break of only 5 minutes. Only 5 minutes break, and then I start with labor chapter. I'll give the intro to the labor chapter today. So let's just take a 5 minutes break. Okay, I'm going to start now with revision of your chapter 2, which is material cost. Revision of chapter 2, which is material cost. Focus would be to revise the entire chapter in around 1 hour or so, and then I move to the next chapter. So I'll revise chapter 2, which is material cost. We have already done the revision for your cost sheet chapter and introduction chapter. In material cost, we learnt basically, or what we are trying to find is, we are trying to ensure adequate material control. Adequate material control, nothing for you to see. Please refer the screen. and whenever I tell you to do calculations, do it. Otherwise, nothing much for you to be done. Material cost, basic objective is to have adequate material control. Material control is buying the right quantity, right quality, right price, right place, right time. In that right quantity is through EOQ method, right time when do you buy is through inventory levels, right price is doing some comparisons under each of the technique. Quality is something which I cannot decide through analysis here, that is more of a subjective call. Now coming to the first concept, we learned a concept called economic order quantity. EOQ is basically the best quantity to order. Whenever I place an order, what is the best quantity to order at that time is called economic order quantity. Theoretically, this is the level at which total of ordering cost, you can participate this, total of ordering cost, carrying cost and material cost is the lowest. Total of ordering cost, carrying cost and material cost is lowest. If you increase quantity per order, number of orders go down. If you increase quantity per order, number of orders go down, which will ultimately reduce what? Total ordering cost. But if you increase quantity per order, average inventory will go up, total carrying cost will go up. Objective is to somewhere balance these two. So EOQ is the best quantity to order. It is the level at which total of purchase cost, ordering cost and carrying cost is the lowest. The total of the three is the lowest. It is ordering cost is inversely proportional with quantity per order. If you increase quantity per order, number of orders will go down, total ordering cost will go down. Whereas total carrying cost is directly proportional. What is directly proportional? In case you increase the quantity per order, number of orders will, now average inventory will go up and this will lead to increase in total carrying cost. EOQ, square root of 2 into annual demand. Important is the word annual demand. I can even write monthly demand. If you write monthly demand, denominator should be per month. The consistency needs to be there. Basic simple calculation, 2 into annual demand of raw material. What is annual demand of raw material? What we are buying, what we are going to buy and not what we are going to consume. 2 into annual demand of raw material into ordering cost per order divided by carrying cost per unit per annum. In this calculation, ordering cost is basically the cost which I incur to place one order. Example, if you have to pay freight, for every order you place, that freight will form part of the ordering cost. If you incur some documentation cost, that will also form part of ordering cost. Any cost which you incur for every order is called as ordering cost. We have seen problems where freight was there. We have seen problem where documentation cost is there. We have seen problems where they specifically will mention ordering cost. Carrying cost is basically the cost incurred to store the raw material. Guys, please participate. To store the raw material, there are two types of carrying cost. One, which is a percentage of purchase price, and another category which is not a percentage. So some question will say carrying cost is 10%. We'll take it as 10% of purchase price. If I want, I can also say carrying cost is 10% and rupees 2. Take 10% of purchase price and add another 2 rupees. I can give both also I want. See, the carrying cost can be a percentage of purchase price. Example, interest and insurance. Interest and insurance is on the value of the goods. It can also be an absolute amount. Example, storage cost. When you store in a godown, it does not matter if it's a 1 lakh rupee product or a 10,000 rupee product. What matters is the weight. If more weight, more storage is needed. Less weight, less storage is needed. So my storage cost is a cost which is not dependent on the value, whereas interest cost is a cost which is dependent on value. So if they give you as a percentage, it can be a percentage of purchase price or it can be a non-percentage. So percentage given, percentage of purchase price, absolute amount given, take it as absolute amount, add them together. Now, one thing which is very clear is consistency is needed in the formula. Example, let's see this example. Annual demand 1 lakh packs. Ordering cost per order. Carrying cost per piece. I don't like per piece. Make everything per pack or make everything per piece. Make everything in pieces or everything in packs. If I convert this into pack, carrying cost is not 0.50. Carrying cost is 5 rupees. Carrying cost is 5 rupees. You can answer it in packs, you can answer it in pieces, that's your wish. Carrying cost is 5. If you do this, can you tell me the answer? 2 into 1 lakh into 100 divided by 5. What's the answer you get? 2000 pack. Assuming you solve the answer and you don't find 2000 pack in the answer, assume you don't find, you may find an answer called 20,000 pieces. You may find an answer called 20,000 pieces. I can give the answer in packs, I can give the answer in pieces. Assuming you solve the MCQ, you said 2000 pack. In the choice, I don't find the packs. That's okay. See whether you have pieces 20,000. Why 20,000? One pack is equal to 10 pieces. Any doubts on this? Quarterly consumption of raw material 2 lakh kgs. Quarterly consumption is 2 lakh. First, the word quarterly itself is a problem for me. Quarterly consumption is 2 lakh. 2 lakh should become what now? 8 lakh. Purchase price 100. Ordering cost 1200. Carrying cost per month. Per month. Carrying cost is given per month. Square root of 2 into in the calculator. 2 into what is the annual demand? 8 lakh. Ordering cost. Carrying cost 10% of purchase price is how much? 10 per month. Convert into year. Convert that into year, which is what? 120. Divide this. 4,000 units. Any doubts on this? Next. EOQ is 1000. EOQ is 1000. Purchase price is 100. Carrying cost is 8%. Ordering cost is 1000. How much is the annual demand? You have given left hand side. EOQ is given. Right hand side, there's a missing data. Right hand side, there is a missing data. I can solve either ways. So here, EOQ is given. 1000 is equal to what? Square root of 2 into annual demand into what's the ordering cost? 1000. Carrying cost 8% of what? Purchase price, not average inventory. It's 8% of purchase price. Whenever it's given a percentage, it's always a percentage of what? Purchase price. So which is what? 8. I'm taking square on both the sides. So this side becomes 10 lakh into 2000 annual demand divided by 8. 8 goes the other side. Divide by 2000. Tell me the annual demand. 4,000 units. Any doubts on this? Any doubts on this part? Next, how is the annual demand calculated? The annual demand calculation is not very simple. You cannot just randomly end up taking the data given in the question. First is they give annual demand of raw material. Excellent. Directly use it and close it. If they give annual demand of raw material, directly use it. If not, production into input by output. Production into input by output. If that is also not there, normal consumption. Normal consumption. When we did one problem in EOQ, you had mistakes there. Normal consumption multiplied with 52 weeks, 365 days or 12 months depending on what they give. Normal consumption per week, per month or per day into what? 52 weeks or 12 months or 365 days. Clear? Any doubts on this? 3 choices. First is they directly give raw material. Go ahead, do it. No need to do anything extra. If that is not possible, production into input by output. If that is also not possible, you go by normal consumption into normal. We have a max consumption, we have a min consumption. You saw that in inventory levels. You saw that in inventory level. Normal consumption into whatever weeks, 52 weeks, 365 days, whatever is the scenario, multiply and then get to the answer. Any doubts on this? Any doubts on this part? Then comes annual demand with stock data. If you give me stock data, debit side is equal to credit side. So I have opening stock plus production is equal to sales plus closing stock. Yeah, I had drawn a diagram where I start with sales. Based on sales, I get production. Based on production, we get raw material consumption. And based on consumption, we get raw material purchase. Purchase is what matters to me to do the EOQ calculation. Consumption is what matters to me to do inventory levels. I will need minimum consumption, maximum consumption. That is using consumption. And this is using what? Purchases. This is using purchases. So identify the annual sales. Based on the sales, sales plus closing stock is equal to opening stock plus production. This will give you the data on the production. This will give you the data on production. Production into input by output will give you raw material consumption. Consumption is equal to opening stock plus purchase minus closing stock. You will get the purchase, and this is used in EOQ. Purchase is what is used in EOQ formula. In my EOQ formula, I'm going to use purchases. Clear? Any doubts on this? Now, there can be a demand calculation where there are losses. I want to consume 1 lakh unit. but there are losses when I buy. So let's assume I buy 100 units. In transit there is a loss. In transit there is a loss which is 5%. I receive 95. I receive 95. When I put it into manufacturing, again further loss, which can be ideally a percentage of 95. One question we saw, it is a percentage of 100 also, whatever the question tells. Whatever the problem tells, consider that way. So I assume this loss 5% of 95. Let's assume it's 5% of 95, which is 4.75. I get. You got your consumption using all this calculation. Purchase is equal to 90.25 is equal to consumption, 100 is equal to purchase. 90.25 is equal to consumption, 100 is equal to purchase. Quantity to be purchased, question mark. Loss in transit, percentage of purchase. Loss in process, percentage of received. We saw one problem where both were on purchase. I assume I purchase 100. I have a loss of 10%. I receive 90. I have a further loss of 10%. I consume 81. 81 is equal to 72,000. 81 is equal to 72,000. What is 100? 81 is equal to 72,000. What is 100? Clear? Any doubts on this? Let's see this. A company produces a product which has a quarterly demand of 10,000. Which means annual demand is how much? 40,000. It needs 3 units of raw material. So 40,000 into 3 by 1, how much? And then they're saying I incur a loss in transit of how much? 10% on what? Purchase quantity. Loss in process, 10% on purchase quantity. So I buy 100, 10% loss, I get 90, again 10% loss, I get 80. 80 is equal to 120. 80 is equal to 120. 100 is equal to 1,50,000. 100 is equal to 1,50,000. As you go through this concepts with the example, whatever problems you have done, everything will get revised here. For practice, you can pick every chapter at least few questions so that you complete your preparation full-fledged. Next, a company manufactures a product from a raw material which is purchased at 60 per kg. Company incurs a handling cost of 360 and a freight of 390. What is this called? Ordering cost. Per order you incur this per order. Everything which is incurred per order will form part of what? Ordering cost. So this is how much? 750. Carrying cost is 0.50 per kg per month. So 0.50 into 12 months, 6 rupees. 0.50 into 12 months, 6 rupees. In addition, there's another carrying cost. Which is how much? 9 per kg per annum. So 6 plus 9 is 15. Annual production is how much? 1 lakh. 2.5 units are obtained from 1 kg. 1 lakh into input by output. 1 lakh into input by output. What is the purchase? So what is the raw material consumption? 1 lakh into 1 divided by 2.5. Guys, you cannot make mistakes here. 1 divided by input is 1, output is 2.5. Input by output, 40,000 in the calculator. 2 into 40,000 into 750 divided by 15 and take a square root. Clear? Any doubts on this? Next, sales of finished product 1 lakh unit. Sales of finished product is 1 lakh unit. Closing stock is 12,000, which is 20% more than the opening stock. Closing stock is 12,000, which is what? 20% more than opening stock. Can you tell me what is opening stock? 10,000. Sales, you know. Closing stock, you know. Opening stock, you know. Tell me the production. Sales is 1 lakh, closing stock 12,000, opening stock 10,000. 1 lakh. 1 lakh 2,000 into 2 by 1. Consumption is 2 lakh. Opening stock is 5,000. Closing stock is 10,000. Double. Opening stock is 5,000. Closing stock is 10,000. Can you tell me the purchase now? 2 lakh 9,000. What is the annual purchase? 2 lakh 9,000. Consumption per day 2 lakh 4,000. Consumption per day is 2 lakh 4,000 divided by 360. 2 lakh 4,000 divided by 360. That is the chain. Sales, production, consumption and purchase. Any doubts on this? Any doubts on this? Very simple question. Once you revise this, you can technically solve any type of question which we have discussed in the class. Any doubts on this? Next, how do I calculate my material cost? My material cost calculation goes through three areas and I have a format. I start with what? Annual demand. Participate. I start with annual demand. Second item, quantity per order, number of orders, ordering cost per order, total ordering cost, average inventory, carrying cost per unit per annum, total carrying cost, again annual demand, purchase price, material cost, and the total of the three, and the ordering cost plus carrying cost plus material cost. At EOQ, TOC should match TCC. Total ordering cost should match total carrying cost. Certain exception, one exception is buffer stock. If you have any buffer stock maintained in the company, which is called safety stock, my average inventory is quantity per order by 2 plus safety stock plus the safety stock. Ideal situation, I should go ahead with EOQ as the order quantity, but I may follow non-EOQ. If you follow non-EOQ, two things can happen. One, you can incur extra cost, that is called impact on profit, or there can be discounts because of which I'm avoiding it, because of which I'm shifting to a non-EOQ. Let's look at this. Annual demand is 8,000, purchase price is 20, carrying cost is 8%, ordering cost is 100. The company places quarterly order. The company places quarterly order to get what? Quantity discount of 5%. Now I want to calculate material plus ordering plus carrying. Coming to first material cost. Coming to material cost. What will be the purchase price post discount? Post discount, at what price you will get? Post discount 8,000 into 19. This is my material cost. 8,000 into 19. See, it's total of ordering cost, carrying cost, and material cost. If I want, I can put it in the detailed format also. I'll get the same answer. I want to quickly discuss. I'm discussing this way. Ordering cost. How many orders you will place? 4 orders. Why 4 orders? Quarterly ordering. 4 into what? 100. 4 into 100. 4 into 100. Any doubts on this? What is the quantity per order? What will be the quantity per order? Participate, guys, please. 2,000. 8,000 divided by 4 orders. Half of that is average inventory. Half of that is average inventory, which is 1,000. And carrying cost is 8% of 19, not 20. It's 8% of 19 into 1. I don't want to get into the answer and all. You can see it later. But this is the calculation. This is the calculation. Any doubts on this? Any doubts on this part? Next, frequency of ordering. What is frequency of ordering? Is how many times, or what is the gap between 2 orders? What is the gap between 2 orders? For calculating frequency of ordering, I first calculate how many orders in a year. How do I calculate how many orders? Annual demand divided by quantity per order, which we saw in the table format. Annual demand divided by quantity per order. Once you calculate number of orders, 365 divided by number of orders will give me frequency of ordering. 365 divided by number of orders will give me what? Frequency of ordering, are called time lag between 2 orders. Logic is very simple. How frequently are we going to place an order? Next is timing of next order. What is timing of next order? Is today I have 10,000 units. This 10,000 units is sufficient for 20 days. Is sufficient for 20 days. First, you'll have to find out the inventory which you have is sufficient for how many days. Once you identify that, after identifying that, then check what is the lead time for supply. What is the lead time for supply? How much time is the other person going to take to supply the product? If you have 20 days stock and lead time is 5 days, place an order in 15 days. Place an order in 15 days because your stock sufficient for another 20 days and lead time is 5 days. So 20 minus 5 is the order time. 20 minus 5. Monthly production 60,000. Monthly production 60,000. What is the annual production? 7,20,000. Use this and tell me what is the raw material consumption. 7,20,000 into what by what? 5 by 10. 3,60,000. How many days in a year? 3,60,000 divided by 360, so much? 1,000 per day. If you have 15,000 units, 15 days you have stock. 1,000 per day. 15,000 units means 15 days stock is there. 15 days stock is there. How much is the lead time? 10 days. I have 15 days stock. He will take 10 days to give me the material. In 5 days, I place an order. I get my material on after 10 days. On the 15th day, I get my material. Objective is when I reach zero stock, I should get my material. Any doubts on this? Clear? Monthly production 5,000. Monthly production is of no use. Always convert into annual. Always convert into annual. What's the annual? 60,000. Raw material consumption 5 is needed for 1 unit. EOQ is how much? 3 lakh divided by 250. 1200 orders. 1200 orders. See, every problem, if you do it like this, every example, it will take you a little more time. I've been telling you what needs to be done, but when you do it, evaluate this, the entire area of material chapter should get over in around 2 hours for you. If I do it in the class, I may try to do it in 1 hour, but even 2.5 hours if you spend, entire part will get revised. Along with that, 5-6 questions if you pick out of the 50 questions we have. If you pick around 6, maximum 10 questions, not beyond that, so that the day before exam, you can revise this chapter in around 2 hours. First time it will take 2 hours to do this concept book. Next time it will take you only 1 hour to do the concept book. How to compute EOQ when order for multiple products is placed together. I'm not going to solve the example, it will take away more time, but the concept alone I'll explain. When you place an order for 2 products together, annual demand is equal to annual demand of A plus annual demand of B. Annual demand is equal to annual demand of A plus annual demand of B. Ordering cost, no addition because single order is placed. Carrying cost is a percentage of weighted average purchase price. Weighted average purchase price. What is weighted average? 100 units of product A I will buy at 10 rupees. 500 units of product B I'll buy for 20 rupees. For 20 rupees, 100 into 10 is 1000. 500 into 20 is 10,000. Put together 11,000. Units is 600. Can you tell me 11,000 by 600 is how much? This is called weighted average price. This is called weighted average price. Product A into the price of A, product B into the price of B divided by product A plus product B. This is called weighted average purchase price. On this, apply the percentage. Or you can directly even do it on carrying cost also. You can directly do the carrying cost of A, you know, carrying cost of B, you know, multiply with the demand of A, demand of B, and take a weighted average. Take a weighted average. Once you do this, this is called EOQ for 2 products put together. Split that in the ratio of, split that in the ratio of A and B's demand. Split that in the ratio of A and B's demand. That will give you the EOQ of A and B. That will give you the EOQ of A and B. When you place an order together, when you place, we have done one problem on this. Ideally in revision, I don't want you to revise that problem because this concept, if you do, you should be in a position to handle that question if it comes in exam. So that is why from the 50 questions, you should ideally start eliminating the question which you don't want to see again. Start eliminating. That concept example is directly copy pasted here. You may see the same numbers there or similar numbers there. That concept is what is copy pasted here. If you understand the concept properly, no need to solve it again. Just solve the MCQ. Solving MCQ takes you 2 minutes. Solving that problem will take you around 15-20 minutes. So that is what end objective is. How do I revise? How do I revise? Again, I keep telling the same thing because earlier at least people were writing exams immediately. Now there's going to be a gap also for students. So unless you are able to revise costing in 2-3 hours every chapter, you will find it very difficult because otherwise same amount of time you'll have to spend again. Next is price break and EOQ. What is price break and EOQs? This refers to a situation where the price changes based on class interval of volume. As you change the volume, the price changes. 0 to 50, one price. 51 to 100, another price. 101 to 150, another price. 151 to 200, another price. For every class interval, calculate a tentative economic order quantity. Calculate a tentative economic order quantity because the carrying cost will be different for different class interval. First class interval, carrying cost will be 10% of 10,000. Second class interval, 10% of 9,500. Third class interval, 10% of 9,200. Fourth class interval, 10% of 9,000. Get a tentative answer. Let's assume you get a tentative answer of 60, 70, 80, 90. 60 falls in 0 to 100, that's my quantity. 60 falls in 0 to 100, that is my quantity. 70 does not fall in 101 to 200. Number closest is 101. Number closest is 101. 80 does not fall. Number closest is 201. 90 does not fall. Number closest is 301. What can happen is, some exam question, instead of telling you to do all this, they'll say I'll place 1 order, 2 order, 5 order, 10 order. If they give you 1, 2, 5, 10, write the number of orders. Quantity per order is balancing figure. Quantity per order is balancing figure. We did this in one question. Number of orders we wrote. Quantity per order is the balancing figure. For all of this, you will have to do those 12, 13 line items, starting from annual demand, quantity per order, EO, number of orders, ordering cost, all that you'll have to do. Select the one which has the lowest. Select the one which has the lowest. Instead of giving you the purchase price, I can also give you the discount. I can also give you the discount. If I give you the discount, subtract the discount. If I give you the discount, subtract the discount. Any doubts on this? Any doubts on this? Again, here I'm not given an example, which means it is good if you solve one problem on this. If there's an MCQ example available, I may not be in a position to put entirely here, so I would not have given an MCQ example. If relevant concept, good example is there, no need to see it again. No need to see those areas again. ABC analysis is an exercise in selective control. Objectives to classify the material into category A, most important, category B, moderately important, category C, least important, category A, high in value, low in quantity, category B, moderate in value, moderate in quantity, category C, low in value but high in quantity. Now this can be based on 70, 20, 10, 50, 30, 20, 60, 30, 10. I can follow whatever rule I want to follow. First thing you have to do is arrange in the descending order of value. Arrange in the descending order of value. So product, descending order of value, cumulative value, quantity, cumulative quantity, cumulative value as a percentage of total value, cumulative quantity as a percentage of total quantity till 70% category A, 70 to 90 category B, 90 to 100 category C, and we write a final summary. We write a final summary. This was one. Some question will say on the individual value, there is a problem which said if the individual value is more than 10% or 15% is category A, less than 5-6% is category C, and in between, in this case, no need to do cumulative value. Do the individual value as a percentage of total value. Individual value as a percentage of total value. So arrange the various items, cumulative value as percentage of cumulative quantity, predetermined rule 70, 20, 10, 60, 30, 10, 50, 30, 20. Problem silent, we follow 70, 20, 10 rule. Problem silent, we follow this. This is the format you follow. Go through this and tell me which is category A, B and C. Quickly see this and then tell me. Which is category A? Lowest in quantity, highest in value. Lowest in quantity, highest in value. Category B, product A, and category C is product B. Clear? Any doubts on this? Then we saw inventory levels. There are two major drivers of inventory levels. One is called consumption. Second is called lead time. Because if you consume more, you need more inventory. If lead time is more, you need again more inventory. One important rule, the lead time and consumption should be for the same unit of measure. We saw one problem where lead time was given in days, consumption is given in per hour. Convert everything into days or convert everything into hours. Let's take with the example itself. Maximum consumption per day, maximum lead time, minimum lead time, emergency lead time, and EOQ. These data has been given. If problem is silent, normal consumption is average of 150 and 100. Average of 150 and 100. If lead time is not given, average of 20 and 10. What is the use of this? Sometimes I'll give you max and normal, you get minimum. Sometimes I'll give min and max, you get average. Two major drivers, consumption and lead time. Consumption and lead time. Lead time is the time taken for supply. First is reorder level. Reorder level is the time when I should place an order, maximum consumption into maximum lead time. Logic is very simple. In the interim period, I'll consume maximum and it'll take maximum time, so I never go out of stock. I never go out of stock. So in this example, maximum consumption is 150, maximum lead time is 23,000. Next is reorder quantity. What quantity should I order that is equal to EOQ if problem is silent? Okay, I placed an order when I was at 3,000. What did I place? 4,000. This 4,000 can come to me in few days, but in this interim gap, I will consume something that is called maximum level. What is maximum level? Is reorder level minus what you consume in the interim period plus the reorder quantity. So maximum level is equal to ROL minus the lowest possible consumption minus, so 3000 minus 100 lowest possible consumption into the lowest time 10 plus ROQ plus the ROQ 3000 minus 1000 plus 4000, that will give you the maximum level. Minimum level is ROL minus normal consumption. In the interim gap you consume normal. Theoretically it can even go up higher also, but we take only normal and go ahead. Normal consumption into normal lead time. 3000 minus normal consumption is how much? 120. Normal lead time 15 minus 120 into 15. Average is max plus min by 2. Another formula is minimum level plus EOQ by 2. Both will give you different answer. Both will give you different answer. And danger level is emergency lead time. Emergency lead time into the normal consumption. Into the normal consumption. So here we got 3000. Maximum level is 6000. Minimum is 1200. Two different formula gives you two different answer. And emergency purchase. Lead time and consumption should be for the same time period. Should be for the same time period. Consumption per day can be multiplied only with lead time in days. If I ask you what is the lead time, you say 5 weeks. What is the consumption? You are saying 1000 per day. You cannot multiply them. You cannot multiply them because one is weekly, another one is in days. Either convert the weeks into days or days into weeks, and 1 week does not mean 7 days. 1 week could mean 5 working days. Depends on, because you consume only during the working day. You will consume only during the working day. Average lead time is max plus min by 2. Same logic can apply for consumption. Reorder quantity is equal to what? Economic order quantity if problem is silent. Some question they'll say I'll follow something else. Please follow it. If the problem says I have no problem, go ahead and follow whatever the question tells you. Safety stock is a buffer stock maintained by the company. It's an excess stock maintained by the company. Moment you maintain safety stock, your reorder level goes up. If reorder level increases, everything else will automatically increase. ROL increases, max level will increase. ROL increases, min level will increase. ROL increases, average level will increase. Reorder quantity doesn't really matter. Emergency lead time doesn't come into picture. There also technically you'll have to add the safety stock if at all it is there. Consumption details not given in a question. Some question did not give you the consumption, max consumption, min consumption, normal consumption. No problem. I'll calculate my annual demand of raw material, divide by the number of days and call that as maximum consumption per day, minimum consumption per day, normal consumption per day. I'll calculate what? The annual consumption divided by number of days in a year and call it as what? Max consumption, min consumption, normal consumption. And same logic even for lead time. If you give me only one lead time, that is my maximum lead time, that is my minimum lead time, and that is my normal lead time. Consumption per hour. Consumption per hour. Lead time in days. Lead time in days. 1 day is equal to what? 8 working hours. Let's change this 25 to 75. It's not 25 to 75. 25 into 8, 75 into 8. 25 into 8 and 75 into 8. So this is what? 200, 600. Now onwards I can read the question. Now onwards I can read the question. They've asked for maximum level and minimum level. For maximum level I need reorder level first. I need reorder level. What's the formula for reorder level? Maximum consumption into maximum lead time. 3000. ROL plus ROQ minus minimum consumption into minimum lead time. What is the minimum consumption? 200. Minimum lead time 3. What's the number you get? 3400. I'm not doing the other one because 3400. Other one obviously you can do. The MCQ examples, don't look at the answer itself. When you do the problem, the objective is to test the clarity. The purpose of making it in MCQ form is just to test the clarity, because this will ensure that you get full clarity on the concept at a faster time. Otherwise it takes a lot of time to revise. Normal consumption 10 units, maximum 20, minimum 5, normal lead time for emergency purchase. What is the danger level? What's the formula for danger level? Normal consumption into lead time for emergency purchases. It's normal into emergency, normal into emergency. So 10 into 2. Average consumption, minimum reorder period. How much is reorder level? If this is average, this is minimum, what will be maximum? What should be the maximum consumption? Average is there, minimum is there. 25. How it's 25? Max plus min by 2 is equal to 20. Max plus min by 2 is equal to 20. Max plus 15 by 2 is equal to 20. 2 goes the other side, 40. 25 is maximum. 25 into 8 days. 25 into 8 days, 200 units. Clear? Any doubts on this? Fairly simple examples only, but the clarity on the concept will get tested here. Monthly demand of finished product, normal consumption of raw material, 1 year, ordering cost, carrying cost, reorder quantity is 1.25 times of EOQ. I'll wait for a minute. I'll also get the rest. So calculate EOQ. Please calculate EOQ. First calculate EOQ. Tell me, what did you use as annual demand in the formula? 100 into 360. If you have done 10,000 into 12, that is wrong. If you have done 10,000 into 12, that is wrong. I'm not sure how many of you have done that. How many did 10,000 into 12? Anybody took annual demand as 10,000 into 12? Okay, great. What is the EOQ you got? 1000? What is the EOQ answer you got? It's not there as an option. Tell me the EOQ answer you got. Guys, 18? 2 into, I don't know what is the confusion, into, what is the annual demand? Sorry? What is the annual demand? 36,000. Ordering cost? Carrying cost? Sorry? Only 547? Just give me a minute. Only 547 you're getting? I think that could be a typing error or something. Which one? The question is wrong. Okay, let's leave it then. Okay, leave it. Okay, let's go to the next one. Annual consumption is 1,50,000 units. 300 working days. Annual consumption 1,50,000, 300 working days. How much per day? Divide and tell me per day. 500. My requirement is to calculate reorder level, where reorder level is equal to max consumption into max lead time plus safety stock. Max consumption is 500, min is 500, normal is 500, into maximum lead time is 20 days. Maximum lead time is 20 days, and safety stock is 500 into 10. Safety stock is 500 into 10. ROL is 500 into 20. This is the normal answer, and safety stock is 500 into 10. 500 into 10. Any doubts on this? Clear? Next is inventory turnover ratio. Fairly simple concept. What is inventory turnover ratios? Objective is to classify my material into fast moving and slow moving. Objective is to classify them into fast moving and slow moving. How do I do this classification? Through two ratios. One is called inventory turnover ratio in times, or inventory turnover ratio in days. Inventory turnover ratio is equal to raw material consumed by average stock. RM consumed is opening stock plus purchase minus closing stock, and average stock is opening plus closing by 2. You will get it in times. To convert into days, 365 divided by this. Which is fast moving? High inventory turnover ratio or low inventory turnover ratio? In times, I'm asking about times. Which is better? Higher in times or lower in times? Higher in times is better, and lower in days is better. Higher in times and lower in days. Give me the answer to this. What is 6? 360 divided by 10. 360 or 365 we take. 360 the question has said. Divided by 10. Get me the inventory turnover ratio quickly. Nothing much. Quickly get the inventory turnover ratio. Will not take much time. Quickly get it. Raw material consumed by average stock. How many? Numerator is 60,000. Denominator is 30,000. 20 plus 80 minus 40, 60 divided by 30. Safety stock is a buffer stock maintained by the company. This is maintained because of certain emergencies which can come. Emergencies is basically I don't want any stock out to happen. What is stock out? You come to my shop asking for the product and I say product is not available. If I keep doing this, I'll keep losing demand. So safety stock is a buffer stock maintained by the company to protect itself from the possibility of stock out. So if I maintain safety stock, I have to incur high carrying cost. And it's not on half of safety stock, it's on the entire safety stock because it's maintained throughout the year. Why we do average inventory? Because normally average will happen, but here it's maintained throughout the year. But stock out cost is the other angle. Stock out cost is number of units of stock out into the stock out cost per unit. Any stock out will lead to missed sale opportunity, leading to loss in contribution or profit. This can be considered as stock out cost. The problem is not only this, it will also lead to future loss. It will also lead to future loss because you came, I said no. Again you came, I said no. Again you came, I said no. If I keep doing this, you will say no point of going to that shop because he's continuously saying stock is not there. But if I maintain safety stock, I'll have to incur high carrying cost. I'll have to incur high carrying cost. Somewhere I'll have to balance it. Somewhere I'll have to balance it. Now this is the past data. The company incurs stock out cost of 150 per unit. What will be the stock out cost if I maintain buffer stock? If I maintain buffer stock. If you maintain buffer stock, no stock out, no stock out, 10 units stock out, 30 units stock out. And historical data total is 100. 100 means 80%, 10%, 5% and 5%. We did some probability calculation. Indirectly, there's a 5% chance that you can lose 10 units and another 5% chance you can lose 30 units. 5% chance of losing 10. 10 units losses 10 into 150, 1,500. 30 into 150, 4,000. What is stock out cost is 5% of 1,500 and another 5% of 4,500. It's not 100% going to happen. 5% of 1,500 and 5% of what? 4,500. Put together how much you get? 300. That is the expected stock out cost. What can ultimately happen? It can be 1,500, it can be 4,500 or it can be 0. It can be 1,500, 4,500 or 0. Probability says 90% of the time you will not lose anything. Because if you order till 0 and 20 scenario, no stock out. Next scenario, you will have a stock out which is a 5% chance and then next also 5% chance. Any doubts on this? Next is valuation of material receipt. What is valuation of material receipt? Is the term material cost does not mean the basic purchase price. It includes all cost incurred to bring the material to the factory. All cost incurred to bring the material to the factory. Denominator. It is not what I buy. It is what I buy minus the normal loss. Minus the normal loss. So material purchased will consider all cost incurred to bring the material to the factory. Hence there will be a difference between the purchase price and the price at which you record in your price stores ledger. In the price stores ledger. Why is the difference happening? Numerator problem, denominator also there is an issue. In numerator extra cost you add, in denominator you reduce the number of units. What are the cost I add? Basic price, freight, road tax, octroi, all these are normally there. All these are normally there for any company. Specific discussion GST if ITC not available. GST if ITC is not available. Cost of non-returnable packing, logical, you cannot return it. And net cost of returnable packing. Returnable packing is when I buy, I pay 500 rupees deposit. When I return, he gives me 400 rupees. 100 rupees is my cost. What is item which I deduct? If I get some discounts like trade discount or quantity discount or subsidy or grant, which are not considered, ITC is available, not an expense. Demurrage, penalty, detention are abnormal expenses. All these are abnormal expense, and cash discount is a financing charge. It is not a operating expense. It is a financing expense. Financing expenses are ignored in the calculation. Financing expenses are ignored in the calculation. Rules for computation of effective good units: items ordered minus what you will subtract: normal shortage, items received. If there's any provision for further loss, deducted. No abnormal shortage, no abnormal loss. Example, I bought 200 units for 2000. 200 units for 2000. Is this 360 an expense or no? Not an expense, because it's eligible for what? ITC. Paid 100 for returnable. Returnable means it's not an expense. How much do you get on returning? 80, which means 20 is the expense. 20 is the expense. So 2000, another 20, cash discount of 200. Cash discount of 200, I'll not subtract it. I'll not subtract it. Though you made the payment within 30 days, I'm not going to subtract it. Net my cost is 2020. Net cost is 2020. Next example, I bought a chemical for 1 lakh rupee. I bought a chemical for 1 lakh. Customs duty, ignored or considered? Considered. So it becomes another 12,000. Demurrage charges, 1 lakh 12,000. I ordered 10,000. Normal shortage is how much? 16%. So 10,000 minus 16% is effective good units. Least bothered what you received. Least bothered what you received. So denominator is 8,400. Denominator is 8,400. What's the price you get, rate you get? 13.33. Any doubts on this? Next example, basic price 10,000. I think same okay, what is the abnormal loss? What is the abnormal loss? 8,400 was the effective good units, but you received what? 8,400 is abnormal loss. 400 into that 13.33. 400 into 13.33. Accounting for issue of material, we have to prepare a price stores ledger. For under price stores ledger, we have three methods: FIFO method, LIFO method, weighted average method. So PSL is maintained by cost accounting department to record receipt and issue of material, date, particulars, receipt 3 sub columns, quantity, rate and amount, issue 3 sub columns, quantity, rate and amount, balance 3 sub columns, quantity, rate and amount. This you'll have to consider. Under FIFO method, the first lot is consumed first. The first lot is consumed first. Every lot you'll have to write separately. So in your balance, no, you may see 5 line items, 3 line items, 2 line items. Every lot you have to write separately. LIFO method means the latest lot is consumed first. Again, lot wise tracking is needed. Weighted average, club the units, club the value, and rate is balancing figure. Rate is balancing figure. If you have a normal shortage, reduce the units but do not reduce the value. Reduce the units but do not reduce the value. Normal loss will have to be borne by the end customer. Hence, the same would be accounted by inflating the price. What is inflating? Today you have 100 into 10,000. Tomorrow you will say it's 90 into question mark same 1,000. 90 into same question mark, but value is 1,000. Value is 1,000. It becomes 11.11. You have inflated the price of the remaining material. Quantity and rate is 0, value 0. Rate is 0. This is recorded as an issue. Abnormal shortage will have to be borne by the company. I will record it as an issue. Quantity, whatever is the abnormal loss. Rate is the prevailing rate. FIFO method means the first lot. LIFO method means the latest lot. Weighted average cost means the weighted average price, and value will be recorded and value will go down. Shortage can also be charged as overhead. What is charged as overhead is you transfer it to factory overhead. In this case, it is basically will be transferred to the overhead, and you will record the quantity as well as the value. You will reduce and treat it as an overhead. From there, you may transfer it to costing P&L or try to absorb in the company. In overhead chapter, you will understand how do we absorb cost. Certain special item, if raw material is returned from production to the stores, it is a return of raw material. Godown stock will increase. So it's recorded as a receipt. Quantity of return rate at which the issue was made. Rate at which the issue was made. Sometime back you would have done the issue, whatever rate you recorded. For FIFO and LIFO method, for FIFO and LIFO, where you do lot wise tracking, whatever came back is first immediately consumed. Is first immediately consumed. Why first immediately consumed? Because I want to send this material back, because it went to the godown, came back, sorry, it went to the manufacturing, came back. Again, if I want to, let me first consume this fully, because if at all any damage issue is there. Return of raw material to vendor, sales purchase return, record it in the issue column. Whatever price you bought, that is the price at which you will record the return. Record the return. Transfer of material from one production guy to another production guy is not recorded in PSL, is not recorded in the price stores ledger. Replacement of material by vendor. I gave the material to the vendor, he is giving me back the material. It is recorded as a purchase, whatever price at which the purchase was made, record, and it is a separate purchase for lot wise tracking. Separate purchase for lot wise tracking. Opening, okay, this I don't want to do, because PSL and all I don't want to do. Okay, with this, the entire discussion on materials chapter is over. Approximately we have spent around 51 minutes to do this. This is the amount of time ideally every chapter will take you for you to do the revision, provided you're able to move this. Along with this, ideally you should pick up maximum 10 questions in every chapter, or you can keep a ground rule 20 or 25% of the question. If you have 50 questions, around 12 13 questions you can choose. Some chapter will have lesser number of questions, there you choose lesser number of questions. Some chapters have higher number of questions, choose higher number of questions, but choose that within the next few days. When the chapter gets over, in the question, in the workbook itself, mark easy, difficult, whatever you want to do, mark it so that you know when to revise, what not to revise. When I do a problem also, today when I did direct material problem, you could have just direct expense problem, you could have just written easy, no need to refer that again. There's no point in referring that again. You do a homework problem, you get the answer right in the first instance. If you get it right in the first instance, you should not solve that problem again. You should not solve it again, because it's easy for you to do. That is why you got the answer. Clear? Let's take a break and then resume. 10 minutes break. Okay, let's start with the revision of labor chapter. It's there in the concept book. If you have, open it. Otherwise, refer the screen. Page 28. First, we learned what is labor cost. The term labor cost means the reward paid to the workforce. Reward paid to the workforce. It can be monetary benefits as well as non-monetary benefit, which can be quantified. Example, wages, incentive, or a canteen facility. And our category is direct labor cost and indirect labor cost. Then we learnt methods of paying the worker. The first method is on the basis of hours worked, which is called time rate system. Hours worked into rate per hour. It is a guaranteed earning for the worker. It is a guaranteed earning for the worker, but it has a disadvantage. The disadvantage is people do not focus on efficiency. Then method 2 is piece rate system, where I pay on the basis of units produced into rate per unit. This method has a challenge. The challenge is people, because they want to earn more and more, may focus more on production and compromise quality. So that's the issue with piece rate system. Then have variance of the time rate system. Halsey Ware premium scheme, which is called 30% bonus. Please participate, which is called 30% bonus. Basic wages plus bonus. What is basic wages? Hours worked into rate per hour. Bonus is 30% of time saved into rate per hour. Then we have Halsey premium, where it is 50% bonus. So bonus is 50% of time saved into rate per hour. Now in this Halsey, if the question wants, they can specifically tell pay 40% or 45%. We had one question where we had to pay 40%. Then we have Rowan system, where basic wages remain same. Bonus is 80 actual time divided by standard time into time saved into rate per hour. Wage cost can also be called as employee cost or employee earning. So wage cost per unit is equal to whatever you pay to the worker, or whatever is my expense, divided by the number of units, and earning per hour is equal to same numerator divided by number of hours. Standard output per hour is 4 units. Guaranteed rate per hour is 40. Worker A has produced 40 units in 8 hours. What will be the earnings under piece rate system? I'll wait for 20 seconds. In that, if you get the answer, okay. Otherwise, I start discussing. 20 seconds waiting time. You can keep doing the calculation. If you remember, okay. If you don't remember, I explain in 20 seconds. If you can get the answer in 20 seconds, fine. Else, I start explaining it. Yeah, some of you have told me the answer. Time gets over. Here it says guaranteed rate per hour is 40. So 1 hour is equal to 40. 1 hour is also equal to 4 units. So 4 units is equal to 40. 1 unit is equal to 10. Piece rate system 40 into 10. Piece rate system is 40 into 10. Any doubts on this? Again, 20 seconds. If you can get fine, else I start explaining. Okay, time done. Anybody got the answer? 96. Let me check. It is first hours worked into rate per hour. How many hours we have worked? 8 into 10 divided by actual time by standard time. Standard time is 1 hour is equal to 5 units. 1 hour is equal to 5 units. So 10 hours is equal to 50 units. 10 hours is equal to 50 units. So 8 by 10 into 2 actual time by standard time into time saved into rate per hour. What's the answer? 96. 20 seconds. Okay, I start discussing. Standard time for a job is 60 hours. Actual time is 40 hours. Anybody got the answer here? What's the answer? Anybody got the answer? Check, I'll explain. I assume 1 hour is equal to 1 unit. This is my assumption. So this is rate per hour. This is also rate per unit. This is rate per hour as well as rate per unit. We have an equation called ST equal to AO. We have an equation called ST equal to AO. So 60 hours is equal to 60 units. Normally I calculate standard time. In this question I'm calculating actual output. In this question I'm calculating actual output. 60 units produced into rate per unit is 50 rupees. Units produced into rate per unit 60 into 50. 60 into 50. I have assumed 1 hour is equal to 1 unit. Any assumption you take doesn't matter. Whichever assumption you take, you'll get the same answer. Answer is 3000. Here I have taken 10 hours to produce 1 unit. Same answer will come. 10 hours to produce 1 unit. Rate per hour is 500. Rate per hour is 500 and actual output is 6. 500 into 6, 3000. Whichever way you do doesn't really matter, but an assumption will make it easier for you to do. Any doubts on this? Go through this. 30 seconds. I'm giving little more time. Do it, guys, please. Anybody got the answer? Because once you revise these MCQs, ideally all concepts should get revised. Here my selling price is how much? 20. Variable cost is 10. It includes two items, labor, other variable cost. Labor is 2 rupees, others is 8 rupee. Labor is 2 rupees and others is 8 rupee. Next scenario, output increased by 25%. Selling price reduced by what? So 20 has become 19. 2 has gone up. The same will increase by 2% for every 1% increase in output. The same will increase by 2% for every 1% increase in output. Output to increase by what percentage? So labor cost will go up by 50%. So 2 will become 3. 8 will continue to be 8. 3 plus 8 is 11. 19 minus 11, 8 is the contribution. 19 minus 11, 8 is the contribution. Any doubts on this? 30 seconds. We have done calculations around this in class. So guys, at revision stage, you should pick up speed. How should I do this calculation? 95 saved, split into multiple category. First 20 hours. First 20 hours, what is the percentage? 40. Next 40 hours, 20%. Next 20 percentage or next 20 hours is 30. And last 15 hours, last 15, because totally saved is 95. Last 15 is how much? 10%. So my bonus is 20 hours into 40%. Second is 40 hours, 20%. 20 hours into 30% and 15 into 10% and multiply with 100 in the end. Multiply this with 100 in the end. It is 2350. 2350. Any doubts on this? Any doubts on this? Clear? Standard time of a job is 60. Guaranteed time rate is 0.30 per hour. What is the amount of wages under row 1 plan if job is completed in 48? This you should get it quickly. Everything is directly available. Get me the answer. Row 1 plan. No calculation needed. You should get it in 20 seconds. What's the answer? It is 48 into 0.3 plus what? 48 by 60 into time saved into 0.3. I don't have anything to discuss here. It is a straightforward question. It's a straightforward question. Now, a company is paying wages under, this is no calculation, it's a concept. Under piece rate, wages are guaranteed at 75% of time wages. Wages are guaranteed at, if his earnings are lesser than 50%, so wages are guaranteed 75% of time wages. If my earnings is less than 50% of time rate system. Following is the wages of worker A and B under piece rate and time rate. If time rate gives me 200, piece rate should give me minimum sum number. If I'm not getting that minimum sum number, I'll pay 75%. I'll pay 75%. Choose which is the right option. We have done this in one question. Worker A, is he below 50%? No, so he will get only his 140. He will get only his 140. Worker B, is he below 50%? So he will get 150. He will get 150. So in this case, worker A is not getting any benefit and worker B is getting a huge benefit. Worker B is getting a huge benefit. Any doubts on this? If the amount of wages under Halsey plan is 420, time allowed is 8, guaranteed rate is 60, what is the time saved by the worker? Apply the Halsey formula. 50% of time saved, something will come. Apply the Halsey formula. Apply Halsey formula, you will get to the answer. What's the formula for Halsey system? Hours worked into rate per hour. So rate per hour is how much? 60 A. I don't know the hours worked. I don't know the hours worked plus 50% of 8 minus A, time saved, into 60. So 420 is equal to 60A plus 60A plus 0.5 into 8 into 60 and 0.5 into A into, sorry, 0.5 into 8 into 60 and 0.5 into A into 60. Solve this and let me know answer. 6 is the time taken. What is asked in the question is time saved. What is asked in the question is time saved. So time saved is going to be 2 hours. Time saved is going to be 2 hours. Any doubts on this? Very simple concept. If you are able to just revise my MCQs, the entire part will get over. That is how the concept book is created. Along with that, few more questions you need to do. Any doubts on this? Next concept, actual time, standard time and time saved. We have already done this in many questions as I was explaining. Actual time refers to the time taken. Standard time refers to the time to be taken and time saved is the gap. Example, a company expects an employee to produce 5 units per hour. To produce 5 units per hour. Worker has produced 400 units in how many hours? Actual time is called 60 hours. He has taken 60 hours. For 400 units, he should have taken 80 hours. He should have taken 80 hours. And time saved is the gap between the two. Time saved is the gap between the two. Can you please calculate the standard time with relaxation allowance? 30 seconds. You should be in a position to get this. Within 30 seconds, you can get this. How much? Basic thing is 1500 into 135 seconds. 1500 into 135. What is 135? 90 plus 50%. Whole divided by 3600 seconds to convert into number of hours. Any doubts on this? Get me the answer to this. 20 seconds for this. You will not take more than 20 seconds here. Get me the answer to this quickly. 10 hours. Very simple. 1 unit is equal to 15 minutes. 40 units is equal to 600 minutes. 40 units is 600 minutes. Let's go through this. A worker commenced a job at 8 a.m. on September 1st, completed by 10 a.m. on September 3rd, working 9 hours each day. Working 9 hours each day. Can you tell me what is the actual time with this? What is the actual time taken? 9 hours on September 1, 9 hours on September 2 and 2 hours on September 3. Equation is 1 hour is equal to how much? 50 units. He has produced how many units? 1200. No use. Accepted what? 1100. So 1 hour is equal to 50 units. Question mark is equal to 1100 units. Question mark is 1100 units. 22. Taken 20. Standard time is 22. Time saved is how much? 2 hours. Try to get me the answer to this. What is the standard time answer? 1 unit is equal to what we have said here? 2.5 hours. How many units produced? This should take how many hours? How many hours they have actually taken? 200 into 25. They have taken 200 into 25. They have taken 200 into 25. Man hours concept. Man hours concept. They have taken how many hours? 5000 hours, and saving is what? 500 hours. Any doubts on this? Very simple concept. Simple MCQs can kind of take care. Then have normal rate per unit versus applicable rate per unit. When you apply your standard equation formula, what you get is normal rate per unit. Sometimes the question will say, I want to pay extra. I want to pay extra. That's called applicable rate per unit. We saw this in one problem. So rate per unit is used for computation of wages under piece rate system. This can be computed with the help of a standard equation. However, company may decide to pay a higher rate. Example, guaranteed rate per hour 200. Company expects employees to produce 20 units in 4 hours. It plans to give additional 20%. It plans to give additional 20%. Can you get me the normal piece rate? Get me the normal piece rate here first. All this I've explained earlier. Get me the normal piece rate. What is the rate per unit? What should be the rate per unit? How much? I'm hearing some words, so please tell me what's the number you heard. Normal. I'll come to 20% later. Answer is 41 hour is equal to rupees 200. 1 hour is equal to rupees 200. 4 hours is equal to 20 units. 1 hour is equal to 5 units. 5 units is equal to 200. 5 units is equal to 200. 1 unit is equal to 40. I want to pay extra 20%, so I'll pay 48. I'll pay 48. Any doubts on this? All this is already done. You will have to keep revising this with the concept book. Normal standard time versus applicable standard time. Normal standard time is computed with standard equation. But I say I want to give extra time. I want to give extra time because extra time means extra bonus will come. Extra time means extra bonus. That's called applicable standard time. Example. Can you please calculate me what is the normal time here? What is the normal standard time? Get me the normal standard time. Get the normal standard time. Use standard equation and tell me the normal standard time. Yeah, 80. 10 hours is equal to 25 units is my equation. Question mark is equal to 200 units. Question mark is equal to ST is equal to AO. What is that question mark? 80. I want to give what extra? So add 25%. How much? What is the time we have taken? 60. Time allowed is 100. Time taken is only 60. Saved is 40. Any doubts on this? Bonus under Halsey plan is normally what? 50% of time saved. But if I want, I can give 40, 45, 60, 65, and you will have to work with that percentage. You'll have to work with that percentage. Get me the answer to this. Everything is readily available there. Everything readily available. Please get me 30 seconds. All numbers are directly given. What's the answer? Sorry? Hours worked into rate per hour. How many hours we have worked? Rate per hour plus 40% of 40% of, you took 50%. Just now I explained the concept. Just now I explained that concept. 40% of, what's the time saved? 5 into 5. The purpose of explaining the concept was this only. 40% of time saved into rate per hour. 15 into 5 plus 40% of 5 into 5. These are typical mistakes which students make, and that is why this has been devised in the concept book. Any doubts on this? Halsey and Rowan plan, I'm not doing the reverse working question, but these are good for your practice, because every question will take a little bit extra time, because I'll have to form an equation and solve. But we did a lot of problem on Halsey versus Rowan reverse working question. Efficiency basically measures how efficient my employee is. More than 100% is efficient, less than 100% is inefficient. There are two formulae to calculate efficiency. One is standard time by actual time. Standard time is calculated with the help of actual output, so that is the other formula. And actual time determines the standard output. Actual time determines the standard output. So ST by AT or AO by SO, based on efficiency, bonus can be calculated. Based on the efficiency, bonus can be calculated. Let's come to this. Budgeted production of product A 4,000. Standard time is 5 hours. Product B, standard time 1 hour. Expected efficiency is what? 80%. Now this is a very important question. What would be the expected working time to produce the budgeted output? To produce product A, how many hours is overall needed? Multiply and tell me. Multiply or divide, whatever it is. Multiply or divide. How many hours is needed for product A? I'll come to efficiency in some time. 20,000. Product B. In a normal situation, I should take 30,000 hours. But my workers are what? Only 80% efficiency. What is the formula for efficiency? Efficiency is equal to ST by 80. 80% is equal to 30,000. Standard time is 30,000. You should take 30,000, but you're not going to take 30,000. You're going to take more. You're going to take more. So actual expected time is now 30,000 divided by what? 80%, and people will take 37,500. People will take 37,500. Any doubts on this? Formula is ST by AT or AO by SO. AO by SO. Get me the answer to this. Which formula we are going to use? AO by SO. And logic is very simple. I wanted you to produce 4,000 units. You have produced only 3,000, which means you are inefficient. Which means you are inefficient. Any doubts on this? What is the answer to this? It is ST by AT. Don't remember the formula, understand the logic. Logic is I gave you 100 hours. You took 125 hours, which means you are inefficient. Answer will be less than 100%. Answer is going to be less than 100%. The standard production is 2,800 tons per month, which means 1 day is how much? 100. If the production is more than 20% above the standard, first you calculate the standard, and if you exceed more than 20%, direct labor will get a special bonus. Will get a special bonus. We did some question on this when we were solving the problem. Actual production is how much? 3,500 in 25 days. First tell me in 25 days how many units I should produce? 2,000. Add another 20% on top of it. Till this, no special bonus. If you go beyond 3,000, if you go beyond 3,000, you'll get a special bonus. How much in excess of 3,000 we have done? And what is the special bonus rate? So 500 into 5. Anything in excess of 120%. Anything in this question, if you calculate efficiency, 3,500 by 2,500, 140%. In excess of 120%. If you are beyond 120%, you will get the bonus. You will get the bonus for that extra hours. For the extra hours. Any doubts on this? Any doubts on this? Get me the answer to this. Be a little cautious. Calculate me the answer. Get the answer here. It's a very good question. How much? First, let's calculate standard time. The standard equation is 8 hours is equal to 280 units. 8 hours is equal to 280 units. How many units company has produced? Can you tell me the number of hours? 12. So my formula is 12 divided by 10. ST by 80. ST by 80. Standard time by actual time. 12 divided by 10. 12 divided by 10, which is what? 120%. Don't directly take 10 hours, 8 hours. That's not going to help. Directly, it's not going to help. 8 hours is for 280 units. 10 hours is for 420 units. 10 hours is for 420 units. So I have to do the calculation of standard time, which is 12 hours. You have told me 12 compared with 10 is efficiency. Any doubts on this? Any doubts? I can do at an output level also if I want. My actual output is 420. In 10 hours, I should have produced 280 into 10 by 8. 280 into 10 by 8. What is the units I should have produced? 420 by 350. 420 by 350. Answer is 120%. Any doubts on this? Then we learned a concept called net earnings of employee versus the labor cost. Normally, labor cost is equal to employee earning. Here also it's equal to employee earning only, but we will not pay the entire amount. We will not pay the entire amount. So net earnings of an employee would mean actually paid to employee post what? Statutory deduction. Post statutory deduction. What kind of deductions we will do? We'll do deductions like employee contribution to PF, employee contribution to ESI, tax deducted at source, professional tax. All those will be subtracted and a net amount will be paid to you. What is my expense? Basic wages, bonus, allowances plus statutory contribution. Whatever I deduct and whatever I have to contribute, I put this together and submit to EPFO or give it to ESIC or give it to Government of India for tax deduction. So I will deduct certain items, I will contribute certain items, and both will go to government. Both will go to government. Any doubts on this? So employee earnings will ideally be equal to labor cost. Net employee earnings is slightly different. Net earnings is slightly different. Time keeping and time booking. What is time keeping? Is recording the number of hours spent by an employee in the factory. Recording the number of hours spent by an employee in the factory. Why should I do time keeping? Because my bonus or my earnings is dependent on the number of hours worked. Also, if I have to calculate time saved, if I have to calculate bonus, for all that calculation, time keeping is critical. For all that calculation, time keeping is critical. Time booking is exactly knowing where did you spend time. I have spent 10 hours in the academy, 3 hours in CA inter classes, 5 hours in CA final classes, 2 hours I wasted. 2 hours I wasted. Idle time is the gap between hours worked and hours booked. Hours worked and hours booked. I calculate my cost per hour. Effective calculation we learned. All expenses of the employee divided by effective working hours. What is effective working hours? Total time minus the normal idle time. Now example, effective working hours per week is 48. Hours lost due to what? Meal break. Hours lost due to meal. It should not use the term effective. It should use the working hours. Working hours is 48. Hours lost due to meal. Meal is normal loss, abnormal loss. So 44 is technically effective. Total wage cost is what? 1320. 1320 divided by 44 is how much? In the 44 hours, 35 hours has been booked. Balance 9 is abnormal idle time. Balance 9 is abnormal idle time. 9 into the 30 rupees which you said is the cost of abnormal idle time. See, I'm paying you 1320. In that 1320, I will charge 35 into 30 to the job. 35 into 30 to the job. Balance 9 into 30, I will have to bear it at my end. I'll have to bear that at my end. Any doubts on this? Any doubts? Working hours per annum 300 days of 8 hours. Leave permitted. Can you give me the effective working hours? Get me the effective working hours. It's a simple calculation. Get the effective working hours. Get the effective working hours. What's the effective working hours? 300 into 8 minus 30 into 8 minus 100 hours. Abnormal idle time, I'll not subtract. I'll not subtract the abnormal idle time. So I get 2060. Any doubts on this? Then we learned a concept called labor turnover, which can help me in reducing the cost. Labor turnover measures the rate of change in the workforce of the company. Rate of change can happen because of people going out of the company. They are called separations. People coming inside the company in place of people who are leaving, they are called replacement. Coming for a new job, that is called new recruitment. So I have a separation method, number of separations by average workforce. We do a reconciliation. How we do reconciliation? Opening workforce 1000 less separation 50, add replacement 20, add new recruitment 40, and I get the closing. Separation method is number of separation by average. Replacement method is number of replacement by average. New recruitment is number of new recruitment by average. Accession method includes everyone who is coming into the company. So replacement plus new recruitment, and flux method is all the three. This, if I do, can be for a month, can be for a year, can be for a quarter. If it's for a month and they ask yearly, do into 12 by 1 or 365 by number of days. Average workforce equivalent employee turnover is employee turnover into 12 by M or 365 by number of days. Any doubts on this? Let's do this. Average workforce 1000, number of separation 100, replacement 50, new recruitment 150, closing workforce. We'll do a reconciliation. Approach. That's our approach of calculating. Opening workforce. Is it given in this example? A minus separation. How many separation? Add replacement. Add new recruitment. Add up and tell me what is the closing. A plus 100 plus A. Opening plus closing divided by 2 is what? 1000. So A plus 100 plus A divided by 2 is equal to 1000. Can you tell me the answer to A? That is my opening workforce. 950 is my opening workforce. Closing is 950 plus 100. 950 plus 100, which is what? 1050. Any doubts on this? Number of separations in a quarter. Equivalent annual. Be very clear about this. Number of separations in a quarter, and here it is what? Equivalent annual. Either give me both quarter or give me both year. So I change this 20 as 5%. 20% is for a year. 5% is for a quarter. See, your job, it says 20 for quarter. So for a year it is 80. Percentage is 20% for a year, 5% for a quarter. Average is 20 by 5% or 80 by 20%. 20 divided by 5% or 80 divided by 20%, you'll get the same answer. Consistency is very critical. Because one data is given for what? Quarter, other data is given for a year. So you will have to ensure that there is a consistency in the calculation. Then we can have a lot of cost of labor turnover. I can have a recruitment cost, I can have a training cost, I can have a selection cost, and an opportunity cost also. What is opportunity cost? Delay in recruitment of workforce. If there is a delay in recruitment of workforce, you will get a opportunity cost. Opportunity cost will arise in case there is a delay in recruitment of workforce, or the new people who are coming in, you are not able to train them properly, are taking time to do training. Sales of last year 75 lakh. Sales of last year 75 lakh. PVR 20% means profit is 20%. Can you tell me the amount? Profit 20% is how much? Number of hours worked is what? 3 lakh 30. Look at that extra data and tell me how much is effective working hours. Read extra data and tell me from 3 lakh 30 what is the effective working hours. Entire 3 lakh 30 is not working. Read and let me know. There is some time which is getting wasted here. What is the effective working hours? What is the effective working hours in this 330? This 330 includes training how much? 50, which is efficient to the extent of, which means 60% training hours got wasted. 60% training hours got wasted. So what is the wasted hours? 30,000 hours. From 3 lakh 30, deduct 30,000, you get 3 lakh. Indirectly, laborers were earning 5 rupees per hour. If you waste 1 hour, you are wasting 5 rupees. If you are wasting 1 hour, it is a wastage of what? 5 rupees. How many hours I wasted? I wasted 30,000 hours in training. I wasted 30,000 hours in training. I wasted another 75,000 hours in recruitment. I wasted another, that is, I could not recruit people. Potential productive hours got lost. So overall we have lost 1 lakh 5,000 into 5 rupees, 5 lakh 25,000. So again I'll repeat, 75 lakh into 20%, which is 15 lakh. This 15 lakh is earned by not 3 lakh 30,000 people. It is earned by only 3 lakh hours. It is earned by 3 lakh hours. 3 lakh 30 included 30,000 hours of training which is wasted. 50,000 hours included. In that 20,000 is okay. 30,000 is wasted. So 30,000 wasted, 75,000 wasted, 1 lakh 5,000 wasted into 5 rupees per hour. Any doubts on this? Overtime means working beyond normal working hours. As per the definition, more than 9 hours a day or 48 hours a week, and you have to pay double payment. You have to pay double payment. Now, overtime can happen because of multiple reasons. It is a policy of the company. Then do average inflated wage rate. Average inflated wage rate. If it is a policy of the company, do average inflated wage rate. If some customer is saying do it and charge the overtime premium as part of the labor, as part of the labor cost. If it's because of some abnormal condition, charge it to costing P&L. Mistake of some department, charge it to that department, whoever did the mistake. If some mistake has been done by a department, charge it to that department. And sudden or urgent order, I'll charge it to the customer, but it is part of, overhead and not labor cost. It is treated as the extra overtime premium which you pay. If it's because of sudden or urgent order, it is considered as overtime premium. It's considered as overtime premium. Basic wages per month 10,000. Dearness allowance 50% of basic wages. PF 10%. Overtime is 10 hours and is paid at what? Double of only basic wages. Please consider only basic wages and tell me what should be the overtime payment. Only basic wages. What should be the overtime wages? What is the normal rate per hour? 10,000 divided by 200. Other expenses and all I don't consider. 50 rupees. I have to pay what? Double. I'll have to pay double. Double is 100. 100 into how many hours? 10 hours. So I'll pay 1,000. Any doubts on this? According to factory act, that's okay. More than 9 hours in any day or more than 48 hours in week, you'll be paid double the rate. You'll be paid double the rate. A company has produced 3,200 units in a week by employing 10 workers. Normal working time is 40 hours. When necessary, overtime can be done beyond this time. Current output is what? 6 units per man hour. Normal rate is 10. Overtime is 150%. What is the overall weekly wages? What is the overall weekly wages? I have produced 3,200 units in a week. I have produced 3,200 units in a week. The production is 6 units per man hour. So time taken is 3,200 divided by 6 or multiplied by 6. Divide or multiplied? Divide. Can you tell me the number? In this, 10 into 40 hours is normal time. 10 into 10 people into 40 hours is normal time. Everything else is overtime. 10 into 40 is normal time. Everything else is overtime. Normal time is paid at what rate? Overtime is paid at, put a total, 10 into 40 into 10, 133.33 into 15. How much? Any doubts on this? And then we had a last discussion on an item called direct expense. Direct expense is something which can be directly and economically identified with the end product, and it is neither a direct material or a nor a direct labor. Many times there can be confusion between treating this and factory overhead. Treating this and factory overhead. Examples: power and fuel, job charges paid to job workers, royalty, hire charges. All this will get classified as direct expenses. All this will get classified as direct expense. Any doubts on this? With this, the labor chapter gets over. Any doubts? Okay, as I've been doing, I'll now do overheads revision, the earlier chapter which got completed. So let's do a revision of overheads chapter. Anyway, I cannot start with the next chapter because that needs at least 1.5 hours of discussion, the initial base. So let's do overheads revision. What we learned in this chapter is overheads are those costs which I cannot allocate to the end product in an economically feasible manner. It is not possible in an economically feasible manner, but somewhere I have to still trace it. I'll have to still trace it. Why should I still trace this? Because this is a significant part of the total cost. This is a significant part of the total cost. So I need an approach of taking this to the end product. And that is where we learned an approach called primary overhead distribution, secondary overhead distribution, OAR calculation, and then absorbing the overheads, then having an under or over recovery, then doing supplementary recovery. All that we have learnt in this chapter. Now, overheads is basically total of what? Indirect material, indirect labor or indirect expense, or production overhead, administration overhead, or selling and distribution overhead. You have different ways of looking at it. Objective is to somehow absorb the overhead. Overheads need to be absorbed into the cost of end product using what? Some suitable basis. What are the steps we do? First step is primary overhead distribution, where overheads of the various departments and the company, overheads of the company are distributed to various profit center, technically called production department, and cost center, which is technically called service department, using two techniques. I did not discuss these two techniques earlier. One technique is called allocation. Second technique is called apportionment. What is the difference? Allocation means entire amount will go to one department. Apportionment means you divide the amount among the various departments. That's called allocation and apportionment. Allocation means full amount to one department. Apportionment means you will divide it among the various departments. Then we do secondary overhead distribution, where overheads of service department including its direct cost, even the direct cost of the service department needs to be transferred, so overheads of service department including its direct expenses are transferred to what? Production department using some suitable basis. Then I have an overhead absorption rate or a overhead recovery rate, and then I calculate the cost of the job. What is cost of the job or overheads of the job? Direct material will be there, direct labor will be there, overheads will be OAR, whatever you have calculated, into some base. It's called actual suitable base. The base can be machine hours, the base can be labor hours, the base can be units produced, direct material cost, direct labor cost, prime cost. Apart from that, other bases also we have seen in question. Now, for doing primary overhead distribution, I have multiple bases. So, some of them depreciation on the basis of book value of machine. Insurance, I'll discuss the important one. Power and fuel. Power and fuel is effective HP hours. What is effective HP hours? HP of the machine into number of machine hours, or HP of machine into working hours, are technically called as kilowatt hours. This is one tricky area which can be there. Light and electricity, number of light points, all that is fine. Other overheads, general overheads, sundries, I do it on the basis of DLH. If DLH not there, machine hours. If machine hours not there, I go with direct wages. And we have seen certain expenses like wages to factory supervisor, which has gone only to production department, So depreciation, book value of machine. Insurance, book value of machine. Insurance of building, either take value of building. If value of building is not there, area of building. Light and electricity, number of light points are area. Rent is on area. Payroll expenses. What is payroll expenses? Expense incurred to calculate the salary. Payroll, canteen, number of employees. Any doubts? Go through this and allocate this. Only department O I want to know. Power expense. Only for department O, calculate it. Understand the driver and do the calculation. Only to department O. Only one example I'm going to do on primary overhead distribution. What is the driver here? Should you multiply or take as it is? You'll have to multiply, no? You'll have to. What is the issue? HP of machine into working hours, no? HP of machines into working hours. See, one place I don't multiply is if I have HP here and I don't have the number of hours. We did that in one question where we took only on the basis of HP. Working hours was never our basis. So M is 150 into 1240. How much? 150 into 1240. N 180 into 1600. 2 lakh? Not 2. 180 into 1600. 2,88,000. 120 into 1400. What is the total of all of this? 6 lakh? 18. So my distribution is 4,20,000 divided by 6,18,000 into 1,44,000 into 1,44,000. I'm doing it only for one department. If you want to do for other department, whatever number you got by dividing into first 186 equal to 288 equal to 144 equal to. Any doubts on primary overhead distribution? Tell me the answer to this. This is a very simple one. $20,000 divided by total area is how much? 10,000 multiplied with 2,500 multiplied with 2,500. Secondary overhead distribution is distributing the overheads of the first division, that is overheads of the service department, including its direct wages. To what department? To the production department. Multiple departments, basis is given, stores, value of material issued or value of stores requisition. The first problem we did this adjustment. Engineering is related to machinery. Engineering is related to machinery. So we have machiners. General services related to DLH. Timekeeping and accounts, number of employees, power, horsepower, canteen is number of employees. Now for method for secondary overhead distribution, I have three types of situation. No service. What is no services? Department SD1 does not give service to SD2. SD2 does not give service to SD1. If you have no way service, then you do direct distribution method. Then I have a second situation which is one way service. SD1 gives service to SD2. SD2 does not give service to SD1. We follow a method called as what? Step ladder method, where the sequence is very important. Sequence is very important. Then we have a situation 3 which is called two-way service. SD1 gives service to SD2. SD2 gives service to SD1. In this situation, we follow a method called as either simultaneous equation or repeated distribution or trial and error method. Direct distribution, very simple. Take the cost of the first division, transfer it to only production 1, production 2. Take the cost of second division, transfer only to production 1, production 2. Third division only to production department. Let's look at an example. Overheads of service department 1 is 25,000. Direct wages of service department is 5,000. Overheads is distributed under direct distribution method. How much of the service department expense be distributed to PD1? Distribute and tell me. Service department 1, how much should go to PD1 on the basis of area? On the basis of area, think and let me know. Quickly get me the answer. Distribution of service department 1 alone. Distribution of service department 1. How much is the overheads to be distributed? Tell me first. Overheads to be distributed. Overheads to be distributed. 25 plus 5. 25 plus 5. I have told service department expenses, you will have to take all expenses. This 30,000 into 10,000 by 15,000. Only two departments you will distribute. You will distribute it to only two departments. No other departments will come into picture. We are following direct distribution method. Very simple MCQ. If you follow this correctly, you are kind of done with this concept. 30,000 into what? 10,000 by, it has two concepts. One, you have to consider direct wages in distribution. Second concept it tests is, you should not add up all the area. If the same was a step ladder method or a repeated distribution, the denominator will be 10 plus 5 plus 5 of the service department 2 plus 5 of the service department 2. Understand this. Any doubts? Next, step ladder method. Here the sequence is very important. How do I decide the sequences? First approach, I check how many departments is SD1 serving, how many service department is SD2 serving. If there is a tie, then you go by percentage of service provided or amount of service provided. Percentage is the first choice, then I go by amount of service. Moment you decided that you are following sequence of A and then B, start with A's distribution. Then when you do B's distribution, you should not distribute anything back to A. You should not distribute anything back to A. Let's take an example. Overheads of service department 1 or 2 is to be distributed on the basis of what? Data regarding the department. SD1 is on the basis of what? Number of employees. SD2 on the basis of area. So SD1 says my distribution is on the basis of number of employees. Is there employees in PD1? SD1 is giving service to PD1. Is there employees in PD2? It's giving service there also. Is there employees in SD2? So SD1 is giving service to SD2. SD1 is giving service to SD2. What is the basis of distributing SD2 cost? Area. Is there area in PD1? PD2? SD1? So SD2 is giving service to SD1 and SD1 is giving service to SD2. Technically a repeated distribution, but question has said what? step ladder method. Now for doing this, I'll have to find the percentage of service provided. How do I calculate percentage? How many employees are there? 400. Divide by the total employees. How many total employees? How can you add your own employees in the denominator? Are you going to distribute the cost to the own department? We're not going to distribute that, no. So 400 divided by how many employees? 700. What is the percentage? So 57 percentage is SD1 providing to SD2. What is the area of the second department? 25,000. What's the total area? Don't add the area of SD2. Don't add the area of SD2. What is the percentage? So SD2 is giving more service. SD2 is giving more service. So my sequence is SD2 and then SD1. My sequence is SD2 and then SD1. Percentage of service. You cannot add in the denominator your own employees. Don't add in the denominator own employees. Any doubts on this? Clear? Can we proceed? Now, A Limited has 3 production department, 2 service department. Service department cost are distributed to production department using what? Step ladder method of distribution. X is taken up first for distribution. X is taken up first for distribution. And then which department? Y is taken up for distribution. Total cost of department Y is how much? 10 lakh. Now I need to distribute Y. I need to distribute Y. First tell me Y's cost will be distributed to which departments? In this below table, to which and all department you should distribute Y's cost? Production 1, 2, 3, X. Should I distribute to X? No, because X is already distributed. There's no concept of distribution back. There's no concept of distribution back. Very simple concept. If you can understand the MCQ properly, things will become fairly simple for you to revise. So 10 lakh divided by employees of the 3 department. What is the total? Into how many employees of production department 1? So what's the cost distributed? Service department Y is taken up second for distribution. Taken up second for distribution. Hence the cost of Y will be distributed only to what? PD1, PD2 and PD3. Clear? Any doubts on this? Then comes our repeated distribution method, where first approach is very simple. Take SD1, give it to all departments. When you give it, SD1 becomes 0. Then take SD2, give it to all departments. SD2 will become 0, but SD1 has a value. Again repeat it. Again repeat. This will go on for 3 cycles and you will get a number which is closer to 0. You will get a number which is closer to 0. Any doubts on this? Simultaneous equation means you'll have to form 2 equations and solve the equation. Form 2 equations and solve the equations. Moment you solve the equations, you will know the amount to be distributed. You will know the amount to be distributed, and one cycle of distribution will get amount as 0. Try to form an equation here. You will find it little difficult. I'll give you some time. First form an equation. First form an equation. Slightly tricky one. Form an equation, then we'll have to solve the equation. Simultaneous equation method. Form equation. If you have a doubt, this is the rule. Form 2 equations. I'll discuss the equations in a minute. Take 2 minutes of time. Form the equations. Slightly tricky one. Form 2 equations. X is equal to what? Tell me first. X is easy. 10,000 plus Okay, X is what is difficulty? X is 10,000. So first tell me Y. Y is equal to 15,000. 0.3x. 0.3x. The second department is receiving 30% from the first department. The second department is receiving what? 30% from the first department. That is fairly simple. Here I'll have to convert this now. SD2 cost is distributed on the basis of what? Number of employees. Ignore this. What is the total of employees? And I can say it is 40%, 40% and 20%. They have not given the percentages. They have not given the percentages. I've calculated the percentage. 40, 40 and 20. 40%, 40% and 20%. These percentages are not given in the question. They are not given in the question. We have calculated these percentages. We have calculated these percentages. Any doubts on 40, 40 and 20? Which means I will receive 0.2 of y. Can you please solve the equation now? 10,000 plus 0.2 y, 15,000 plus 0.3 x. Follow substitution rule and get the answer. Solve the equation, substitute that y in the earlier equation. All this we have already done. You will have to keep revising the concept book. The most important part was getting that equation, getting the equation. Once you get the equation, it's more of a formality. Any doubts on this? Any doubts on this? Can you proceed? Form the equation, solve it. Form the equation and solve it. Please form two equations. Or tell me the equation. I don't want even solving. Tell me the equation. Solving is anyway just a formality. Tell me the two equations. Write in your notebook. I'll discuss it in a minute. Get the two equations. If you get the equation correct, it is kind of done. Instead of solving such lengthy questions, we just do one MCQ and the concept is fully done. X is equal to 25,000 plus what? 0.3y and y is equal to 30,000 plus 0.2x. Solving is not my worry. That's okay. You'll substitute and then close it. Any doubts on this? Any doubts on this? Trial and error method is combining our simultaneous equation method and repeated distribution method. What you do is you take the SD1, SD2. First transfer SD1 cost to SD2. Original plus this, you transfer it back. No negative numbers. Don't write any negative numbers. What you got, you transfer it back. The cycle will keep going on and I'll get the distributable amount. I'll get the distributable amount. Ideally, I don't want to follow trial and error method unless question specifically tells follow trial and error. Follow trial and error. It's not a necessary method. I have anyway a repeated distribution method or my simultaneous equation method to solve this. Next come computation of OAR. What is OAR? Budgeted overheads by budgeted suitable base. Now the suitable base can be a value driver, can be a volume driver. In value driver I have direct material cost, direct labor cost and prime cost. In volume driver we have DLH, machine hours and output. Are these the only methods? No, I can see any other method also in a question. I'll end up seeing other methods also. So volume based methods are preferred over value based methods because what? Overheads are generally driven by volume. What volume method to be used depends on the nature of the industry. If it is a machine intensive, machine hour rate, labor intensive, labor hour rate, and output intensive, number of units produced. Get me the answer. What is the overhead absorbed for the job? 1 minute. One lakh. What is the OAR? This is per year. This is per month. Be careful about all this. Per month and per year. So my OAR is 12. I've spent how much time? 15,000 hours. So 15,000 into 12 is 1 lakh 80. In a hurry, you will do 15,000 into 1 in exam. You will get it wrong. 15,000 into 12. Go through this. Try to get the OAR. 1 minute time for you. Try to get the OAR. Try to get the OAR. What is the formula for OAR? Budgeted overheads by budgeted suitable base. The suitable base here is going to be direct labor hours because the option says that 50 workers planned for 300 into 8. In that, based on the earlier trend, absenteeism is how much? 10 days and annual leave is 20 days. So 30 days is gone. So number of denominators 50 into 270 days into 270 days into 8 hours. What's the number denominator? 1 lakh? 15 lakh 12 divided by 1 lakh 8,000 is 14 per DLH. Any doubts in this? Get answer to this. It's a very simple one. You need to multiply two numbers and add it. What's the answer you got? Okay, product A requires 20 labor hours and 10 machine hours from department A. What is the OAR for department A? 10 per. So let's just focus on machine hour. Don't focus on labor hours. Don't focus on labor hours. Labor hours will go for over direct labor calculation. So this is 10 into 10. What is the OAR for department B? 15 per labor hour. 15 per labor hour. So 15 into 15. Answer is other data is of no use. The other data given there is of no use. I have purposely added the other data there. What is focus is 10 per machine hour. So multiply with machine hour. 15 per labor hour. Multiply with labor hour. Other data is of no use. Any doubts on this? Clear? Now the denominator which I use, the OAR, there are different forms of capacity. One is called maximum capacity, where we are going to work for all 365 days. No idle time, no breakdown, no holiday, no leave, nothing is going to be there. That's called maximum capacity, or installed capacity, or rated capacity. Second is called practical capacity, where you subtract all of the Sunday working, Sunday holiday, maintenance, all that. Normal capacity is based on expected sales, and actual capacity is whatever you are actually achieving. But I cannot do anything because the headache for me is actual capacity is something I'll know only at the end of the year. So I cannot use actual, and these capacity can be called as maximum. If it's DLH, it's called maximum DLH, practical DLH, normal DLH, actual. If it's machine hours, maximum machine hours, practical machine hours, normal machine hours, actual machine hours. If it's units, maximum units, practical units, you can do any way you want. Now try to tell me the answer to this. Think and tell me the answer to this. Okay, what is the difference between maximum and practical? First tell me, what's the difference between maximum and practical called? The holiday, Sunday maintenance. Practical and normal. Practical and normal, the gap is called I don't want to use full capacity, underutilized capacity or idle capacity. So that is what is given here. Practical capacity, see, practical minus normal is equal to my idle capacity. Is equal to my idle capacity. I have a capacity of 1 lakh hours, but I'm saying I'll use only 80,000. I'll use only 80,000, 20,000. I want to keep it idle. So if idle comes this side, normal capacity is equal to practical minus the estimated idle capacity. Estimated idle capacity. Treatment of under or over absorption. Under or over absorption can arise because I use OAR, which is budget by budget, and actual OAR is actual by actual. There can be a difference. This difference can lead to under recovery or over recovery. First, I'll have to find what is overheads incurred. In overheads incurred, we'll have to remove abnormal items. If some award of labor court is there, some penalties are there, remove all of that and find out adjusted overheads incurred. Second thing is overhead absorbed. What is overhead absorbed? OAR multiplied with the actual labor hours, actual machine hours, whatever is the base. The gap is called under recovered or over recovered. If there, let's assume it's under recovery or over recovery, one of them. If it's under recovery, normal reasons, abnormal reason. Abnormal reason, take it to costing P&L. Costing P&L debit to overhead control account because it's a loss I'm debiting. Normal reason, calculate supplementary recovery rate. What is supplementary recovery rate? Amount of normal under absorption, amount of normal under absorption divided by amount of normal under absorption divided by units produced including the WIP. What is units produced including WIP? Units sold plus units unsold plus WIP units equivalent. WIP units equivalent. Once you get the supplementary recovery rate, you will have to multiply this with units sold for cost of sales, units unsold for FG, and units in WIP. Units in WIP for WIP control. This is for your under absorption. Over absorption, exact opposite entry. Sometimes if the amount is very small, I don't want to do any analysis. I don't want to do any analysis. Take the entire amount to costing P&L. Think and let me know answer to this. Put some numbers and check, otherwise you will not get an answer. Put some numbers. Assume some numbers and check. Let me know what's the answer, but it is better if you assume a number and then do. For your discussion, you can say budget is 1 lakh units, sorry, 1 lakh overhead, 1000 units. 1 lakh is the budgeted overhead, number of units is 1000. Actual is 1,25,000 and number of units is 1400. You then evaluate. Just a number I've taken. 1 lakh rupees, 1000 unit, 1,25,000 and 1400 units. Under recovery, over recovery, or neither. What will this result in? There are only two choices, so don't give me a logic to your answer. What's the answer? What is the OAR? First, tell me the OAR. Budgeted overheads divided by budgeted units. My OAR can be anything. So here units is my OAR. So 1 lakh divided by 1000 is how much? 100. Overhead absorbed is 100 into 1400 units. 100 into 1400 units. You have absorbed 1 lakh 40. Incurred only 1 lakh 25. Incurred only 1 lakh 25. I told take some number. My OAR is not machine hours, labor as always. OAR can be number of units also. So my denominator is number of units. My OAR is 100. Absorbed is 100 into what? 1 lakh, sorry, 100 into 1400 units, which is what? 1 lakh 40,000. You have incurred how much? 1 lakh 25,000. Gap is how much? 15,000, which is over absorption, which is a over absorption. Any doubts on this? In short, if you produce more than the cost increase, if I see Bharadwaj Institute has a cost increase of 20%, but we got 40% more students, we would have recovered more cost from the student. We would have recovered more cost. Go through this and then tell me the answer. Under or over absorbed amount. Please do the calculation. All this we have already done. So I really don't want to explain much here. Tell me the under or over absorbed number. There's a lot of irrelevant data there. What is the OAR? 16 point. Overhead absorbed is this into 10,000. 16.5 into 16 point. Okay, 16.25 into 10,000. So we have absorbed 1 lakh and incurred how much? So over applied by how much? 25,000. Over applied by 25,000. Get the answer. There's nothing is there. 30 seconds, not even more than that. How much is the overhead absorbed? 1.25 into 2 lakh hours. 1.25 into 2 lakh hours. 2 lakh 50,000. Incurred 4 lakh. Under absorbed by how much? Under absorption of 1 lakh 50. Try to get answer to this. You will have to do proper analysis of this. Take a little bit of time and do it. I'll wait for 2-3 minutes. Please do, guys. It's for you to do. It's revision is not for me. It's for you to do. Try it, please. All concepts are done in class. It's not new concept. That's why I want you to keep practicing the MCQs part to be in touch with the subject or the chapter. What is the amount of under absorption they've said? In this Abnormal reason is how much? This will go directly to P&L, reduce my profit. Normal reason is, which is 60,000, divided by units sold 8,000, units unsold 9,000 fully completed units. In that 8,000 are sold. WIP is, so my supplementary recovery rate is 6. In this 6, 1,000 will go to FG, 1,000 will go to WIP, 1,000 will go to FG, 1,000 will go to WIP. 6 into 1,000, 6 into 1,000. And to COS, what will go? 6 into 8,000, which is how much? 48,000. So profit will go down by this 90,000 as well as 48,000. 90,000 as well as 48,000. So profit will decrease by how much? Any doubts on this? Tell me the answer to this. Production overheads are absorbed using what? DLH. Budgeted production overhead is 4 lakh 86. Actual is 1 lakh. Actual amounted to 5 lakh 16, and we have done what? Over absorption by 24,000. So actual is 516. We would have absorbed how much? 5 lakh. That divided by 1 lakh. That divided by 1 lakh is my OAR. How much is the OAR? 5.4. Budgeted production overhead is how much? 4 lakh 86 divided by 5.4. Divide by 5.4. It's a very lengthy calculation. What's the number? 90,000. Any doubts on this? Give me answer to this. What is the OAR? 30 into what? 17,040. That will give you the overhead absorbed figure. What is the overhead absorbed? 5 lakh 200. And we have 5 lakh 20. So there is an under recovery of how much? 8,800. Any doubts on this? Then we learned machine hour rate, because specifically we did a discussion on machine hour rate, because this is the most commonly used method of absorbing overhead. What it said is, you consider all expenses relating to the machine as part of overhead, even the labor expenses, and we calculate a comprehensive machine hour rate. What is comprehensive? Is considering all expenses of operating the machine. That's my numerator. Denominator is effective machine hours. What is effective machine hours? Is total machine hours minus some holidays, minus breakdown, minus repairs, minus preventive maintenance. Consider all that in the denominator. So budgeted expenses of operating machine will include all expenses in relation to machine such as depreciation, insurance, maintenance, labor costs, consumables. Effective machine hours is total machine hours minus what? Normal loss. Don't subtract the abnormal. Don't subtract the abnormal. Tell me this answer. Do calculation, okay? It will take you some time. Read it carefully and tell me the answer. Be a little cautious. Single machine for a month. Be a little cautious. What's the answer? Sorry? Okay, first I'll convert everything into a year. 25,000 into 4, 1 lakh. This into 2, 2 lakh. This into 12, 2 lakh, 40. All put together how much? 5 lakh, 40. Divided by 12 is how much? This is for 10 machines. This is for 10 machine. I'll have to apportion it to a single machine. So 45,000 into 1 by 10, 4,500. Any doubts on this? Tell me the answer to this. We did this in one of the question. Spare parts expenditure analysis. We did in one question. I had explained there. You let me know the answer. First, you'll have to give effect to either the price or the volume, and then on the revised amount, the next effect. So 10,000 plus 25% I give effect. I get 12,500 and add 40% on 12,500. Add 40% on 12,500. I'll get 17,500. If you give individual effect, you will end up getting it as 16,500, which is wrong. You'll have to give effect of both. Any doubts on this? Get me the effective machine hours. Get the effective machine hours. Do calculations, guys. You'll have to do it. It's not for me to do. So only request is keep revising it with this book so that you are able to complete the preparation and revision. Option first is possible working hours. What is possible working hours? Is 44 hours into how many weeks? Because it's an MCQ, I've given there saying that extra is a Thursday. Extra Thursday means you'll get 8 hours. If it's an extra Saturday means you'll get 4 hours, and extra Sunday means you'll get no extra hours. What's the total of this? 2296. In this, I'll operate at what capacity? So 2296 into 90% is how much? 20. In that, I'll have to subtract 10% breakdown allowance. In this, I'll have to subtract 10% breakdown allowance. What is, which is 1859.76. Now, a machine can be used for three purposes. One, it can be running. Second, it can be under maintenance. Third, it can be under setting up. If machine is running, it will be part of my machine hours, and power cost is incurred. If it's under maintenance, it's not part of my machine hours and power cost is not incurred. And if it is under setting up, you can take an assumption. If you assume it is part of machine hours, power cost is incurred. If you assume it's not part of machine hours, power cost is not incurred. That is, you can assume it to be productive or non-productive. You can assume it to be productive or non-productive. Question can tell other way around also. There are problems where they've said power is incurred for maintenance, power is incurred for setting up, but it is non-productive. So question can tell other way around, but rule is simple. Running time, power is incurred, maintenance time, power cost is not incurred, and setting up time based on assumption. Based on assumption. Tell me the answer to this. Calculate and let me know the answer. Just give me a minute. You keep doing it. I'll have to. Let me quickly close it. What's the answer to this? 3 lakhs, because power will not be incurred. Power will not be incurred for what? Power is not incurred for your maintenance and setting up. Power is not incurred for maintenance and setting up. Give me the answer to this. A machine has total machine hours of 2500. Machine was under maintenance for 200. Setting up is 100. Setting up is time what? Unproductive. So 2500 minus 200 minus 100. Then I have a category called multiple machine hour rate. What is multiple machine hour rate? Is in this case, a machine could be performing two operations. That is a black and white printing under color printing. I gave steps little differently. We'll calculate common cost, we'll calculate specific cost and distribute the common cost to the specific activity on the basis of number of hours, and then finally calculate the overhead absorption rate. So you'll have specific cost plus distributed common cost, get the total cost, divide by the number of hours. Now let's look at this. USP Limited is the manufacturer of double grip motorcycle tires. It undertakes 3 different jobs: vulcanizing, brushing. We did this in the class. All of the 3 jobs require the use of a special machine and robo. The cost of operating the machine is 42,000. Robo is 45,000. Machine is operational for 1,500 hours and without robo for 2,000 hours. What is the machine hour rate of machine and robo? Please get me the answer to this. What is the machine hour rate for the machine and the robo? What is the denominator of machine hours? You'll have to add both, 3,500. So the cost of operating the machine is 42,000 divided by 3,500 is 12, and robo is 45,000 divided by 2,000, 22.5. Question can say what is the combined rate? Combined rate is adding them together, it will become 34.5. That is, what is the MHR when robo is used and what is the MHR when robo is not used? If robo is getting used with machine, technically my rate combined is 34.5, and if it's getting used without robo, then my rate is 12 rupees. Any doubts on this? With this, the revision of overheads part is over. Again, I'll repeat only one thing. Keep going through this book on a regular basis. Spend half an hour of the earlier chapters which got over, solve all the MCQ and mark the question which you want to do at the revision stage. Please mark it now itself, then only you'll be able to complete revision of this subject, otherwise it will become too much lengthy in the end. I'll end with this then. Okay, let's go through the revision of activity based costing chapter. As such, a slightly smaller topic, not much is there. I have only few concepts to discuss. Guys, please. ABC versus traditional method of costing. We have an approach called traditional method of costing, which is your chapter 4, where overheads is absorbed on the basis of units produced, single driver rather than having multiple driver. So when you have a single driver, you are calculating one OAR and absorbing the overheads. We shifted to ABC. ABC says overhead cost to various activities, and then from activity to the end product using CDR, multiple CDR, using multiple CDR. ABC improves the accuracy of costing, and ABC will tell you what is the accurate cost of a product or accurate price of a product. How are we doing it? We first follow the traditional method. In traditional method, first you'll have to calculate the OAR under traditional method, budgeted overheads, suitable base, which can be machine hours, labor hours, units produced, material cost, labor cost, COGS. We have seen multiple things. Whichever is the driver, budgeted overheads, suitable base, budgeted suitable base, and OAR. One thing you'll have to ensure is if this is for a year, suitable base should also be for a year. Sometimes one could be for a month, other one could be for a year. Ensure consistency. Once that is done, I'll have to calculate the cost per unit as well as total cost, material cost per unit, labor cost per unit. Overhead cost is equal to actual labor hours or actual machine hours or actual units produced into the OAR. That will give you the cost per unit. Sometimes that can give you the total cost because everything would have been given for overall units. Sometimes they'll give it for per unit. If you get total cost, divide by number of units, and if you get cost per unit, multiply with the number of units and get the other item. This is as far as the traditional method is concerned. Fairly simple approach of traditional method. Then I shift to ABC. When I shift to ABC, I have particulars is called activity, budgeted overheads is called total cost, suitable base is called cost driver name, budgeted suitable base is called cost driver quantity, and OAR is called cost driver rate. We write this row wise, this we write column wise. We write it as 5 columns. Here we write it as 5 different rows. Can I write it row wise? Yes, do it. Then open extra columns. Then open extra columns if you want. So activity particulars is replaced with a name called activity. Budgeted overheads is replaced with a name called total cost. Suitable base is called cost driver quantity. Budgeted suitable base is called cost driver name, and OAR is called cost driver rate. We can have multiple activities which are there. Some question, they may not give you the total cost directly. Then you will have to do technically like primary overhead distribution. They may give cost like technical staff salary, dispatch staff salary, machine operation, machine maintenance, split in some ratio given in the question, and get the cost of the activities. Get the cost of the activity. Once you get the cost of the activity, particulars, activity and total cost is over. Find out the CD name. The cost driver can be different for different cost. We have seen lot of questions. These are usual ones. Machining, machine hours, setting up, number of production run, store receiving, requisition raised, inspection, number of production run, material handling, orders executed, number of movements, weight of material handled, assembling, DLH, order processing, orders executed, material procurement, number of purchase order, maintenance, maintenance hours, quality control, number of inspection, number of batches, number of machine operations. It can be anything, and I told you to write this in your notebook and add extra points. Add extra points. When you have solved problem, you could have got some extra point. These are usual cost driver name. Depending on the question data, the CD name can change because the question can give some other information. Let's follow whatever the question gives us the cost driver name. Once the cost driver name is done, repeat the step 3 in step 4. What is repeating? Copy the activity, that is particulars, product A, CDQ amount, product B, CDQ amount. Whatever activity is there, copy paste and write CDQ of A, B, C, D. Add up all the CDQ and that will become the step 3 CDQ. Add up all the CDQ of product A, B, C and D, and that will become the CDQ for your step 3. That will become the CDQ for your step 3. Get the CDR and copy paste the CDR here. CDQ into CDR. CDQ into CDR. This is what we do. CD name, CD quantity. What is the CD quantity? Total of this and this. Total of this and this. Whatever activity you write here, same here you'll write. Same activity will get copy pasted. Some question, they may not give data for all products. If they have not given data for a company may have 100 product, they will not give data for all product. If not given, let's not worry about it. Let's do step 3 separately. Step 4, addition will not work. Otherwise, you can add it up and then write the CDQ there. Get the CDR. Absorb the overheads of product A, product B, product C. The total of the overheads of A, B, C, D all put together will match the budgeted overhead figure. Will match the budgeted overhead figure of the company. Budgeted overhead figure of the company, or the total cost of activity 1, 2, 3, 4, 5, 6 will have to match the budgeted overhead figure given there. Will have to match the budgeted overhead figure given there. Then I calculate my cost per unit in the normal manner. Overhead will change. If I have data on all products, total of total cost under traditional method and the ABC method will match. Total of total cost under the traditional method and the ABC method is going to match. Beyond this, I don't have anything in activity based costing. I've discussed what is ABC. We'll do some MCQs to get little bit more clarity, but otherwise activity based costing is only this much. The initial set of topics which we have done has at least more concept. Now onwards, lot of chapters are going to be very standardized. I may not have much to do. When I did cost accounting system, I told journal entry you will do reconciliation and close it. That's all. So every topic now onwards will have 2-3 concepts, unless I move to chapter 13, 14 and 15, where you will have a lot of extra things. But otherwise, it's going to become now standardized. We may not have different unique type of question. Let's see this now. OAR is 100 per machine hour. Budgeted machine hours are 2000. Cost related to setup and inspection is equal. Relating to machinery is 20%. Material handling is 50%. What is the total setup cost? I'll wait for a minute. You get it, otherwise I'll explain. You try getting it, else I'll explain. What is the total setup cost figure? I'll wait for a minute. If you have got it, let me know, else I'll take you through in a minute. What's the answer? 70, 100 into 2000 is my budgeted overhead. Split into 4. Setup, inspection, machinery and material handling. Machinery and material handling. Machinery is 20% of the production overhead, which is 40,000. Material handling is 50% of this. Material handling is 50%, which is leftover is 1,40,000. In that 1,40,000, half is inspection and half is cost related to setup and inspection bears equal percentage. The percentage they did not say. Of the balance 140, 70,000 will go to setup, 70,000 will go to inspection, and we are done. 70,000 will go to setup, 70,000 will go to inspection. We have done this in one comprehensive question. The question was just focusing on this item alone. So as long as you are able to solve the MCQ, that question is solved. Any doubts on this? The company has produced 12,000 units. Batch size for manufacturing is 200. Company has incurred setup cost. What is the cost driver rate for setup activity? 30 seconds. The cost driver rate. Calculate the rate. Calculate the CDR. 30 seconds. Calculate the cost driver rate. How much? 12,000 units are produced. Batch size is how much? 200. 12,000 divided by 200 is 60 batches. 60,000 divided by 60 batches. 60,000 divided by 60 batches. Just give me. ठीक, I think this got repeated. Get me the answer for this. One minute. My overhead is 6 into 5 lakh, which is how much? 30 lakh. In that 20% is inspection. How much is inspection? 6 lakh. Divide by how many inspection hours? 1 lakh. So I get, what is the rate? 6 per hour. Any doubts on this? Get me the answer to this. One minute. Take 1 minute of your time. Step 3 and step 4 you'll have to do, but in a quick manner. How much you said? 650. First is CDR. 3 lakh divided by 600 is how much? Second CDR. 10 lakh divided by 50,000. CDR into CDQ. CDR into CDQ. 500 into 400 plus 20 into 20 to 500. What's the total? 6 lakh 50,000. Good problem. Slightly extra calculation. Take your time and let me know. Little bit of extra computation is needed. Some amount of extra calculation. Do it. If anybody has got the answer, let me know. Sorry, 6,000. I'm not sure. Let's, sorry, 5,000. Let's first calculate. See, let's calculate the CDR. What is CDR? 30,000 divided by 500 by 50, 10 batches. 2,000 divided by 100, 20 batches. 3,000 divided by 100. So denominator is 10 plus 20 plus 30. What is the CDR? 30,000 divided by 600 is, sorry, 60 is 500. We are doing it for material A. 500 into how many batches? 10. 500 into 10 batches. The batch size is different for machine product A, product B, and product C. I have given a different batch size. We have not done questions around it, but I see I can ask simple adjustments like this. So the batch size is different for different products. Any doubts on this? 500 into 10 batches, 5,000 will get allotted. Okay, get this. We have done this in one of the question. Get the answer to this. This is how your MCQs would be. It will be picked only from your main questions. If you can do this, automatically that question is taken care of. Overall weight in kgs or for both products. Get quickly do it. Start doing calculation. Looking at the screen will not give you the answer. Please start doing calculation. 1 3. Let others complete it. The raw material component of oil 100 ml will be written as 80 grams. 100 ml will become 80 grams because they've said 1 liter of oil is equal to 0.80 kg. Butter will be 50 grams as it is, and water 200 ml will be called 200 grams. 200 ml will be called 200 grams because they have said filtered water is equivalent to 1 kg as it is. 1 kg 1 liter is equal to 1 kg. So all put together, raw material for material A is 330 grams, material B is 500 grams, 330 is 0.33 kg, 500 is 0.5 kg. 0.33 into 1000 plus 0.50 into 2000. 0.33 into 1000 plus 0.50 into 2000. Any doubts on this? Okay, try doing this. Good question. Try to do it in a diagram form, you'll get the answer. Try to split it using a graph, using a chart, sorry, using a chart, you'll get the answer. This was the second or the third question we did. $50. I have 1 lakh. I split into 3. What are the 3 they've given? Production, sales, sorry, production, stores, maintenance. Production is how much? Stores, maintenance, maintenance further breakup. Maintenance is further broken into what? Production, stores, setting up. Production, stores, and setting up. Production will go 8,000. Stores will be 10,000. Setting up will be, so 50 plus 8 will go to production, 58. Stores will take 30 plus 10. 30 plus 10, which is 40, and setting up will take balance 2000. Setting up will take balance 2000. Any doubts on this? If you do it this way, we had a problem where we had to do this adjustment. Any doubts on this? Get me the answer to this. It is, it's 120. This is what per month if you want convert this as 10,000 per month, if you want convert this as 10,000 per month, divide and get the answer, or multiply this with 12, multiply the first one with 12 and leave the 120 as it is. That's your wish, whichever way you want to adjust. You want to adjust the machining cost or you want to adjust the machine hours. I leave it to you, but one of them has to be adjusted. Get me the answer to this. What will be the R&D cost per quarter? How much? Fairly simple. 7,000. It's basically 24,000 units equal to 60,000. 3,000 units is equal to question mark. 3,000 units is equal to question mark, or 3,000 units per quarter means 8 quarters it will take. It will take 8 quarter. So overall 60,000 divided by 8 quarter will give me the cost per quarter. Divide by 8 quarters will give me the cost per quarter. As per ABC method. Get me the answer. Get the CDR, multiply with the CDQs. Get the cost driver rate and then multiply with the CDQ. Which one? 1 lakh, 160 and 375. Let's quickly check. 4 lakh divide by what? 320. Second one 135. 270. How much? See, if this comes as an MCQ in exam, I'll do only one product because I get answer for one product. Other one is automatically done. In exam, I need not try doing for both the products. In case time is there to check your answer, you can do it, but otherwise one product is sufficient. 1250 into 100 plus 500 into 70. 1250 into 100 plus 500 into 70. We get 1,60,000. Other one automatically will become the next 375. Any doubts on this? Now, as I've been telling in every chapter, please mark those questions now itself. You will not need to solve more questions. I know the number of questions I expect from you. Every chapter, if I have discussed 20 questions in a chapter, you should be able to streamline this to down by 1 by 5. 20 questions means ideally you should pick only 4 questions from that chapter. I don't see you doing more than that. For example, some chapters we had 50 questions. You should have picked 10 questions because most of the adjustments are there in my MCQ. Most of the adjustments are there in MCQ. We had a problem where that filtered water adjustment was there. I don't expect you to see that problem. There was a problem where we were bifurcating the cost and then doing the calculation. That is also there in MCQ. I don't expect you to see that again. So please mark this now itself. Later on, if you say it is becoming very tough to manage, I cannot help it. Today, if you mark those questions, it will be easy. At best, you can do 1 by 4. 1 by 5 is what I would want. If 20 questions are there, 4 pick it up. If you are not able to pick 4, then you may go for 1. Just 20% is just a broad number. Some up and down you can do, but pick your questions now itself. Today I have completed this chapter revision. Please open what is there in the activity based costing question. See if there's any unique question, mark them. Any question where you want to practice the entire calculation, mark which question you want to practice. There was one question on that hair clip problem which was very unique. Mark it. Please mark those questions, because some unique question I could not convert into MCQ, which I have not converted. By now you will know which has not been converted, which has been converted into MCQ. Start marking it now itself, because some of you could be writing now, some of you could be writing later. Revision will become a challenge otherwise. Clear? I'll end with this then. Okay, let's do the revision of chapter 7, which is your cost accounting system, where we learned initially that there are two methods of maintaining your books of accounts. One, we have non-integrated system and integrated system. Under integrated system, I maintain costing data and financial data using same system. So when I maintain it together, it will give me costing profit, it will also give me financial profit, and there is no need for a reconciliation. Basic logic is the data will give me a cost sheet which will show a different profit, and the data will also give me a financial P&L which is going to show a different profit. Both will not show same profit, but it's auto reconcile. There's no separate need for a reconciliation under an integrated system. Non-integrated system, because we maintain it separately, there's a need for reconciliation. So integrated system, single set of books, no need for reconciliation. Non-integrated, separately maintained, there's a need for reconciliation. Then we started with journal entries under non-integrated system. Integrated system is very simple. Wherever you see a word called cost ledger control or general ledger adjustment account, you'll have to replace that with the proper ledger which used to be there in your financial accounting. What is proper ledger? Can be a bank account, can be a sundry debtor, sundry creditor, fixed asset account, capital account, whatever ledger is there, please maintain that ledger. Non-integrated system does not maintain those ledgers. We started with journal entries relating to raw material. So how did we do? We started with purchase of raw material. You will have to participate. Purchase of raw material. What's the journal entry for this? Stores ledger control account debit to general ledger adjustment account. See, entries relating to raw material, very simple. If raw material value goes up, debit it. Raw material value goes down, credit it. So raw material purchased, value goes up, debit SLC, credit GL adjustment. Issue of raw material to production, WIP control account debit to stores ledger control account. Logic is very simple. Stores ledger will go down, so I'm crediting it. WIP will go up. Issue of raw material for factory maintenance, factory overhead control account debit to stores ledger control account. Issue of raw material for corporate office, administration overhead control account debit to stores ledger control account. Normal loss of raw material, factory overhead control account debit to stores ledger. Normal losses going to a factory overhead. Abnormal gain of raw material, abnormal gain of raw material. Stores ledger control account debit. I have just changed the entry. Stores ledger control account debit to your costing P&L. In the P&L will be credited. In the P&L it is going to be credited. Sale of raw material, general ledger adjustment account debit to your stores ledger control account. SLC will go down. SLC will go down. Return of raw material from production, stores ledger control account debit to WIP control account. Stores ledger control account debit to your WIP control account. Logic is very simple. Now my stores value will go up. Transfer of raw material from one WIP to second WIP. No entry. It's just transfer from one batch to another batch. Return of raw material to vendor, general ledger adjustment account to stores ledger control account. This will be credited in my SLC account because raw material is going to go down. Any doubts on this? These are my entries. First is purchase of raw material, purchase return I have discussed, issue of raw material to production discussed, return of raw material discussed, normal loss discussed, abnormal loss discussed, issue of raw material for maintenance. Okay, purchases for special job. What is purchase for special job is you don't even bring it to go down, directly issue to WIP. Directly issue this to WIP. So WIP control account debit to your general ledger adjustment account or cost ledger control account. We may use different names. Then comes your entries relating to direct labor. Wages paid. Wages paid. What's the entry? Wages control account debit to cost ledger control account. In the wages, there's something direct wages, something is indirect wages. Direct wages will go to which account? WIP control account debit direct wages. factory overhead control account debit indirect wages to wages control account. Wages control should balance. In case it's not balancing, there can be something which is indirect still, that will go to your factory overhead control account. Non-productive time of direct workers. Non-productive time of direct workers is treated as non-productive time of direct workers is treated as what? Factory overhead. It's treated as factory overhead. Some question, they'll say wages paid. They'll not mention whether it is direct wages or indirect wages. So there could be a need for assumption. They'll say wages paid, then they'll say indirect wages. The wages paid may include the indirect wages, may not include the indirect wages. So an assumption could be needed. So payment of wages, analysis of wages. Okay, if there is abnormal idle time, take it to costing P&L. Take that to costing P&L. Normal idle time will again go to your factory overhead. Normal idle time will go to factory overhead. Any direct expense, please record it in WIP control account. We are going to record that in WIP control account. Example, royalty. Example, royalty. Then comes factory overhead. One is incurrence entry. What is incurrence entry? Factory overhead control account debit to GL adjustment account. Absorption entry. Absorption will go to which account? WIP. WIP control account debit to factory overhead. Under recovery, over recovery, two choices. Either carry it forward to the next year. Whenever we do reconciliation, we will carry it forward. Other question, depending on what is the data. Sometimes there is an opening trial balance. It has a carry forward figure. Please carry it forward to the next year. Carry it forward to the next year. Otherwise, take it to costing P&L. Debit the under recovery and credit your over recovery. Then comes entries relating to WIP. In the WIP, I record direct material in the debit side, direct wages in the debit side, factory overheads in the debit side, and I move this to WIP. I move this to FG. I move this to FG. Completion of production. WIP goes down, FG goes up. FG control account debit to what? WIP control. There can be a normal loss or not normal loss, abnormal loss. Shortage or abnormal gain. There can be a shortage or abnormal gain. In case there's a shortage or gain, take it to what? Costing P&L. You'll have to take that to the costing P&L. Clear? Any doubts on this? Shortage of WIP, there can be a gain also. Then comes entries relating to FG. Before that, admin overhead. Before that, admin overhead. One is incurrence entry. Admin overhead control account debit to your general ledger. And you'll have to absorb this to either FG control account or cost of sales. FG control is AOH relating to production. Cost of sales is general and administrative overhead. Then comes your FG. In FG, in the debit side, I have an opening balance. I took something from WIP. I have a closing balance and balance is sold. Balance is sold. So whenever sales happen, two entries. First entry is recording sales at cost. Second entry is recording sales at selling price. Sales at selling price is very simple. Whatever normal entry you write, GL adjustment account debit to sales account. At cost is cost of sales account debit to FG control account. Cost of sales account debit to FG control. Why are we recording this? To reduce the FG. Return of, that is sales return. Sales return also two entry. One at cost, one at normal price. What is at cost? FG goes up, COS goes down. FG goes up and COS goes down. So FG control account debit to cost of sales account. And the second entry is reversal of sales, which is a normal entry. Sales account debit to your GL adjustment account. Now, in this FG part, there could be an assumption needed. What is assumption is they'll give a cost of sales. That cost of sales could be a gross cost of sales or net cost of sales. Why gross and net? Because there can be returns in the question. So an assumption could be needed. We have taken that in few places. So recording COGS, recording sales at selling price, recording COGS at cost price, recording sales return at selling price. Four entries I've mentioned there. AOH, SOH, AOH entry, incurrence entry, then absorption entry. Selling overhead also incurrence entry and absorption entry. Absorption will go to cost of sales. The final cost of sales will go to costing P&L. Sales will go to costing P&L. Profit or loss will again go back to GL adjustment. Profit or loss will go back to GL adjustment. Any doubts on these entries? Give me answer to this. Exactly 40 seconds for you to do this. Okay, what's the answer? You have done sales of 500 lakh. FG cannot go down by 500. FG cannot go down by 500. First option is removed. Debit cost of sales by 500 and credit FG control by 500. Both are technically same. Both are technically same. That is cost of sales to FG. Credit FG control by what? 400. That is right. FG has to be removed by 400. Why 400? 500 minus 20%. 500 minus 20%. WIP cannot be debited. What has to be credited is FG control. FG will go down. Debiting WIP means WIP will go up. That is not right. Another option can also happen. Debit cost of sales by 400. That is right. Debit cost of sales by 400 lakh. 20 seconds. Where is FOH answer? Very clearly mentioned in the question. No. Maintenance of what? Sales building. Maintenance sales building. We'll have to go to selling overhead. We'll have to go to selling overhead. Where is the confusion? Maintenance of sales building. We'll have to go to selling overhead control account. Sale of raw material will be debited to which account under non-integrated? First tell the journal entry, you will get the answer. Tell the journal entry, tell the journal entry. Cost ledger control account debit to stores ledger control account, to stores ledger control account. So what is debited is cost ledger control account. Royalties debited to which account? Tell me the entry first. WIP control account debit to GL adjustment account. WIP control to GL adjustment. So what is debited is WIP control account. This we did in one question. Valuation of closing WIP. Do this. Valuation of closing WIP. Closing WIP valuation. We have done this in one question. So this was the calculation. Maybe I'm not sure on the answer. Let me just do it. Closing WIP is equal to raw material, wages, overhead. How much is the raw material cost? 10,000. Wages. But one important information, 3 per hour. 3 per hour indicates there are 1000 hours. 3 per hour indicates there are 1000 hours. So overhead is 1000 into 5. All put together 18,000. Tell me the journal entry for sales returns. There are 2 journal entries. Which of this will fit? We don't know. There are 2 journal entries for sales return. What are the 2 journal entries for sales return? Tell me. One is at a cost level, one is at a sales level. One is FG control account debit, cost of sales account. Second entry is sales account debit to GL adjustment account. See which of this is fitting here. Which option you want me to take? Which is the answer? Okay, I think both will have to be done. One is cost of sales return is debited to your FG control account. Cost of sales return is debited to your FG control account, and then sales value is, I think answer will be this. Cost of sales return is debited to your FG control account and sales value is debited to your sales account. From the sales account you will remove the sales value and in FG you will debit and increase the FG value. Increase the FG value. Any doubts on this? Cost of sales return is debited to your FG control account and sales value is debited to your sales account. If you open the sales account, in the debit side you will write this entry, and in your FG control account again in the debit side you will write the entry. Cost will go to FG control and sales value will go to the sales account. Any doubts on this? Normal shortage of material. This is easy. Factory overhead control account. Normal shortage will go to factory overhead control account. Non-productive time of direct workers. Again, it's an indirect wage or technically factory overhead. Indirect wage or factory overhead. Tell me the entry for this. Material, first journal entry. Special job 1500. WIP control account debit to GL adjustment account. Which account will be debited? Now tell me the answer. Special job account or work in process account. Special job account or work in process. Write the, think the journal entry and then give the answer, because they may say which account will be credited also. It can be either ways. Administrative overhead relating to production is to be absorbed into which account? It has to be transferred to FG control account. General and administrative overhead will go to cost of sales account, and relating to production will go to FG control account. Any doubts on this? Then this is my order of closing the accounts. Whenever I do my closing of accounts, first is direct material, which has certain mandatory entries. Opening raw material, purchase, issue to WIP, closing raw material. Apart from this, extra add-ons can be there. Second is wages order, payment entry and transfer to WIP. Transfer to FOH is not mandatory, may be there, may not be there. Then after that, direct expense, I don't have an account. Prime cost, I don't have an account. Factory overhead, mandatory incurrence, mandatory transfer to WIP. Then comes your WIP account, where in the WIP account, mandatory entries are what? Opening WIP, transfer from raw material, transfer from wages, transfer from factory overhead, transfer to FG, and closing WIP and closing WIP. Then comes administrative overhead, incurrence in the debit side, transfer either to FG control account or to COS account. Transfer to FG control account or COS account. Then comes your FG control account. Then comes your FG control account. In FG control account, I have in the debit side, opening FG, transfer from WIP, transfer to COS account, closing FG. Then comes your selling overhead. In the debit side, incurrence entry, credit side, it has to go to COS account. Then comes COS, mandatory in COS is transfer from FG. That administrative overhead SOH is not mandatory, and this will go to costing P&L. Then your sales account, credit side sales, transfer to costing P&L. In the costing P&L, debit side there should be a COS, credit side there should be a sales, and you get profit. Take it to cost CLC account, and then finally close CLC account. Finally, the cost ledger control or general ledger adjustment account. Reconciliation arises because certain transactions are recorded in financial book but not recorded in costing. Example, interest on loan, income tax, dividend paid, interest income, rental income. Certain transactions which are recorded in costing book but not in financial book, all notional item, notional rent, notional salary, opportunity cost. And some items, both books recorded, but in costing you absorb it, in financial you write the proper number. Depreciation, WDV method, SLM method. Closing stock, FIFO method, LIFO method. So there can be difference in the values also. In order to reconcile, I'll have to identify the plus and minus item. If you can go through the transaction, identify plus and minus directly, go ahead and do the question. Else I have a format which says serial number, item causing the difference, figure as per end book, figure as per start book. We write the difference, which is just the sign. Debit is minus, credit is plus, multiply, get the action, and then the amount. So end book, start book. If end book is 10,000, start book is 20,000, 10,000 minus 20,000, just the sign. Just the sign. Is this a debit item or a credit item? I check. No, even if you use the word under recovery, over recovery and all, doesn't matter. That item, is it an expense item or an income item? If it's an expense item, minus, income item is plus, multiply, you get the action, and then write the amount. You can do it in statement form, which is easy to do, or you may do it in account form. In account form, very simple. All minus items will be debited, all plus items will be credited. Give me answer to this. We have done 2 questions around this. One was a homework, one was a class problem. we have done in class. Okay, the requirement is how much is absorbed in my costing book. 1 lakh into 40% is variable. This would have got fully absorbed because variable changes with units. Balance 60,000 is fixed. I would have absorbed 60,000 divided by 60,000 1 per unit. 60,000 divided by 60,000 1 per unit. How many units we have actually produced? So 40,000 absorbed fully and only 50,000 of fixed overhead is absorbed. Only 50,000 of fixed overhead is absorbed. It is absorbed because when I did the cost sheet, I used to write the amount like this. Students ask me saying that why will fixed cost change? Fixed cost is not changing. Only thing is you are not able to recover it fully. You are not able to recover it fully. So fully absorbed based on actual capacity, absorbed on the basis of normal capacity. Answer is 90,000. Please attempt all the four. It's a slightly tricky question. Think about it. Check every scenario and tell me whether it is right or wrong. Under absorption of overheads and cost account, if you start from profit as per financial accounts, that's right. Okay, then I don't have any other discussion to be done. I'll explain what is happening here is costing 80,000. Financial is, so costing has lower cost. Costing has lower cost. If you have lower cost, obviously you'll have what? Higher profit. So this will have high profit. This will have low profit. If you're starting with low profit, you'll have to add the under recovery to get the higher profit. You'll have to add the under recovery to get what? Higher profit. Clear? Able to understand this? See, under recovery will show a higher profit today. Once you shift that under recovery to P&L, profit will go down. Once you shift the under recovery to P&L, profit will go down. Option: over absorption of overheads in cost account. If you start from the profit as per cost accounts, let me write the number. 1,20,000 is costing, 1 lakh is financial. So costing will show, yeah, that is also right. I don't know, maybe it's drafting error. That is also right. Because why that is right is, in costing you are going to have lower profit now. Financial you will have higher profit. You are starting with lower profit. Profit as per cost account. That is the base. On that base, add the over absorption. You will get the profit as per the financial book. So both are right. Maybe it's a drafting error. I don't know. When I drafted, there could be an error here. Give me answer to this. Should be added to the financial profit to arrive at costing. Which one will you add to the financial profit? In case there is a confusion, you will have to write those 8-column format and then do the answer. Last one, A and D both are right, okay? Technically, there's an error there in the drafting. My financial profit to arrive at costing profit, over absorption of admin overhead will lead to lower costing profit. Over absorption of admin overhead will lead to lower costing profit, so I cannot add it. Income tax will lead to lower financial profit. So if this is the base, financial profit will go down. Costing will sit at the same level because income tax is not impacting it. Income tax is not impacting it. So if you're starting with financial profit, add the income tax, that is adding back the income tax. Adding back the income tax, you'll get the costing profit. Any doubts on this? Expenses shown only in financial accounts, it's slightly tricky because I don't know what book I'm starting with. It depends on what book I'm starting with. That is not mentioned in the question. Expenses shown only, okay, they've given here, sorry. Financial is the starting or costing is the starting. It could be a financial starting part or costing starting part. Tell me what's the answer. Add it to the financial profit. If you're starting with the financial profit, it is being booked in financial accounts. Costing will obviously show a better profit. Costing will show a better profit. Profit or loss as per cost accounts. There's only one item of reconciliation. Financial is showing a loss of 10,600. Donation was recorded there. Costing is not recording the donation. So costing will show technically a higher profit or indirectly a lower loss. Higher profit or indirectly it is a lower loss. I'll have to add 6,000. And this is nothing but this item. In reconciliation, items which are only in financial account, items which are only in donation is recorded in financial account, not recorded in costing account. I'm adding back 6,000. I'm adding back 6,000. I'll get loss of 4,600. In case anywhere there is a doubt, you will have to only go through serial number, item causing the difference, figure as per end book, figure as per start book, because I'm not able to do that in detail now. What's the answer? 5,000? I thought 6,200 will be the answer. Let's discuss it. Costing is loss of 5,000 and administration overhead is under absorbed, means costing will have a lower loss as compared to financial. Financial will have a higher loss because in costing you did not record the full amount. In costing you did not record the full amount. If you have not recorded that amount fully in costing, obviously costing is going to show what? A lower loss. So loss of 5,600. Financial should show a loss of added to costing profit to arrive at financial profit. See, B and C is similar. B and C is similar. If you say B is right, then it will become all the three. Think and let me know. I don't know. You'll have to tell me. So it says costing profit 1 lakh. Because of income tax, financial will show more profit or lesser profit. So how can you say add back then? How can you say it is to be added? It says which of the item is to be added to the costing profit to arrive at. It's not added to financial profit to arrive at costing profit. Added to what? Costing profit to arrive at financial profit. If 1 lakh is my costing profit, income tax will only pull down the financial profit. So only option of possible is over absorption of works overhead. Logic for that is very simple. Costing you have recorded it higher. Financial you have recorded that lower. So when you record lower, financial will show a better profit. Financial will show a better profit. Clear? With this discussion is over. I've kind of revised. I'll take a break of around 10 minutes and then we move to the next chapter. Okay. Let's now come to chapter 8, your MCQ revision or concept revision, whatever way you call it. Unit costing and batch costing. What we learnt in this chapter is unit costing is used in those industries where manufacturing is done for identical units, and normally production happens as single unit. Example, paper manufacturing, cement manufacturing, mining. Paper can also go through something called as process costing. You will learn about, because some industries multiple methods of costing are possible. What we do here is do a normal cost sheet, get the total cost, divide by number of units and get to the cost per unit. That's a simple computation which you need to do. We'll have to prepare a normal cost sheet using various cost category. Overhead will have to be absorbed. Using what? appropriate basis. That alone you'll have to take care. Company direct material cost is 10 lakh in the previous year. In the current year, number of employees have increased by 50%. Productivity drop, efficiency is only 80%. Material cost increased by 5%. How much is the direct material cost in current year? I've already done this when I did one of the question. So in these type of question, I had told you to assume something for the last year. How many units have they given in the last year? Have they given the units in the last year? So we'll take it as 100. 100 units, 10 lakh divided by 100 is 10,000 is the material cost per unit of the previous year. This 100 will go up by 50% due to extra recruitment. So I should have got 150. Efficiency is how much? 80%. So 150 into actual production is only 120. Actual production is only 120. What is the formula for efficiency? Efficiency formula is equal to actual output by standard output. I wanted an output of 150, which is my denominator. Efficiency is 80%. Actual is balancing figure. And now next year direct material cost is equal to 120 into 10,000 plus 5% at a per unit level. 5% at a per unit level and not at overall level. At a per unit level. So 10,000 plus 5% is 10,500. Multiply with 120, you get what? 12,60,000. This is technically not a unit costing question. I could have discussed this MCQ anywhere. This is just to test your understanding of change in variable cost and change in fixed cost. Okay, try to get me an answer to this. Again, I have done it as one MCQ. We have done this as one, not MCQ, as one proper question. There was a problem on some steel manufacturing. Good unit, normal price, bad unit, 90% price. I'll wait for a minute. Get me the answer to this. You've already done this, so technically I don't have anything to explain. You're able to pick out this MCQ properly, I think everything will get revised. That's what I've been telling you from the beginning. And this is what will become very useful for revision. Anyone got the answer? Sorry? 1,000. Okay. Anyone else? Sorry? No, not 1,800. Okay, my overall cost is 9 lakh. Profit is what? So cost is 9 lakh. Profit sales is 100. Profit is 50. Cost is 50. So 9 lakh. 18 lakh is my sales. I have produced 1,000 units in which 20% is defective. 800 normal units. 200 defective units. Normal units A. Defective units 0.5A, 800A plus 100A, 900A is equal to 18 lakh, A is equal to 2,000, which is the selling price of a normal unit. Selling price of a normal unit. Defective unit is half of that, which is 1,000 rupees. Defective unit is half of that, which is 1,000 rupees. Any doubts on this? Give me answer to this. I think this and all you should be in a position to tell. Change in variable cost, change in fixed cost. Get me answer to this. Everything is straightforward given there. I'll wait for a minute. These are basics of costing. You should be in a position to handle this. Fixed cost last year is 4 lakh. Last year is 4 lakh. Goes up by how much? 20%. 4 lakh 80. Variable cost last year is 6 lakh, which is of no use. Divide by 100 units, which is 6,000. Add 6,000 by what percentage? 10% and multiply with any change in variable cost means a change in variable cost per unit. Any change in fixed cost means a change in total fixed cost. I would have told this line at least 30 times by now, and I'll keep repeating it, but still students make mistakes. So be very clear on these concepts. You cannot afford to make mistakes here. So this number is 9 lakh 90 plus 4 lakh 80. You get an answer of 14 lakh 70. Give me answer to this. Others. Only two possibility. 10 lakh. I added 60% people. I'll get what? 16 lakh. Rate of wage payment. Some students by mistake may apply it on the original 10 lakh. That will not work. You cannot apply it on the original 10 lakh. Or start with 10 lakh. Apply 10% on the original 10 lakh. You get 11 lakh. And then add 60%. We did this in one example in machine hour rate. There was a spare part example where there was a change in quantity as well as change in price. Apply. You cannot apply both the changes on the base 10 lakh. Apply one change on 10 lakh and the second change on the revised amount. Second change on the revised amount. So 17 lakh 60. Batch costing. Batch costing is exactly similar to your normal costing. The only thing is in batch costing, you follow this where manufacturing happens in batches. The crux of this is calculating EBQ, economic batch quantity, and the cost unit is number of batches. The cost unit is number of batches. Arnav manufactures, owns a bakery which is used to make bakery items like pastry, at least 50 units. Okay, give me the answer. Very simple. Setup cost. Again, we did this in one problem. A fairly simple question. 600 divided by 50, you get 12 into 150, 1800. If it is 610 muffins, what is the setup cost? 610 muffins. It is 610 divided by 50, 12.2 rounded off to 13. Rounded off to 13. Don't tell that I want to do 12.2 and multiply, will not work because the number of batches logically has to be rounded off, and accordingly we'll have to do the calculation. So 13 batches into 150. That is why if you are getting that extra 1-2 units, you will say no, I'm not ready to take up. They'll say minimum quantity we want in multiple of 20, 30, 40, 50, some numbers they'll say. Because even extra one muffin I have to bake, I'll have to incur 150 as the setting up cost. Okay, this we saw in one question. Give me the answer. We have seen this in one problem. Setup cost per run. Setup cost per run was answer. It is 2 hours 20 minutes or 2.3333 hours into the cost per hour is 72 plus 150. 72 plus 150 multiply with 222, you'll get to the answer, whatever is the number. You're getting 350. Is 350 the answer? Or okay, there's a typing error then. What's the answer you get? 51. Okay. Then processing capacity of batch. Okay, how many batches will be done? We have again seen this in some other question. Tell me the number of batches. The MCQs are there only to revise all your problems. Indirectly, you do this, you'll be able to tackle most of the question. Number of batches to meet full demand. What's the answer? It's not 1 lakh divided by 5,000, 2 lakh divided by 5,000. Don't do that because this is what? Units. This is liters. So 1 lakh into 3 is 3 lakh liters divided by 5,000. I think everything is 3 lakh. Second one is also 3 lakh, 2 lakh into 1.5. Third one is also 3 lakh, 5 lakh into 600 divided by 1 lakh, 60 plus 60 plus 60, 180 batches. Then EBQ square root of 2 into annual production, 2 into annual production into setup cost per run divided by holding cost per unit per annum. It is per unit and per annum. You will have to do it per unit per annum. Now, when we are doing this, it's exactly same as your EOQ. So this is the comparison. This annual production was called as annual demand of raw material there, and setup cost per production run was called as ordering cost per order. So I start with annual production, divide by quantity per batch, I'll get number of batches, setup cost per run, total batches, average inventory is quantity per batch or per run divided by 2, multiply with holding cost per unit per annum, you will get your holding cost. At EBQ both will be same. At EBQ both are going to be same. Frequency of ordering or frequency of manufacturing is equal to number of days in a year divided by number of production run. Clear? Any doubts on this? Annual production, I think this example I had done earlier also. 90,000 units, production cost 2120, 60 and 20, setup cost 1500, carrying cost is 5%. How much is EBQ? So EBQ is equal to what? Square root of 2 into annual production is into setup cost is, whenever it's given as a percentage, it's percentage of purchase price there. Here it's a percentage of production cost, which is raw material plus labor plus fixed overhead. 2120 plus 60 plus 20. 1567. 1567. Get me the number of production runs. Monthly production is 10,000. Annual production is 10,000 into 12 divided by 2,000. See, listen, when you do MCQ, good or the bad part is you are exactly focusing on that information. So your mind will tell you that there is a month. When it's a part of a bigger para, that is where you make mistake. I cannot help there. You will have to only be cautious when you read a question, because when you read as a part of a bigger para, you somewhere miss out on reading that word month and you end up writing it as yearly number. That is where students make mistake. The MCQs are breaking it into multiple sub-segment. Your mind is alert enough to find the answer. But when you do it as a part of a bigger question, that is where mistakes are made. That caution is needed. Give me the answer to this. EBQ. Square root of 2 into whatever number you write. Please write that. Two into what? 2 lakh into 10 divided by 1.2, 0.30 per quarter, 0.30 per quarter. Any doubts on this? See, if I, what's the answer for here? Not there in the option. Some error could be there. Just check. No, is it coming at 1000 or 2000? Okay, that's then an error. Not to worry about. 2000 units. Okay, listen. If I want to complicate things, I can give saying that monthly consumption of raw material 10,000. Input output ratio 2:1. So based on raw material consumption, you can go back to production. In EOQ, what you were doing, based on production, you are getting the raw material consumption. So just because they're given a different manner, you should not worry about it. If I want to complicate things, I can give you consumption of raw material, and based on consumption of raw material, you can go back to production. Or I may even say number of labor hours used. Based on labor hours used, go back to production, because we used to calculate standard time with the help of actual production. Now I give you standard time, you calculate the actual production. It can happen either ways. Give me answer to this. Okay, this is good question with a little bit of tricky adjustments there. The problem we did in class as homework, that has lesser adjustment. A good MCQ. One four. Okay, I would want to focus on only annual production. Tell me, what is the annual production? What did you get as annual production? How much? See, market size is 80 lakh. This will increase by how much? So 80 lakh is wrong now. 80 lakh will become. Today I have a 2% share. This is today data, no use. Tomorrow I'll have a data of 3%. So my annual production is 3 lakh. Annual production is 3 lakh. Beyond that is a formality. Annual production is 3 lakh. 2 into 3 lakh into 1000 divided by 3. Get me the answer to this. It should be what is the optimum number of runs, not run size. Run size is called EBQ. Okay. First you calculate the EBQ and then find out the number of runs. What is the EBQ you got? 6,831. 80,000 divided by 6,831 is what? 11 point. I round it off to 12. I round that off to 12. Looking at the options. Otherwise, I wouldn't do rounding off also. Looking at the option, I do rounding off. 6,832, 11.70, rounded off to 12 runs. Rounded off to 12 runs. Any doubts on this? Clear? I continue with the discussion. I'll close the other chapter also, which is your job costing. As far as your unit and batch costing is concerned, fairly simple, straightforward question. Again, the focus would be OAR there. In job costing also, OAR computation is very critical. So job costing is used in those industries where work is done according to specifications of the customer or customized requirements of the customer. A customer will tell, I want exactly this way. So I'll have to produce according to his requirements. That is technically called as job costing. Customized to user requirement, non-repetitive in nature, furniture manufacturing, interior or repairs. Same as normal cost sheet, but important find is finding out a suitable base. The company has an opening job on which material cost of 1000 has been incurred. 2 and 3 was issued for job number 101 with a material cost of 500 and 600. 3 was transferred, material was not needed, and to job number 102. How much is the material cost incurred on job number 101? We just now did this type of a question. Tell me what is the material cost incurred on job number 101. Read and tell me the number. $1,000 was already incurred. Extra how much? Tell me. Requisition number 2 and 3 was issued for job number 101. Requisition number 2 and 3 was issued for job number 101. In that, 2 is for 500 and 3 is for 600. In that, they are saying 3 is transferred. So ignore 3. 2 alone is to be added to the cost. 2 alone is to be added to the cost. So 1000 plus 500. Now these are the various bases I can use for my recovery. Factory overheads, DLH or machine hours or direct wages. AOH relating to production. As I said, if you are starting with, if they say administrative overhead is based on factory cost, write AOH after factory cost. And if they say it's on COP, write it after COP. Get me the answer to this. Prepare a job cost sheet. Prepare a job cost sheet. Quickly prepare a job cost sheet. Should be fairly simple. Get the answer. How much? I don't think so. It's 2 lakh. Just check. Direct material is 50,000. Direct labor is 50,000. Factory overhead is 200% of 50,000. 200% of 50,000, which is what? 1 lakh. Put together, I get 2 lakh. Administrative overhead is 20% of that, which is 2 lakh 40. And profit is into 20 by 80. Into 20 by 80, which is 60,000. Put together, you get 3 lakh rupees. Put together, you get 3 lakh rupees. Any doubts on this? Get me the answer to this. Selling over it. Again, we saw this in one question. Selling overhead of job 101. How much is selling overhead? First, you apply this 15%, you get 30,000 and then add 15%. Or in this 15%, add another 15%. That is, change the OAR itself. 15 plus 15%, if you do in calculator, you will get maybe 17.25% and apply that 17.25 on the base 2 lakh. Whichever way you do, you will get the same answer. Any doubts on this? This we have seen normal loss and abnormal loss. Whatever loss happens in the process which is anticipated is called normal loss, which is goes to an item called as your factory overhead, and abnormal loss will go to costing P&L. I think exactly the same thing. Manufacturing cost 1 lakh, 8% of that is rejected. Realizable value of only 2,000. Rejection value is 8,000. Realizable value is 2,000. Net loss is 6,000. In that net loss, 2% is normal loss, 6% is abnormal loss. So 6,000 in the ratio of 2 is to 6. So if you split this 1500 and 4500, 1500 is called net normal loss transfer to factory overhead. 4500 is net abnormal loss, take it to costing P&L. Clear? Any doubts on this? With this, chapter 8 and 9 is over. I'll take a break of 15 minutes and then we move to the next chapter. Okay, I'll now proceed to costing part. We are done with joint and byproduct costing chapter. So I first revise process costing and then I discuss the homework and other areas. So I'll move to process costing revision. Process costing, when we did, I explained you it is used in those industries where the work goes on in a series of processes, from process 1 to process 2 to process 3. It goes on through series of processes. In those industries, process costing is useful. At the end of every process, a distinct output emerges and that becomes the input for the next process. So process costing is used in those industry where manufacturing goes through series of processes. Output of one process will become input of the next process. Helps in knowing the profitability or cost of each process, and accordingly it can help in better control our decision making. First is we saw non-equivalent units, then we saw equivalent units. When it comes to non-equivalent units, we technically have 2 steps. Equivalent units, we technically have 5 steps. In non-equivalent unit, I'll first do an input-output statement. The input-output statement will indicate the abnormal loss or gain which arises out of the process. Opening stock, add input, you get total input, deduct closing stock, that denotes what is the production we have processed. From there, deduct normal loss, you'll get expected output, actual output, abnormal loss or gain. If my expected is 25,000 and actual is more than 25,000, I'm very happy, abnormal gain. If it's less than 25,000, I'm unhappy, abnormal loss. This normal loss can be a percentage of input, total input, processed production, or actual production. Problem silent, it's a percentage of input. Problem silent, it is a percentage of input. Then the actual output can also be called as processed production minus the actual loss. Processed production minus the actual loss is equal to actual output. Actual loss can also be called as normal loss plus abnormal loss, or normal loss minus abnormal gain. Normal loss is an unavoidable loss, arises due to factors such as evaporation, manufacturing wastage, can be a percentage of input. Follow this if problem is silent. Total input, processed production, or actual output. Abnormal loss arises when actual output is lower than expected output, also means my loss is more than the normal loss. And gain arises if actual output is more than the expected output, and it indirectly means my loss is lower than the normal loss. Then I prepare a process account where particulars, units amount, particulars, units amount. In the debit side we'll have units and amount, credit side also will have units and amount. First write the amount part of the debit side and the units part of the debit side. So to main raw material, to sundry material, to labor, to overhead, everything you write it. Then write the units part alone in the credit side or debit side if you have abnormal gain and all, and check whether units tallies. If it tallies, then cost per good unit is equal to total expense minus sale value of normal loss divided by expected output, divided by the expected output. 200 units are introduced in a process in which 20 units is the normal loss. Actual output is 150. Then there is 200 units introduced. They have not given anything else in the question. Opening stock 0, input 200, total input 200, closing stock 0, process production 200. Normal loss is what? 20, which means I expected 180. Actual 150, which means abnormal gain, abnormal loss. Abnormal loss of how many units? 30 units. Input in process 1, 1 lakh. Normal losses 5%. Actual losses double of normal loss. Actual losses double of normal loss. So input is 1 lakh. What is the normal loss here? 5,000. Actual loss 10,000. Which means till this alone tell me what is the output. What will be the actual output? Actual output will be 90,000. Abnormal loss will be 5,000. Abnormal loss will be 5,000. 2/3 is transferred to process 2. 2/3 is transferred to process through. So of the 90,000, 2/3 is transferred. How much? 1/3 is sold. Actual output in process 2 is what? 54,000. No abnormal loss or gain in which process? Process 2. 60,000 input in process 2. 54,000 output in process 2. What is the normal loss percentage of second process? 10% of input. 60,000 minus 10% is 54,000. 60,000 minus 10% is 54,000. If you do it in table format, you will get the answer. But I am doing a quick discussion. Any doubts in this? Opening stock 1,000. Input 16,000. Closing stock 2,000. Normal loss 5%. Unit scrap 500. How much is the actual output? Visualize the input output statement and tell me what is the actual output. Visualize input output statement in your mind. Visualize input output statement in your mind. What's the answer? Opening stock 1,000, add input 16,000, total input 17,000, closing stock 2000, processed production 15,000. Processed production minus the actual losses, actual output. Processed production minus the actual loss. What is the actual loss? 500. So actual output is what? 14,500. Opening WIP 800. Opening WIP, I'll write this because this is a little tricky. Opening WIP is 800. Input I don't know. Total input I don't know. Closing WIP is 160. Processed production I will get. Then actual losses 1800. Output transfer to warehouses 4200. Output transfer to warehouses 4200. I had given you a formula saying processed production minus actual loss is equal to what? Actual output. Processed production, actual losses 1800, actual output is, so processed production is what? If processed is 6000, reverse working, closing WIP is how much? 160. Total input will be 6160. 6160 minus 160 is 6000. 6160 minus 160 is 6000. Input balancing figure is, in this normal loss is 536, 10%. Normal loss is 10%, 536. Abnormal loss balancing figure 1800 minus 536. This question we did as a fire problem rework. This was exactly the fire problem rework. That's why I said every question I've just copy pasted from there and put it here. Answer is 1264. Any doubts on this? Input of process 1 16,000. Total cost of process 1 90,000. Very good problem. No abnormal loss or gain in process 1. Sale value of normal loss is what? 1. Cost per good unit is 8.4. How much is what? Normal loss percentage. Now listen. What is the formula for cost per good unit? Participate. Cost per good unit is equal to total cost minus divided by expected output. Cost per good unit given in the question is what? 8.4. Total cost is minus sale value of normal loss is 1A. 1A. I don't know the units. Sale value of normal loss is 1A. Expected output is equal to input minus the normal loss. Expected output is equal to input minus the normal loss, which is 16,000. Can you please solve and tell me the A? No abnormal loss, nothing. All that headache is not there in the question. Solve this and tell me what you get as A. $6,000 divided by 16,000 is the normal loss percentage. 6,000 divided by 16,000 is the normal loss percentage, which is what? 37.5. I've done a simultaneous equation too, but it doesn't really matter whichever way you do it. I'll wait for 30 seconds. Give me answer to this. Exactly 30 seconds. You'll have to be faster. If it needs more time, I'll give you, but just 30 seconds. What is the processed production? 9,000 minus 500. 9,000 minus 500 is the actual output. 9,000 minus 500 is the actual output. Normal losses 5% of input. What is 5% of input? 400. Abnormal losses balance 100. Abnormal losses balance 100. So abnormal loss 100. and into what? Under 8,500 units. 100 and 8,500 units. Just read it from here and then give me the answer. This was one homework question for you. You're now opening WIP 10,000, input 2 lakh, 2 lakh 10,000, closing WIP is 20,000, process production is 1 lakh 90, normal loss is 55%, 55% of 2 lakh, which is 1 lakh 10, expected 80, actual is what? 75, abnormal loss of 5,000, abnormal loss of 5,000 units. Input of raw material, output, if the normal loss, okay, not needed. If something is critical, I'll explain. Okay, this is a good problem. ABC manufactures chemical Y that passes through different processes before being converted into final product. Output of each process is transferred to what? Next process. No opening and closing work in progress. Process loss is what? 5% of the total input in each process. Following the details of abnormal loss are gain. You will have to do it in the reverse order now. You'll have to do this in the reverse order. Okay, but they just want the input introduced in which process? No, it's not process 3. I think it's process 1. There's a typing error there. Input introduced in process 1. Let me do this. You'll understand this. A very good problem. Okay. So particulars and 3 process, our usual format which we have. Question says the third process had an output of what? 29,800, and in the third process there is an abnormal loss. If this is abnormal loss, tell me what is this number? 29,800 plus 125 minus 125. Think and then let me know. 29, 9, 29,925. Okay, 29,925. No opening stock, all that is of no use. Technically, see, I'll make it little more simpler. I remove all this. Input less normal loss, that's all. Other things are not there. Input less normal loss is equal to expected output. Input is 100, loss is 5, output is 95. Give me this number now. Not normal loss. This number is 31,500 and normal loss is 1575. This is process 3. This is process 3. This will come here as actual output. 31,500 is the actual output of process 2. 31,500 is the actual output of process 2. Process 2 has an abnormal loss of 135. What will be the expected output? 31,635, again 105. So divided by 95%. 33,300. 1665. First process 50 units abnormal gain. 50 units abnormal gain. Reverse working. 33 250 and 35,000 is the input. 35,000 is the input. We'll have to keep reverse working. We'll have to keep reverse working. Very good problem. Kind of test your reverse working situation. Give me answer to this. A good, not a very tricky one, but a good question. Get me answer to this. Tell me the answer to this. How much? The actual loss is 2000. 12,000 minus 10,000. 12,000 is the input. Output is what? 10,000, which means loss is 2000. In that, losses split as normal, abnormal. Normal is x, abnormal is 0.25x. Abnormal is 0.25x. So split in the ratio of 1 is to 0.25. You will get to the answer of 4 is to 1. Any doubts on this? Give me answer to this. Get me answer to this. Profit is 1/4 on sales. It will become what? 1/3 on cost. We have sold how many units? So 800 units, cost is 1,20,000, because 1000 units cost is 1,50,000. 800 units is 120. On this, profit is 1/3, and closing stock is balance 30,000 rupees. Closing stock is balance 30,000 rupees. One, get me the answer to this. 10 seconds. For calculating cost per good unit, what should I subtract a sale value of normal loss? It's 40 into 10. I'm least bothered what is the actual sales. I'm least bothered what is the actual loss and all. In reality, you can sell only 15 units. We saw one adjustment which will happen. I'll explain that as we proceed. But for doing cost per good unit, it is going to be 40 into 10. 40 into 10. Get me the answer to this. First, get cost per good unit. get cost per good unit. What's the cost per good unit? 2200 minus, is there any sale value of normal loss given? Divided by 550 minus 30. This will give you cost per good unit. Multiply that cost per good unit with 500 good units. That's all. That will give you the value of good units. That will give you the value of good units produced. They have given saying that abnormal spoilage is separately normal spoilage. This is what we normally do. We don't take the normal loss to the P&L, and abnormal loss will be taken to the P&L. They have given some extra commentary on it, but doesn't really matter. For me, what matters is this much only. Balance was just a formality in the question. Okay, certain valuation rules which we saw. Normal loss units into realizable value. Everything else is units into cost price, and if there is a sales given into selling price and recognize profit. Accounting for normal loss, and abnormal gain. First thing is complete double entry posting. Complete double entry posting. Then sale of actual loss. What is actual loss? Processed production minus the actual output, and split that into normal loss, abnormal gain. It can be normal loss and abnormal loss, or normal loss and abnormal gain. If there is a normal loss and abnormal loss, bank account debit to normal loss account to abnormal loss account. And if it is abnormal gain, same entry only, bank account debit to normal loss to abnormal gain, but negative. Negative means take it to the debit side. Abnormal gain account debit, bank account debit to normal loss, and net abnormal loss or gain will go to which account? Costing P&L or P&L. So the net amount which is transferred, net amount is equal to units into what? Cost price minus realizable value. Units into cost price minus realizable value. Normal loss, abnormal loss to process account. This is double entry posting. Sale of actual loss, net abnormal loss will go to P&L, net abnormal gain will go to P&L, and this is an entry between normal loss and abnormal gain. That is what I said. I cannot write negative abnormal gain, so I take it to the debit side. I take that to the debit side. Again, I'm repeating, most important thing is transfer to P&L is equal to units into cost price minus realizable value. There can be a rare question where they gave a realizable value separate for normal loss and abnormal loss. We saw one question like that. So if you have a separate number, please take whatever number is there for abnormal loss or abnormal gain. Very rare scenario, but one question we saw that. This and all is not needed. Same thing we are going to repeat. Give me answer to this. Abnormal loss to be transferred to P&L account. Give me the answer to this. $9,000. It's 500 units into 20 minus 1 rupee, not 3 rupee, minus 1 rupee, because abnormal loss has a realizable value of only 1 per unit. I don't know why they gave, but whatever it is given, let's follow that and then proceed. Give me answer to this. One minute for you to get answer to this. What will you calculate first? Cost per good unit is equal to 160 minus 10 into 0.25 divided by 100 minus 10 divided by 100 minus 10. What's the number? Sorry. Of the 100 units, normal loss is 10%, 90 I should get. I got only what? 80. So 10 units is abnormal loss. They've just asked us to value abnormal loss 17.5. What will get transferred to P&L if they ask? I'll deduct all that and then proceed it. All this is fine. Next, recording of sales and process account. We have two approaches. One, process is a responsibility center. Process is not a responsibility center. If it's a responsibility center, then sales will be recorded in the credit side of the process account, and sales minus cost of sales will be recorded in the debit side as profit for the year. In case it is not a responsibility center, only COS will be recorded in the credit side and sales and cost of sales will be recorded in the debit side. If problem is silent, you can follow either of the approaches. Now, give me answer to this. What should be the answer to this? $700 units you have sold. How should you record this 700 units? Which is the answer? Please tell me. Record cost of sales of 700 accounts in the credit side of process account and record sales in which account? P&L account. Record sales. I said process C is a responsibility center. If C is not a responsibility center, B will also not be a responsibility center. That's a hidden meaning there. B is also not a responsibility center. Normal loss, we saw a question where there was a weight loss and a scrap loss. Weight loss means no realizable value. Scrap loss means there can be a realizable value. We saw one problem on that. Weight loss component arises due to processing loss, no realizable value. Scrap loss is some residue arising out of manufacturing process. This will have what? Realizable value. Equivalent units. Then we move to equivalent units. When we move to equivalent units, we introduced a concept called degree of completion, and where we are going to convert the non-equivalent units into what? Equivalent, fully equivalent units. How do you convert? Non-equivalent units is equal, fully completed equivalent units is equal to normal units into degree of completion. Normal units into the degree of completion. Give me answer to this. Very simple thing. Give me the answer. Equivalent number of units for closing WIP. How much? Sorry? 1800 into what percentage? 80%. That's all. 1800 into 80%. Okay, steps in case of equivalent unit. I'll just discuss the step. I may not discuss any MCQ because they will become very lengthier for us to do. First, you'll have to prepare a process account. Why process account? This will tell you whether it's a one material problem or a two material problem. Then you do input output statement where opening WIP, add input, total input, less closing WIP, process production, less normal loss, expected output, actual output, abnormal loss again. And you calculate an item called unit started and completed in FIFO method. What is unit started and completed? Is units which were started as well as completed in the current year, and the formula for that is units completed transferred to next process minus opening WIP, then whatever items are there in your debit side of the process account, For each of those items, you will have to calculate something called as equivalent units, except for opening WIP. That let's leave it. But if you have two material, write one material column. Sundry material, write one sundry material column. Labor, write one labor column. We saw one problem there, material A, B, C, D, so many things were there. We clubbed it together because writing so many columns is difficult for me to do. Practical world, I can do any number of columns. Excel will kind of take care of it. So for every item of the cost in step 1, prepare a column called DOC equivalent units. First, you will have to write the units part of it. What is the unit? Particulars and units. First is further work on opening WIP, unit started and completed, closing WIP, normal loss, abnormal gain with units and negative. The total of that should match total input. Total of the second column should match what? Total input. Matches, we can move to the next stage. What is the next stage? Degree of completion. Degree of completion for opening WIP is what? 100 minus given percentage. 100 minus given percentage. Degree of completion for unit started and completed is 100% because they started and completed in the current year. Closing WIP given, normal loss 0, abnormal gain 100%, but units are in negative, and abnormal loss, we are going to take a degree of completion as given in the question, not given 100%. Not given is 100%. So you will get equivalent units for each of the category. Needs to be computed for every item of cost seen in the debit side of the process account. If you have 10 debit items, then you need to do 10 separate columns, which can become a little tricky for us to do. Once we are done these items, for every item you calculated equivalent units, you calculate cost per equivalent unit. What is the calculation? Particulars, item 1, item 2, item 3, item 4, item 5, item 6, whatever number of items are there. We'll normally have 3 items: material, labor and overhead. Some question, labor and overheads will be clubbed and called conversion cost. We start with cost incurred, copy from the debit side, less sale value of normal loss, subtracted from labor or overhead. Subtracted from material, you get net cost incurred divided by equivalent units, cost per equivalent unit. Take units from step 3, cost per equivalent unit from step 4, do multiplication, particulars, material, labor, overheads, column wise total, row wise total. The row wise total should match what? Net cost incurred. Row wise total should match net cost incurred. And then in the end, I'll have to value one item called transfer to next process, which is opening WIP plus further work on opening WIP plus what? Unit started and completed. Clear? Any doubts on this? Solving the MCQs will take away a lot of time. You may not be able to follow this discussion, so I'm not solving any MCQ. But at home, my first request to you is today, please close out the MCQs here so that you get a lot of clarity on this area. Lot of good MCQs are there. Then we saw FIFO method and 2 material. In 2 material, I have to make certain changes. Step 1, no change. Step 2, no change. Step 3, particulars, units, material A, DOC equivalent unit. Material B, DOC equivalent unit. Material A, don't look at the question. Material B, labor, overheads, follow whatever the question says. If the question gives some DOC for material, it is only for material B. It's only for material B. Then what should I do for material A? Always 100%. So that opening WIP became 100 minus 100, 0. Normal loss, obviously 0%. Everything else write 100%. Everything else write 100%. Cost per equivalent unit, same format, but particulars, material A, material B, labor, overhead. Sale value of normal loss is to be subtracted only from material A, which is called main material or material 1 for simplification purpose. And then do the multiplication. Clear? Any doubts on this? Give me answer to this. Equivalent units of material 1 and material 2. Equivalent units of material 1 and material 2. Material 1, what's the answer? 500 because 100% complete. Material 1 is always 100% complete. Material 2, follow what the question says. What's the question saying? 80%. Clear? Any doubts on this? So 500 into 80%. Then average cost and one material. Step 1, no change. Step 2, technically no major change. I don't want units started and completed because average cost method does not distinguish between last year production, current year production. It says club everything together. Because unit started and completed is not there, in step 3 I cannot have opening WIP and unit started. Replace with what? Transfer to next process, and degree of completion is 100%. Degree of completion is 100%. Everything else remain same. Second column total has to match total input. All those rules remain same. Step 4, when you do your equivalent cost per equivalent unit calculation, you have to start with opening work in progress. You have to start with what? Opening work in progress. Add the current period cost, total cost, less sale value of normal loss, net cost incurred. And in step 5, step 3 into step 4, no separate valuation of transfer to next process because it is auto valued. And then 2 material problem, same rules. Step 1, no change. Step 2, no unit started and completed. Step 3, degree of completion for material 1 is as per predetermined rule. Material 2, labor, overheads, follow whatever the question says. Material 1, 100% except for normal loss. There's no opening WIP writing here. So normal loss 0%. Everything else take 100%. Calculate cost per equivalent unit. Because average cost, consider opening WIP and sale value of normal loss. Deduct only from where? Material A column. Deduct only from material A column. Clear? Any doubts on this? Then do the multiplication and close it. Which method of valuation to use? Method of valuation is very simple. If the breakup of opening work in progress is available, what is breakup? I want how much is material, how much is labor, how much is overhead. Then I can follow what method? Average cost method. If the degree of completion of opening WIP is available, I can follow which method? FIFO method. Both are available. Choose what. If the problem says something, follow. Certain rules on degree of completion, because some question will say material is started at the beginning of the process, which means material is always 100% complete. Material is always 100% complete. Scrap is identified in the finished state, which means degree of completion for scrap is 100%. Degree of completion for scrap is identification of loss in what? Finished state. Finished state means DOC will be what? 100%. Application of protective packing to what? So if there is any work in progress, DOC for packaging will be 0%. DOC for packaging will be 0% for what item? Work in progress. Material is added at the beginning. Beginning means material is always 100% complete, and others, whatever rule you want to follow, you please follow it. And what happens? Another rule is normal loss is always 0%. Normal loss is always 0%. Inter-process profit. What is inter-process profit? Company is saying, I want you to become a responsibility center. Process 1 is saying, I produce, you tell me to transfer to process 2. How can I make profit? Process 2 transfers to process 3. How can I make profit? Process 3 is the guy who sells, he makes profit. So I tell, no, you will transfer the product at a predetermined price. What is predetermined price? Something the company decides. Whatever cost you incur, whatever price you transfer, balance is your profit. Based on that, I'll pay you bonus. Exam problems which we do are the class problem which we do. The question will say will be transferred at cost plus some profit margin. Cost plus some profit margin. In order to solve this question, we have two things. First, particulars and amount, no units column. Amount will be split into CTC, profit, CTP. All data given in the question is always CTP. Cost to process. Cost to process. Cost to company, add profit, and cost to process. From the CTP column, if you have any profit element, write it and get the CTC component. Get the CTC component. Every problem you will have to understand what is the valuation base. The valuation base can be prime cost, can be factory cost, can be gross works cost, can be cost of sales, anything given in the question. Mostly prime cost is given. So 2 opening stock, 2 material, 2 labor, add everything and call it as valuation base. Deduct closing stock in the ratio of CTC and profit. In the ratio of CTC and profit, that will give you the profit element on closing stock. Then add other overheads, total cost, add profit, total sales, credit side only one item. Credit sales only Credit side is only one item. By process to copy paste the debit side total. No closing stock also. Closing stock is written in the debit side as minus. Closing stock is written in the debit side as minus. Clear? Any doubts on this? Now, transfer price is equal to CTP because that is my cost. CTP, add profit margin which can be on sales, on cost. Accordingly, you calculate and then proceed ahead. Cost to company of process 2 is what? 2 lakh. Cost to process is what? 2 lakh 50. Units are transferred at a profit of 20% on transfer price. What is the value of units transferred? Get me the answer to this. Value of units transferred. Value of units transferred. What's the answer? What's the profit margin? 20% on sales. 1 by 5 on sales will become 1 by 4 on cost. And what is the cost? Cost is 2 lakh 50, not 2 lakh. Cost is 2 lakh 50. My cost is 2 lakh 50. I add 1/4 on that. I always understand cost is CTP. Cost is CTP. Add 1/4 on that. Add 1/4 on that. You get 3 lakh 12,500. Get me answer to this. What is the profit element on closing stock? Imagine that debit side. Imagine the debit side. Valuation based total I've given you. Imagine the debit side. What's the profit element? The total is 75,000. I don't know. That's why I told imagine 15,000, 90,000. Always given a CTP. Split in the ratio of 5:1. 75 is to 15. 75 is to 15, which is what? 2,500. So profit element is 500. Profit element is 500. Also, the final profit here is equal to the final profit. The final profit of the process is equal to profit of process 1, profit of process 2, profit of process 3 plus unrealized profit of opening stock realized now minus the unrealized profit of closing stock, and this number will match in the FG control. In the FG control, you would have got a profit. There it will match. Clear? Any doubts on this? Operation costing is a sub part of the process costing, where every process can be split into multiple operations, and every operation can have a input output ratio or loss. Technically, you'll have to factor that and then do the calculation. Can you get me answer to this? Input added in operation 1. I've explained this when I did questions. Get me answer to this. Let me know the answer to this. What's the answer? You can start with 100. 100 minus 25% is 75. 75 minus 20% is 60. 60 minus 20% is 48. 48 minus 16.67% is 8. So 40 is the final number. 100 input, 40 output. So in place of output, I write 1000. Input will become 2500. Any doubts on this? Clear? So with this gets over. We'll take a break and then start with the next segment. We'll resume at maybe 10 o'clock. I resume at 10. Good morning, friends. Okay, as we have been doing, let me first revise the chapter which we had completed before completing the previous one, which is joint product and byproduct. I'll summarize that first. Then I take you through the homework question of your operating costing, and then we move to the fresh chapter. Now, joint product and byproduct costing is also a method of costing. Nothing for you to refer in your notebook. Please keep listening and refer to the screen. Joint product and byproduct is also a method of costing like the other methods which we saw. This is used in those industries where I use a single raw material. I use a single raw material and it leads to manufacture of two or more products. When I'm using a single raw material and end up producing multiple products, that is a scenario where joint and byproduct would be used. Now, these two products can have almost equal economics. Equal means doesn't mean exact same value. Similar economic significance, 80 rupees, 70 rupees, 1000 rupees, 950 rupees. Similar economic significance, then they are called as joint product. But if one of them is more valuable and the second one is less valuable, or two more valuable, two less valuable, the ones which are more valuable, are called as main product, and the ones which are less valuable are called as byproduct. Main product and byproduct. From our accounting point of view, even byproduct, we were treating it like a main product for accounting purpose. That's how we used to solve the question. Now, one important point in this entire accounting is split off point. This is a very important point because any cost which you incur up to split off point, any cost which you incur up to split off point is called as what? Is called as joint cost, and that needs to be split. That needs to be split among the various joint product or main product and byproduct, and any cost which you incur after the split off point is called as your further processing cost. We have four steps in doing the calculation. First, I'll identify the joint cost, that is all costs incurred till the split off point. Then find out ratio of distribution, which depends on the method we are following for distribution. Distribute the cost in that ratio and prepare income statement, which start with sales less FPC less share of joint cost less selling and distribution expenses, and you'll get profit or loss of the product. A profit, B profit can change based on the method you follow, but overall profit is going to remain same. The overall profit of the organization would remain same irrespective of whichever method we are following. Let's see some question. Sales of all product 2 lakh 50. This is like a reverse working question. Joint cost 167,550. Further processing cost 21,000. Total selling expenses equal to 10% of cost of sales. How much is the selling expenses incurred? Nothing to do with straight away problem solving. It is just to calculate that selling expenses. Question has given certain data points and asked us to calculate what is the selling expenses. How do I do this calculation? What should I write here? This is part of one of the question we did. How do I get to the answer here? Cost of sales is equal to joint cost FPC plus selling expenses. All costs put together is called cost of sales. So COS is equal to 167,550, 21,000 and 0.1 COS. Tell me what is the COS number? 0.1 COS. Tell me the COS number. Solve. Two lakh 9,000. Selling expenses 10% of that 2950. Selling expenses 10% of that, which is 20,950. Any doubts on this? Methods of distribution of joint cost. We have multiple method. Physical measurement method on the basis of number of units produced or number of liters produced or number of kgs produced. Survey method, we are saying I'll give some more weightage to some product and lesser weightage to few products. So we do something called as units multiplied with the weightage points. Units multiplied with the weightage points. Contribution margin or marginal costing. Marginal costing. The term marginal costing method focuses on distributing cost into variable cost and fixed cost, which you'll learn today in marginal costing. Joint cost is to be distributed on the basis of, is to be divided as fixed joint cost and variable. Fixed on the basis of physical measurement, variable on the basis of contribution earned, on the basis of the contribution earned by the product. Sale value at split off, the method name tells you, on the basis of sale value at split off. After further processing, on the basis of sale value after further processing. And NRV, NRV means ultimate sale value minus the FPC, which is the cost incurred to complete the manufacturing, minus the selling expenses, which is the cost incurred to complete the sales, minus FPC, minus the selling expenses, and deduct the estimated profit margin if directly given in the question. In case of joint products, the main objective of accounting is to apportion the joint cost up to the split off point. For cost apportionment, one company has chosen physical quantity method, Joint cost is 3 joint products are produced in the same process up to the point of split off. The total production is 60,000, of which A is 30,000. Joint cost is 360. Can you tell me how much cost will go to product A? Very simple. This is 3,60,000 in the ratio of 30,000 is to B is to C. I don't know B and C. They just wanted A. So all put together is 60,000 kg. So 3,60,000 divided by 60,000 kg into 30,000 kg. A company has produced 600 units of A, 150 units of B, 200 units of C. We did this in the last segment of the chapter. 1 unit of C requires half the raw material needed for 1 unit of B, and 1 unit of A requires 1.5 times the raw material required for product B. How much of the raw material is to be apportioned to product A? Think through and give me the answer. Apportion to product A. Give it a try, guys. If you're not trying, then I can't help it. We have done all of this. You will have to give it a try at least first. We'll go to product A. What's the answer? Guys, you'll have to participate. If you know the answer, at least participate. Right, wrong, doesn't matter. What's the answer? 7,000. It says 600 units, 150 units, 200 units. 1 unit of C requires half of what is needed for A. B is 1. This is half of that. And A is 1.5 of what you need. So when I multiply this, this is the amount of raw material needed. 900 units, 150 units, 100 units. This is the amount of raw material needed. 900, 150 and 100. So expenses 9,200 into 900 divided by 1150. What's the answer you get? 7,200. Any doubts on this? Get me the NRV for this. NRV for this. Estimated profit is given. So in NRV, you'll have to subtract that. NRV of the product. Sorry. 1 lakh minus selling expenses, how much? For the processing cost and Profit on cost is given. I'll convert into sales. Profit on cost is given. I don't know the cost figures. I'll do it on sales. On sales, 25% on cost is 20% on sales. So minus 20,000. NRV is equal to 50,000. Profit margin is to be subtracted in the NRV calculation if directly given in the question. If directly given. Get me answer to this. Very easy one. 30 seconds. Fairly simple one. 1 lakh into 1 lakh is the joint cost into what? What's the ratio? 60,000 is to 90,000. 2 is to 3 is the breakup. So 1 lakh split in the ratio of 2 is to 3 is 40,000 and 60,000. 40,000 and 60,000. Any doubts on this? Variable joint cost is 10,000, which is equally distributed to A and B. Product has sales value of 15,000 and 25,000. How will the fixed joint cost be split under contribution margin method? Under contribution margin. Think and let me know the answer. Contribution margin method. Fixed joint cost under contribution margin method. I explained when I explained the concept sometime back. Contribution margin method. What did the theory say for contribution margin method? Fixed cost is to be distributed on the basis of this concept you cannot mess up. On the basis of contribution. Sales is 15,000, 25,000. I distribute variable joint cost, which is equal distribution. The question has said 10, 20. So 15,000 split in the ratio of 1 is to 2. 15,000 split in the ratio of 1 is to 2. 5,000 will go to product A. 5,000 will go to product A. Decision on further processing is one important segment of the discussion. When I do decision on further processing, that has no linkage with the method used for cost distribution. My joint cost can be distributed on the basis of sale value at split off. I may be selling the product after further processing, or the other way around, you may sell your product at split off, but joint cost is distributed on the basis of sale value after further processing. That's your wish. Both have no linkage at all. In order to do this, we used to calculate incremental revenues, compare with incremental cost, get incremental profit or loss. So sale value after further processing less sale value at split off, you will get incremental revenue. Incremental revenue, deduct incremental cost, and will make incremental profit or loss. If there is an incremental profit, sell after further processing, and if there is an incremental loss, sell it at split off point. This is what we learned in that concept. Also, in case the question has any closing stock information, then do the entire analysis at a per unit level. Do the entire analysis at a per unit level. And in case there is any selling expenses or any loss in processing there, any selling expenses or loss in processing there, then don't do per unit, don't do this, do detailed profit statement. Detailed profit statement, selling it as product at split off, selling it at after further processing, whichever gives you more profit, go ahead with that. A company can decide on further processing by comparing incremental revenues with the incremental cost. Sale value after further processing, sale value at split off, incremental revenue, incremental cost, incremental profit or loss. Now, sale value at split off is 25,000. After further processing is, what's the incremental revenue? 15,000. Further processing cost is, I'm not bothered about the joint cost. I'm not bothered about the joint cost. Incremental profit, loss here. Loss. So product is to be sold at when? At split off point. Cost per good unit of product A, this goes back to your process costing, is what? 2 per unit. This can be sold at 3 per unit. You have produced at 2 and can sell it at 3. Alternatively, this can be processed further and sold as what? Product AX. Extra material, hence weight of the AX will double. Output of product A, processing cost. What is the minimum selling price of product AX? Minimum selling price of product AS. I have done this earlier. I'll first do a statement of product A, then I do a statement of product AX. Objective is to at least earn the same amount of profit. At least earn the same amount of profit. If I'm able to earn the same amount of profit, I'm very happy about it. Not able to earn the same amount of profit, then don't sell it as AX. Now, same amount of profit and we'll reverse work minimum selling price. We'll reverse work the minimum selling price. Product A, how many units have been produced in this example? 10,000. What is the selling price? 10,000 into 3. 10,000 into 2 is the cost. Profit is, I want to earn the same amount of profit. When it becomes the other product, it is 20,000 into question mark. 20,000 into question mark. I want to earn the same amount of profit. I want to earn the same amount of profit. 20,000 into question mark. My cost is 10,000 into 2. And another cost is 2 lakh. Reverse work and tell me the question mark so that I earn the same amount of profit. I want to earn same amount of 10,000 rupees. What should that question mark be? 11.5. Company produces product A in process 1. Cost per unit is 10. Selling price is 15. These units can alternatively be transferred to process 2. Same be sold at 20 per unit. Almost a similar example. Extra material by which output doubles. Company has transferred 40,000 units to process 2. Cost incurred is 4 lakh. What is the profit earned if you sell it as product A or after further processing? Can you please do a similar statement? Here they have given the price. What will be the profit if you sell now and if you sell later? Profit if you sell now and profit if you sell it later. Sell at split off, sell after further processing. I've already explained the earlier example. So unless you attempt it, I cannot really help with these things. Ideally, this is an area which you should do on your own. I have been taking this so that you get that grip. If you sell now 40,000 into what's the price? 15 and 40,000 into 10. So profit today is, if you sell it later, 40 will become what? And sell at what price? Raw material cost is 40,000 into 10. Processing cost, the answer is 2 lakh and 8 lakh. 2 and 8. Clear? Any doubts on this? A company has produced 800 units of A, 400 units of B. 800 of product A can be further refined to what? 500 units of C. 800 of A will become what? 500 units of C. Selling price of product A and C is 100 and 500. How much is the further processing cost? How much is the further processing cost? If extra profit on further processing is 8,000. You can do statement separately for one product separately or do our incremental format. Both will give the same answer. If you sell today, what is the selling price question is given for product A? 800 into 100. 800 into 100. If you sell it later, what is the selling price? 500 into 300. 800 into 100 is 80,000. So my incremental revenue is, incremental cost will be 62,000. Incremental cost will be 62,000, so that I make a profit of 8,000. So 62,000 is my further processing cost. 62,000 is my further processing. Do all the MCQs properly, you would be in a position to complete. I'm very confident that my subject, if you want, you can complete even in 10 hours. If you want, you can complete, as long as you have grip on the concept. Concept grip not there, I cannot really help it, because today also when I'm discussing some of it, you have totally forgotten it. It doesn't really help. You need to at least be clear on the concept. For concept also, not something great I want you to do. You just need to read your notes which have been given. Not even telling you to solve question. Negative contribution. Sometimes what happens is, when we do a problem, contribution margin method says fixed joint cost is to be distributed on the basis of contribution. Product A 1 lakh, product B 2 lakh, product C negative. So when you distribute fixed joint cost, ignore product C and distribute only to A and B. If you have A, B and C, and B and C are negative, distribute everything only to A. Distribute everything only to A. Negative means you will get a negative joint cost. We have seen one method where even negative cost is distributed. That method is called uniform constant margin or constant gross margin NRV method, where I want to make the same profit margin for all the products. We saw one question here. Fixed joint cost will not be distributed to that product. Fixed joint cost will not be distributed to that product. Can you give me answer to this? Fairly simple one. I've already explained it. How much joint cost will go to product B? Entire 8,000 will go. Entire 8,000. One another option. This is what I say it is. Other option is in the ratio of -4 is to 14. What is -4 is to 14 is? -4 is the contribution of first one. 14 is the contribution of second one. What you will do, you will add them together. When you add them together, you get 10. You get 10. Then the method will say 8,000 divide by 10 into -4 for the first product into 14 for the second product. That will make it 11,200, but that's not a very good way, because you are distributing even more than 8,000. You're distributing even more than 8,000. So in case you get a negative amount, ignore that product for distribution purpose. Sales not equal to production. I've already explained this. In case sales is not equal to production, it means there is a closing stock. And if you have closing stock, please do all your calculations at a per unit level. Do all your calculations at a per unit level. If units sold are not equal to units produced, then the same would indicate closing stock. It can also be opening stock also. In this case, we should compute JC per unit produced, FPC per unit produced, and total cost per unit produced. Everything is per unit. Everything is per unit. This per unit would be multiplied with units sold in profit statement. Whatever profit you want to calculate, you multiply with the per unit to get your joint cost, to get your further processing cost, everything. A company has produced 10,000 of A, 10,000 of B. Joint cost is 1 lakh and 2 lakh. FPC is 50,000. How much is the profit of product A? If 8,000 units are sold at 20, give me this. I don't want to explain anything here. Product A profit. These are basics of costing. I don't want to spend time here. Profit of product A. That FPC 50,000 is product A, okay? What's the profit you said? Okay. Sales is 8,000 into 20. Joint cost is 1 lakh divided by 10,000. Per unit number you get into 8,000, which is 80,000. Further processing cost 50,000 divided by 10,000 into 8,000, you get ultimate number is clear. Any doubts on this? Decision on further processing and selling expense. In case the question gives you selling expenses, Please do not try to do that incremental format. What is incremental format? Sale value after further processing less sale value at split off, incremental revenues less further processing. That format will not work. Do separate. In case of product specific selling expense, we cannot use what? Normal format. What is normal format? Comparing incremental revenue with incremental cost to decide on further processing. We should prepare a profit statement if a product is sold at split off. I showed you statement of product A, product AX. So do product A separately, do product AX separately, and then take a decision on further processing. Share of joint cost of product A is 10 lakh. Product can be sold for what? At split off point after incurring selling expense of 2 lakh. Tell me the profit if you sell at split off. Separate statement we'll have to do. What will be the profit if you sell at split off at this stage? 8 lakh. The product can be processed further and be sold at what? 45 lakh. Selling expense incurred is 5 lakh. How much should be the further processing cost? How much should the further processing cost if the company is indifferent? Indifferent means you're going to make same amount of profit. In case that selling expense data was not there, I would have told you to do the incremental format. So in the other one, sales is how much? 45 lakh. Selling expense 5 lakh. Joint cost, further processing cost is balancing figure, and I want to make same amount of 8 lakh. What's that balancing figure? 22 lakh. Again, I'm repeating, in this scenario, you should never try to do the incremental format. What will happen in incremental format? Incremental revenue 25 lakh. Incremental revenue 25 lakh. Then I'll say less incremental cost, and you'll get incremental profit or loss, which is 0. So you may say that the answer, the gap is 25 lakh, so incur 25 lakh, but that's not going to happen. That's not going to happen because selling expense is a problem. Selling expense is a problem. So don't try to do whenever you have selling expense, which is also specific. You will incur at split off different figure, after further processing different figure. Loss in processing. In case there is any loss in manufacturing processing, then you will have to first start with your input output analysis, or a chart where you start with input, split into A, B, loss, then A will become loss units produced, B will become loss units produced. In case of loss in processing, we should prepare an what? Input output chart indicating units produced and loss. In this situation, if there's a closing stock, it becomes more headache. If there's a closing stock, then whatever cost per unit you are calculating, because you will have to do it per unit, units produced is equal to what? Units at split off stage or further processing stage. Units at split off stage. That is, I ask you what is the cost per unit of A. If you're selling A at split off, divide by 1 lakh pre-split off at split off units. If you're selling after further processing, then divide by 80,000 after further processing units, depending on what you are going to do with those units. What you are going to do with those units. Please put a chart here. First, you put a chart here alone. Balance things I'll discuss. You put a chart alone. You put the chart alone. Balance things I'll discuss. What is happening? How many units you are getting? How many losses? Just get the chart alone. Tell me the number of units. How much is loss? How much is A? How much is B? And after that, any further processing loss. What is the input introduced? 1 lakh 50. One lakh 50. This is split into. This is split into production of 142, 500 and loss of 7,500, loss of 7,500. Production is further split as 47,500. Clear? Beyond this, I'm not taking you through. They said what should be the selling price of product A, that's the balancing figure, and your incremental profit is 5,000. You put it in the format, you will get to the answer. Any doubts in this? A company has produced 1,20,000 units at split off point, and these can be sold at 8 per unit. There's a loss of 1/6 in the processing, and the units be sold at 10 after further processing. Further processing cost 36,000. The company has done further processing and sold 90,000 units. What is the optimum processing decision? Wherever this losses and all are there, in this question, loss is also there and closing stock is also there. And closing stock is also there. How closing stock is there? We have produced how many units? What is the loss? 1/6. If loss is 1/6, I should get an output of 1 lakh. I should get an output of 1 lakh. We have sold how many units? 90,000. Now, in order to decide this, I'll do a profit statement as if all units are sold. I'll do a profit statement as if all units are sold by the company. 1,20,000 into 8. 1,20,000 into 8. They have not given the joint cost in the question. For the time being, assume joint cost is 0. Doesn't really matter. I'll subtract in both the places. I'm going to subtract this in both the places. Other side, it is 1 lakh into 10. 1 lakh into 10. And we have incurred a further processing cost of. So this side it's 960. And this side it is 960. This is on all units sold. I've done the statement on all units sold by the company. So decision is sell after further processing. We have not done it for 90,000 units. We have done it for 1 lakh unit. If you do for 90,000 units, you'll end up making a wrong decision. You'll end up making a wrong decision. Clear? Because that product is there. We are making a decision what to do with that entire 1 lakh unit. We are not deciding on 90,000 units. You may sell it, you may not sell it. That's a different thing. Sales may happen now, sales may happen later. Company has used an input of 2 lakh. A and B in the ratio of 1:2 input. What is the production of product A? Give me an answer to this. Production of product A. Where kind of simple one. We have used an input of how much? 2 lakh produced in the ratio of 1:2. Input output ratio is 100:90. 2 lakh of input would give me an output of only 1,80,000 in the ratio of what? 1:2. So 60,000. Estimated. If the question gives you any estimated margin, then you will have to follow NRV method for joint cost distribution. We have seen problems where I've told follow random methods by looking at the answer, because I also don't know what method to follow. I'm making it very clear. Method as such doesn't have any implication unless there's a closing stock. If there's a closing stock, the method may give different profit because closing stock is valued differently. FIFO and weighted average will give you same profit if there is no closing stock. FIFO and weighted average will give you same amount of profit if there is no closing stock in a company. So FIFO method and or if the opening stock is equal to closing stock, then also same profit. The profit variation happens only because of variation in production and sales. Constant gross margin. Constant gross margin means you have to ensure what? Same GP margin for all products. Same GP margin. This can lead to what? Negative joint cost distribution to few product. Few product I may distribute what? Negative joint cost. We have seen one problem like that. Sales of product A and B is 1 lakh and 2 lakh. Let's do the combined value. Combined value is 3 lakh. Further processing cost combined is joint cost is put together the profit is, which means 30% is the profit margin. A also should have 30%, B also should have 30%. Profit margin has to be same. So for product A, what I'll do, 1 lakh is the sales into 30%, 30,000 profit I want. I want profit of 30,000. In that they already have a joint cost of 40,000. So 1 lakh sales, 30,000 profit, cost is 70,000, joint cost 40,000, sorry, further processing cost 40,000, balance joint cost will be 30,000. Balance joint cost will be 30,000. I want to make the same amount of 30%. Same amount of 30%. Accounting for byproduct, first thing you will have to decide whether it is a byproduct or a main product. Theory says like byproduct or joint product. Theory says like this. For all our problem purpose, we have mostly taken it as a joint product only. We have taken it as a joint product. What do we do? Our accounting treatment is very simple. Calculate NRV of the byproduct and deduct that NRV from the joint cost. Calculate NRV of the byproduct. This is what I followed in 95% of the question. NRV of the byproduct and deduct that NRV from where? From the joint product, from the joint cost. Balance cost you distribute. When you deduct it indirectly, you distribute that joint cost to the byproduct. Indirectly, you distribute that joint cost. Theory says first decide whether it's a byproduct or a main product. If it is, how do you decide? If no further processing is needed, decide on the basis of sale value at split off. Otherwise, decide on the basis of NRV. If the value is considerable, see, 2 rupees per unit is okay, but I'm getting 2 lakh units, 5 lakh units, 10 lakh units. If the value is considerable, treat it like what? Treat it like a main product and do distribution of cost. Other option is if you treat it like a byproduct, then credit side of P&L or debit side of P&L. Credit side means other income, debit side means reduce it from the joint cost, reduce the sale value. Our preferred accounting treatment is compute NRV and deduct the same from joint cost. Deduct the same from joint cost. This is our preferred treatment for all problem purpose. For all problem, we are going to calculate the NRV and deduct from where? From the joint cost. We saw one problem where process costing was also there, where you have to calculate joint cost per unit. What formula is very simple. All expenses of the debit side minus sale value of normal loss divided by expected output, but minus NRV of byproduct in the numerator and minus number of units of byproduct. Minus number of units of byproduct. Why are we deducting the NRV? Because the NRV cost will go to the byproduct, balance cost will go to the main product. Balance cost. So deduct NRV of the byproduct and deduct the byproduct unit. Deduct the byproduct unit. I'm not doing this calculation. This is basically on your process costing part. I don't want to discuss that now. Any doubts on this? So we have taken around 35 minutes or 40 minutes to revise this chapter. Every chapter is like this only. Please keep revising continuously with the concept book. Clear? Any doubts on this? Any doubts on this chapter? Okay, as we have been doing, let's do revision of the earlier chapter which got completed, which is service costing. Let's quickly understand what we do here. Service costing, as the other name is operating costing, is used in those industries where services are performed, or in short, it is used in service industry. The main aspect of a service industry is always cost unit. What should be the cost unit of the industry? So cost unit in a service industry will mostly be a composite cost unit. What is composite is? It is a combination of 2 or more factors. Example, student hours in case of education, where we multiply number of student into number of hours, or patient days in case of hospital, which is number of patient into number of days, or room days in case of a hotel, which is number of rooms into number of days. So we have multiple industries and their cost unit given. Transport, which we extensively discussed, passenger kilometer or ton kilometer. The weight can also be measured in quintal, so quintal kilometer. Electricity we have done, kilowatt hours. Hospital we did patient days or room days, but they are saying it can be per bed or per operation. In case you are operating the person, you can go through per operation. Canteen, per meal we have seen in question. Cinema, we have not done any costing, but it is technically per ticket. Per ticket is the costing which will happen. Hotels, we have done problems on this. Guest days or room days. Banks are financial institution. We used to do per loan application or per successful application. Educational institution, per course, per student or per batch. I can do calculation differently. ITS we have handled per project, and insurance we have also done per policy or per rupee of insured value. Per rupee of insured value. In that, our first discussion is on transport industry. Major discussion revolves around this. When we do transport industry, we classify the cost into three category. What are the three category? Variable cost are running charges, fixed cost are standing charges, semi-variable cost are maintenance charges. The classification may not be very critical unless I calculate BP. First thing I'll always do is calculate something called as distance traveled and passenger kilometer or ton kilometer. This distance traveled and the passenger kilometer or ton kilometer can be for 1 day, can be for 1 week, 1 month, 1 year, depending on your cost sheet. If you prepare cost sheet for 1 day, do the calculation for 1 day. We did one problem where cost sheet was prepared for 3 days. There was a problem where cost sheet was prepared for 3 days. There was a travel package. So you can do 3 days cost sheet, 3 days distance travel, 10 days cost sheet, 10 days distance travel. You can do cost sheet for 1 bus, you can do cost sheet for 10 buses. So depending on the data in the question, accordingly you will have to do the calculation. Format, fixed or standing, variable or running, semi-variable or maintenance, cost per unit is key, passenger kilometer or ton kilometer. You can either go with passenger kilometer or ton kilometer. And we had two types of this, absolute ton kilometer or absolute passenger kilometer, commercial ton kilometer or commercial passenger. Absolute is exact distance into exact quantity. Exactly tell me which route we are traveling, how many kilometers we are going to go, how much weight we are going to carry, how many passengers are going to be there, or total distance into average quantity. Most of the question we have been doing this only. Total distance. I used to tell calculate total distance and average passenger per journey. Sometimes students multiply the number of passengers, saying that in a day 100 passengers have traveled in 2 trip. I don't want to know 2 trip. I don't want to know onward. I don't want to know return. One journey, on an average, how many passengers are there in a bus? In a single journey. In a single journey, not even a trip. Trip will become double. In a single journey, how many people are there in a trip is what we are trying to understand. Now, certain special notes, vehicle not available due to repairs. In case vehicles are not available due to repairs, you have two choices. One, do all your calculation. Then in the distance travel, say less 10% reduction for repairs or 20% reduction for repairs after you do distance travel, after you do ton kilometer. Or when you do the calculation itself, every item subtract 10% or 20%. If vehicles are not available, then the same can be adjusted in number of operating vehicles or number of days of operation. That is 20 days are there. You don't write 20 days, write only 18 days, write only 18 days, or you do it in the end, or you do it in the end. Either ways you will get the same answer, whichever way. No weight carried during return journey. Even if you do not carry any weight during return journey, I have to consider in distance traveled, but it will not come in ton kilometer, because distance traveled into 0 it will become. Distance traveled into 0. Why should I consider distance travel? Because I'll have to incur petrol cost on that. For the return journey, I'll have to incur the petrol cost or the diesel cost. So if a vehicle does not carry weight during return journey, ton kilometer will be 0. But however, we should analyze this for purpose of computing what? Fuel cost. For the purpose, assuming some question has given you the fuel cost, no need to consider this kilometer travel. You directly have the number. Penalty for overloading. We saw a problem where penalty was paid. Penalty, if you pay, it will form part of my cost, but after I calculate operating profit. What is operating profit? Normal cost sheet. After that, less penalty and you call it as net profit. Less penalty and call it as net profit. Driver and conductor commission. If you have any commission, do fixed cost, do variable cost, do semi-variable cost without this commission. Total cost excluding commission, add commission, total cost, add profit, total collection. Depending on which item is a percentage of what, take 1 as 100 and calculate the balance thing. Take the collection as 100, profit could be 20% of 100, cost could be 80% of 100, commission could be 10% of 100, and the cost without the commission is 70, which you would have calculated, and then balance automatically will come. Any doubts on this? The last part is GST or passenger tax. Neither my income nor my expense. I'll collect it from you, pass it on to the government. Ideally, this should be on net collection. What is net collection? Is without GST. You pay a fees of 10,000 plus GST to Bharadwaj. So our income is not 11,800. Our income is only 10,000. So our profit margin or GST should ideally be on net collection, but sometimes they may give it on total collection also. If they give on total collection, take the total collection to be 100. Any doubts on this? Let's take an example. A transport company has been given a 40-kilometer long route to run 5 buses. Bus will make 3 round trips per day. The buses will run on an average for 25 days in a month. How much is the distance traveled by a single bus in 1 month? By a single bus in 1 month. Tell me distance traveled per day per bus. Distance traveled per day per bus. 40-kilometer route into 2 into how many trips? 3 trips all put together you get 240. 40 into 2 into 3. 240 is what you get into how many days? 25 days. So 240 into 25 is 6,000. Question has very clearly said they want single, because in MCQ they'll tell you when you do a descriptive detailed question, your wish what calculation you want to do. Kilometers run per liter is 6 kilometer. Cost of 1 liter of diesel is 60. 1000 kilometer per day. Very simple. Give me the answer quickly. Diesel cost per month. Very simple calculation. Yeah, I've already got an answer. You again, please, others try it. 2 lakh per day. How much is the kilometer traveled? 1000. So overall is going to be 25,000 divided by 6 into 60. Divide by 6 into 60. 2 lakh 50,000. Cost per passenger kilometer 0.8. Profit is 20% of collection. Just focus till this and tell me fare per passenger kilometer. What is fare per passenger kilometer? Just considering this. Fare per passenger kilometer. Cost, add profit, and I get fare. Cost, add profit, and I get fare. So fare is 100. Profit is how much? 20. Cost is 80. Cost is 80. So net my answer is going to turn out to be, this is 0.80, this is 0.20, 1 rupee per passenger kilometer. Now tell me what's the answer to the requirement. What will be the answer here? Two-way fare. Two-way fare is 1 into 300 into 2. 1 into 300 into 2. Any doubts on this? Just give me. Okay, a company has announced a 3-day travel package for Chennai, Bangalore, Kochi, Chennai. You have already done this as a homework question. The distance between Chennai to Bangalore is 300 kilometer. In this question, net when you read it fully, this is the requirement. Company has a policy to get fuel filled up to the next destination only. Next destination only. So the fuel cost will change, because in Chennai it is 60 rupees, in Bangalore it is 65 rupees, in Kochi it is 70 rupees per liter. So my petrol cost keeps changing. Where is the trip starting with? Chennai to Bangalore, what is the kilometer? Chennai to Bangalore kilometer 300. What is the mileage? 10. What is the price in Chennai? This is Chennai to Bangalore, okay? 300 by 10 into 60. You're starting from Chennai. Bangalore to Kochi, what is the distance? 400. Divide by 10 into 65. Then the next one, 500. Divide by 10 into 75. Any doubts on this? Put a total of all of this. 70, sorry. Yeah, 70. Put a total. 7,000. Any doubts on this? A fairly simple question, but yes, we have done as a part of a bigger question. Sometimes when you handle these questions, you make errors. Any doubts on this? Read this and tell me what is the income first. What is the revenue? Read it properly and tell me the revenue here. Not a very tricky calculation. Read and tell me what is the revenue here. Then I'll do the balance calculation. Get me the revenue figure. It's 1 lakh. 8,000 into 10. plus 6,000 into 8. 8,000 into 10 plus 6,000 into 8. 1,28,000 minus 1,10,000 is operating profit. After that minus overloading is net profit. After that minus overloading, it's a penalty, abnormal item, will not come in operating profit calculation. Will not come in operating profit calculation. Any doubts on this? What's the number? 18,000 and 13,000. Tell me what is the fare per passenger kilometer? Kind of a simple calculation. Total cost 3 lakh, profit 1/3 on collection. Profit is 1/3 of collection. Zero point. How much is the cost given? 3 lakh. Cost is 3 lakh. Profit sales is 100. Profit is 33.33. Cost is 66.67. So in short, profit is half of 66.67, which is 1,50,000. Overall collection is 4,50,000 divided by 5 lakh passenger kilometer. Fare is how much? 0.9. Okay, get me this. I'm not discussing also. You should be in a position to tell me this. I'll wait for a minute. Try to get answer to this. We have handled this in one question. So every question I've just picked up those adjustments and put here. 92. Change in cost by change in kilometer. Change in cost is how much? 10,000. Change in kilometer 20,000. So variable component is 0.5. Substitute in either of them. I substitute here. 50,000 is variable. Fixed component is 40,000. For 1,05,000, 40,000 plus 0.5 into 1,05,000, which is in the end 92,500. Any doubts on this? Clear? Next. Okay, this we have done, but it's a lengthy question. Let's discuss. Let's first discuss. Total operating cost of a school bus is 3 lakh. Workload is arranged in such a manner that the first trip picks up senior students, second trip picks up junior student. Capacity is 60 student, fully occupied. Students are classified based on their distance, less than 8 kilometer, more than 8 kilometer. Transportation fees residing less than kilometers, half of those residing for more than 8 kilometer. Less than 8 kilometer, I'll collect half. More than 8 kilometer, I'll collect the normal fees. Number of students residing within a distance of less than 8 kilometers, double that of student residing beyond 8 kilometer. So number of students, some data has been given. What should be the bus fee per student from a per month from a student traveling within a distance of 8 kilometer? Traveling within a distance of 8 kilometer. Let's do the detailed calculation. It's a very good question. How much is the cost I have? I have to collect this 3 lakh from people. One bus, how many students? 120 students. One bus, 120 students. 60 junior students, 60 senior student. This 120, read and tell me less than 8 kilometer how much, greater than 8 kilometer how much. That is also given in a slightly different manner. Less than 8 kilometer how many students, greater than 8 kilometer how many students? Number of students residing within a distance of less than 8 kilometers, what? Double that of student residing beyond 8 kilometers. 2 is to 1. Less than 8 is 2, more than 8 is 1. So what's the number of student? 80, 40. I am going to collect how much the question has mentioned. Something is mentioned in the question on the collection. What does it say? We are going to collect half from student less than 8 kilometer and normal from student more than 8 kilometers. So this guy will pay me X rupees, 0.5. Put together, I'll get 80x. Put together, I'll get 80x. 3 lakh divided by 80 is how much? 37. This is to be paid by a person who is traveling beyond 8 kilometer. This has to be paid by a person who is traveling what? Beyond 8 kilometer. Question wants us to calculate within a distance of 8 kilometer, half of this. He'll pay half of this, which is what? 1875. Any doubts on this? Clear? 1875 needs to be paid. We have done this as part of a bigger problem where we would have spent in the class at least around maybe 20-30 minutes on the problem. The crux of that is this presented here. Any doubts on this? Next. Okay, go through this and tell me the total collection. This is that commission adjustment. Commission adjustment. Try to put it in the format. Total cost excluding commission, add commission, total cost, add profit, total collection. Put it in this format, you will get the answer. Total cost excluding commission, add commission, 1 lakh 20. Okay, let others try. Let me. Total cost, add variable or commission, total. You get the cost again, add profit, and you get total collection. As long as you're able to practice this, I think more than sufficient to revise the different areas. Total cost, add commission, again total cost, profit, total collection. What is the profit question says? Okay, let me take the total cost to be 100 then. Profit is 20. This is 120. Commission is what? 20% of total collection. So 20% of 120. 20% of 120, which is 24. Balance is 76. 76 is equal to 76,000. 120 is equal to 1,20,000. 76 is equal to 76,000. 120 is equal to. In this question, commission was on total collection. Profit was on total cost. My wish, I can do whichever way I want. As long as you're able to take one as 100, you can balance complete it. Any doubts on this? Here, the printed solution has commission collection to be. Not collection, this is cost only then. Okay, cost only 100. That's how I have solved this. Next, a lorry starts with 20 tons of goods from station A, 8 tons unloaded at B, rest at C, come back with 22 tons, distance between A to C, B to C, how much is absolute ton kilometer? Do the calculation, exact distance into exact quantity. Try doing it. Exact distance, A to B, B to C, whatever it is. Exact distance into exact quantity. That's called absolute ton kilometer. Try to do the calculation. What is the first to travel? A to B, 20 into 250 hidden, that is not given directly. Then next is 12 into 150. Return is, and if you put a total of the distance and multiply with average of 20, 12 and 22, that's called commercial ton kilometer. Total distance into the average quantity, into the average quantity. 15,600, 800, which is the total distance, into average is 18. 800 into 18 is called commercial ton kilometer. 800 into the average. 800 into the average is called commercial ton kilometer, which is 14,400. Not asked in the question, but commercial ton kilometers, total distance into average quantity. Total operating cost 80,000, profit 20% of net taking, passenger tax 20%. How much should be the total taking? Try this. Cost, add profit, I'll get net taking, add passenger tax, total taking. We have seen one problem where passenger tax was on total taking. So here everything is on net taking. So I take net taking as 100, profit is 20, cost is 80, passenger tax is 20, total is 120. Total is 120. 80 is equal to how much? 80 is equal to 80,000. So total taking is going to be 1,20,000. Any doubts on this? Okay, tell me the answer to this. Time taken per load. We had done in one question. Loading, unloading, transport all put together. Tell me what is the time taken per load. Not a very tricky calculation. Loading time is 30 minutes. Unloading is 15, 30 plus 15, 45. Two-way distance is how many kilometers? 30 kilometers. So 30 kilometers is equal to question mark 40 kilometers 60 minutes. You will take 45 minutes for transport, 15 for loading, or sorry, 30 for loading and 15 for unloading. All put together how much? 90 minutes. Let me know what is the annual depreciation here. We are done as part of one bigger question. 1 lakh. In my purchase price, I'll have to first deduct the subsidy element. I'll have to deduct the subsidy element. So my purchase price is not 16 lakh, purchase price is only 15 lakh. Salvage value is 2 lakh. So 13 lakh divided by 10, 1 lakh 30. Okay, total passenger kilometer run was 4380, 480 for the year. For the year, bus made 3 round trips per day. Seating capacity is 52. Daily occupancy is 75%, and the bus runs on an average for 26 days in a month. Calculate the distance between Jodhpur and Pali. It's a reverse working scenario. We normally go in the forward order. Now I'll be doing it in the reverse order. What is the data given? They have given 43, 80, 480 for what? Year. This 43, 80, 480 is annual distance into average passenger. What is the average passenger? 39. Divide by 39. Divide by 39. This is the annual distance. Divide by 39. 1 lakh. 3. Divide by 12, you'll get month. Divide by 26, you'll get daily. 360 is the daily travel. Now tell me what will be the distance between these two locations. 360 is the daily kilometer traveled. 3 round trips per day. 60 kilometer. One way distance will be 60 kilometer. Clear? Any doubts on this? It's in the reverse order. We normally move in the forward order. Try to get me the answer. Passenger kilometer. Get first total distance and then multiply with average passenger. You do it for 5 buses. In case we don't get that answer, we'll shift to single bus. I think 5 buses should be there. We'll shift to single bus in case the answer does not match. One 11 lakh. Distance traveled per day per bus, how much? Per day per bus. Sorry? Guys, participate. Per day per bus, 180 into 30 is per month, how much? Into 5 buses. Average passengers is 45 and 40 average. 45 and 40 average, which is into what? 42.5. If I want to complicate things, I can say when you go, it is 30 kilometer. When you come back, it is 40 kilometer. They are 35 kilometers. Some small gap I can say because the routes can be slightly different. In that case, this when you are going, multiply with 45 passengers. When you're coming back, multiply with 40 passengers. Or if you're taking total distance and doing average, that's technically called commercial ton kilometer or commercial passenger kilometer. If you do exact distance into exact, that's called absolute passenger kilometer or absolute ton kilometer. Any doubts on this? Was answer you said 1147 500. Get me answer to this. Fare per round trip. Slightly different. Your approach should change. Let's see. You try it and then I'll discuss. What's the first thing you're calculating? No. What are you calculating? Distance or what are you starting with? Distance will not help in this question. Don't even attempt the distance part. Don't even attempt the distance part. Question very clearly says what is the fare to be charged from a passenger for a round trip. I can do distance also. Rather than distance, can you tell me passengers per day, passengers per month? Like that you go ahead and 55, 56 divided by the number of passenger. Go through the passengers route rather than the distance route. I do distance route also, I'll get the answer, but passengers is better here. 18. First tell me one way, that is when you're going, how many passengers are there? 100. Coming back, 100. 200 passengers will be there. It could be the same people or could be different people. I don't know, 200 passengers. Anyway, in the end, they want round trip cost. So I'll get one way cost and double it up. 200. How many trips in a day? Okay, only one round trip. How many days in a month? 30. So totally there are going to be 6,000. 55, 56 divided by 6,000 is how much? 9. This is the one way fare. 926 is the one way fare. Multiply this with 2, you'll get the round trip fare. You'll multiply with 2, you'll get the round trip fare. Any doubts on this? Can I go with distance? I'm not sure what I've done. I've done with distance, but I felt it is easier to do it through the passenger, but even distance route answer is there. Whichever way you do, you'll get the same answer, 1852. Any doubts on this? Clear? Can you proceed? Okay, get the answer to this. Reverse work and tell me average passengers per journey. Average passengers per journey. Reverse work and try to get it. It's a very good problem. A lot of things are hidden here. Average passengers per journey. I want to know what are the number of passengers per journey. Tell me distance traveled per day per bus. Per day per bus is what's the distance? Guys, participate. 200 per month. Sorry, 6,000. How many buses are there? 6. So it is 36,000. 4,86,000 divided by 0.3 is the number of passenger kilometer. Because what you do is 4,86 divided by the passenger kilometers 0.3. Divided by passenger kilometers 0.3. What is the passenger kilometer? 16 lakh 20,000. 1620 divided by 36,000. 45. 45 is the occupied capacity on a base of 50. 45 is the occupied capacity on a base of 50, which is 90%. Any doubts in this? Clear? Get me the passenger kilometer. A slightly lengthy calculation. Please do it properly and then give the answer. Passenger kilometer. Right, I'll discuss. Tell me distance traveled per bus per month is how much? Per bus per month. 5 trips a day, 20 kilometers. 5 trips a day, 20 kilometers. So it will make 200 into 30, which is 6,000. 6,000 into 15 buses. 6,000 into 15 buses into 32 passenger. What is 32 passenger? 40 into 80%. And same 6,000 into 5 buses into 16 passenger. Once you get this answer, in the end, subtract 10%. Subtract 10% for repairs. Or you can subtract 10% in number of days, or in number of buses, or in the end, This is what I had explained. Tell me the answer. 6,000 into 15 into 32 plus 6,000 into 5 into 16, and then subtract 10%. $30 lakh, 24,000. 30 lakh 24,000. I have presented in a slightly different manner. Doesn't really matter. Net answer is 30 lakh 24,000. I have subtracted 10% earlier here. In my solution, it's earlier. When I explained, I subtracted it in the end. Whichever way you do, you'll get to the same answer. Any doubts on this? Clear? Can you proceed? Get me answer to this. We had done this in one question. CNG car versus EV car. Tire cost. What should be the per month tire cost here? Not a very difficult calculation. Okay, let others do it. How many times tire will be replaced here? 2 times. It's not 3 times. It will be only 2 times, because the last time I'm not going to replace the tire. I'm going to sell the car. 32,000 divided by 180 months. 32,000 divided by 180 months. Yeah, this is fine. Some of it I'm avoiding. Okay, next I move to the hotel costing part. In hotel costing, we learned that the cost unit is what? Room, days. And when I do my calculation, they may say the rent of a single room will be double of this triple room. Mostly around that we will be doing the problems. Classification remains same: variable, fixed, and semi-variable. A hotel has 100 rooms which has an occupancy of 80% during peak season, which is Jan to June, 40% during off season, which is July to December. Monthly lighting charges are 120 in all months except May to August, when the cost is 30 per room. We had done this, and class I told I'll take an assumption. Here that assumption is not needed. I made it very clear saying that when is the class, when we did a problem, it said winter season. We were thinking whether winter is part of peak season or off season, and then doing the calculation. How many rooms are there? 100. How much is occupied during Jan to June? 80. During January to June, what is the electricity cost per room? Jan to June. See carefully. Jan to June, what is the electricity? Read carefully, guys. Jan to April is 120. May and June is 30. May and June is 30. So 80 rooms into 120 into 4 months. What is 4 months? Jan, Feb, March and April. Again 80 rooms into 30 into 2 months. This is Jan to June calculation. This is Jan to June calculation. How much is the occupancy during off season? 40 into 30 into 2 months. What is 2 months? Is July and August. And then again 40 into 120 into 4. When in the class we did, I said either take it as part of peak season or off season and close it. Do all the calculation. 80 into 120 into 4, 80 into 30 into 2, 40 into 30 into 2, 40 into 120 into 4. Sorry? Okay. Any doubts on this? Clear? Target collection per month is 10 lakh. Hotel has 25 single rooms, 25 double room. Occupancy of single room is 80%. Double room is 60%. Rent of double room to be 80% more than single room. Number of operating days What is the rent to be charged for a double room? What is the rent to be charged for a double room? We have done questions around this. Now my collection is how much they've said. So I want to collect 10 lakh rupees. How many single room will be occupied for a month? Read and tell me. How many single room days for a month? Single room days for a month. 20 into 25 days. 20 rooms into 25 days. Double room days for a month. 25 into 60%, which is 15 into 25 is 375. Single room what rent, double room what rent? Read and tell me, what should I write? Single room is X, double room. When I multiply 500x plus 375 into 1.8 is how much? Ten lakh divided by 1175 is the rent of a single room into 1.8 is the rent of double room. 10 lakh divided by 1175. How much you get? One X is what? What is the X you got? Okay, and then into 1.8. Any doubts on this? Clear? A hotel which has 100 rooms are occupied to the extent of 80%. 40% of the rooms are single room, balance are double room. Occupancy of single room is 100%. What is the occupancy of double room? It's some reverse working kind of a calculation. A hotel has how many rooms? 100 rooms occupied to the extent of 80%, which means in 100, 80 rooms are occupied. In this, how many are single and how many are double in the 100? 40 single and 60 double. What is the occupancy of the single room? 100%. Entire 40 rooms is occupied, which means double room balance 40. 80 is occupied, balance is 40. Occupancy is 40 on a base of 60. 40 on a base of 60. This is reverse working calculation. 40 on a base of 60. Any doubts on this? Clear? Me occupied room days here. You should be in a position to handle this. Occupied room days. Occupied room days. $80 rooms into 180 days, 25 rooms into 180 days. 80 into 180 and 25 into 180. Next comes hospital costing. In hospital costing, the cost unit is patient days or room days, and format remains same. The only challenge is sometimes BEP may be asked. BEP we have done in marginal costing. Now formula and all will be very clear. Fixed cost by contribution, all that will be clear. Only thing is categorization has to be clear. You cannot categorize something fixed as variable, variable as fixed. Answer will change. Answer will undergo a change. Tell me the number of patient beds or patient days. Tell me the number of patient days technically it is, or patient beds. What's the answer? 30. 165 days into 30 beds plus 120 days into 38 beds plus extra 800 beds plus extra 800. What's the number you get? 165 into 30 plus 120 into 38 plus 800. Sorry? 10. 10, 10, 3, 10. That's one answer. Other option is, okay, that should be the answer. Another answer I can discuss is 165 days this, 120 days this, extra 80 days. What happened? I don't know. There are extra leftover 80 days, extra leftover 365 days in a year, 365 days in a year. Those extra 80 days, I can assume that 40 beds are occupied. I can assume that 40 beds are occupied. That can give a different answer. That can give a different answer. Not sure what is taken here. Okay, I've taken that. 80 days extra, I've taken 40. 80 days extra, I've taken 40. Year consists of 285, balance 80 days. I've understood it as full occupancy. I've understood it as full occupancy and done this. IT company, cost unit is project, cost classification is employee cost and other cost. This we have done in a class problem where we did not consider those extra days, where we have not considered those extra days. We said we are not bothered about those extra part. Toll plaza, it is going to be number of vehicles or the number of kilometer, and classification is apportionment of capital cost, operating cost and maintenance. Apportionment of capital is nothing but depreciation. Let's look at this. A toll plaza has a policy that if vehicles return within 24 hours of the return journey, the toll fare will be reduced by 50% for what? Return journey. When I did a class problem, I said an assumption could be needed, whether it's only for onward or onward and return. Here it's very clearly mentioned that it's only for return journey. 40% of chargeable vehicles return within this period. Total cost per month is 720. Profit is 20% on sales. Can you tell me what is the collection with this first? Collection 20% on sales. 9 lakhs. An estimated 50,000 vehicles will be used for onward journey, 50,000 for return. 10% is medical emergency cases, not chargeable. So chargeable is what? 45,000. When you are going, I'll charge you X rupees. When you are going, I'll charge you X rupees. But when you return, 40% of the vehicle, I'll have to give a discount. 60% of the vehicle, no discount. 60%, no discount, because 40% return within that time frame. So 27,000 return vehicle will pay X. 18,000 will be given how much discount? 0.5. Can you tell me 45,000 into X, 27,000 into X, 18,000 into 0.5X? 9 lakh divided by 81,000. That's the normal rate. That's the normal rate per vehicle. I may decide to charge lower for the return part. In the end, I don't incur any loss. I get my number which I'm looking at. Canteen, we go with number of meal. Tell me answer to this. You would have done this as a homework question, subsidy part. How much would be the payment by the employee? 16 rupees. He is getting a subsidy of 80%. The price for a non-veg meal is 40 into 2, 80. In that 80%, company will pay, 20% the employee has to pay. Educational institute, you go with number of student or student hours. Format can be fixed, variable and semi-variable. We did this in one library question. Can you see this and tell me what's the answer? Thousand. 1245 minus 930 is the surplus left over. Divide by 300 per book. Surplus by 300. 1050. Insurance company, number of policy or value of policy, that is rupee per insured value. And cost classification was marketing and sales support, operations, IT and facilities are support function. Cost per rupee of insured value 0.002. Value of insured policy, total cost. Tell me the answer. We have done this in one problem. 1 point. Overall cost is very simple, 3,500 crores into 0.002. That's the overall cost. In that, deduct all other cost, you will get to know the IT cost. So 7 crores minus 5.2. Power plant, we go with kilowatt hours. Classification remains fixed, variable and semi-variable. Tell me how many kWh are generated. This also we did in one question. I want kWh generation. Month, no? Requirement is month. kWh per month. 2 crore. 1000 megawatt per day. 1000 into 1000 is 10 lakh. 1000 into 1000 will be 10 lakh. In that, my capacity is only 85%. So I'll generate 8 lakh 50,000 units per day into how many days? 30 days. So I'll get 2 crore 55 lakhs. With this gets over. I'll take a break of 5 minutes and then I start revision of marginal costing. I'm not starting a new chapter. I'll complete the revision of marginal costing. 5 minutes break. Okay, let's start with the revision of marginal costing. As such, it is a technique of costing, guys. Technique of costing which assist in no discussion among yourself, please. Which assist in decision making. The crux of this chapter is classifying the cost into variable cost and fixed cost. We do not have another category like semi-variable and all. Everything has to be classified here. Variable cost is incurred for every unit produced. Variable cost is directly proportional with volume and VC per unit remains constant. Fixed cost is incurred as a whole. Overall fixed cost remains constant and per unit is inversely proportional with volume. There's something called as misleading information. What is misleading information is fixed cost per unit and total variable cost. These two can force you to make mistakes when you solve question. So your objective should be to convert that into total fixed cost and VC per unit in order to evaluate the question. We do it through a marginal costing income statement, which is particulars per unit total in bracket, write the number of units, sales less variable cost, contribution, fixed cost and profit. We don't write it for per unit to the extent possible. I don't need it, but no other option. Question has the data like that only. I'll write it also, but normally I don't prefer writing per unit. Direct material cost 80,000, direct labor cost 40,000, company has manufactured 50,000 and the direct material cost and labor cost will increase by 10% and 20%. How much is the variable cost per unit post increase? 30 seconds. Variable cost post increase. 27.2. Direct material today is 16 rupees. 16 will go up by what? 10% and 8 will go up by 20%. 17.6 plus 9.6. 17.6 plus 9.6. Variable cost is 85, fixed cost is 50, production 1,50,000, production will increase to 180, variable cost, amount of fixed cost in 2023. Give me answer to this. Fixed cost in 2023. Let others go through it. I am also yet to read it, so let others also read it. Get the answer, please. Any change in fixed cost means a change in what? Total fixed cost. So what is the last year total fixed cost? 1,50,000 into 50, 75 lakh and add 28%. In exam in a hurry, some students may do 50 plus 28% and then multiply with 180, you will end up getting a wrong answer. So you'll have to do 75 lakh plus 28%, which is how much? 96 lakh. Fixed cost 120, variable cost per unit 3 rupees, selling price 7, output 50, profit with 10% increase in output, selling price and fixed cost. Either do a statement in your notebook or whatever way you do, get me an answer here. This is the first question we did in marginal costing. 10% increase in output, selling price and fixed cost. You want to do it as statement form, do it statement. Without statement, that's your wish. But a fairly simple one. As it's just the core concepts which I want to discuss. Was answer 1 lakh? The calculation is 7.7 minus 3, 4.7 into 55,000 minus 132. Any change in fixed cost means a change in total fixed cost. Your answer is 126,500. Any doubts on this? Get me answer to this. Was the answer? Sorry? Why 40%? Percentage increase in VC per unit. VC per unit will not change. Why will the VC per unit change? There's nothing given in the question about VC per unit changing. So VC per unit will not change. Total contribution will increase by 80 lakh. But there is a drafting error. I'm not sure whether I drafted or I copied. It says percentage here. So if somebody says percentage increase in total contribution, then earlier total contribution would have been 700 into 40%, 280, and now it is 900 into 40%, 360. 280 becoming 360. If you calculate percentage, you may get a different answer, but it's not matching in the solution, so it should be nil and 80 lakh. Nil and 80 lakh. This has to be understood as so this part is not percentage change but overall change. That's how I'll have to understand this part. Get answer to this. Again, a fairly simple one. You put it in a statement form, you'll get it. Without statement also you can do. Contribution is 990 plus 110, 11 lakh. Sales is 20 lakh. Difference is variable cost of 9 lakh divided by 20,000 units. Okay, we did this in one question. Fixed factory overhead 230. Admin overhead relating to production is 71,000. Selling and distribution overhead is 68,000. Variable cost is 57% of COGS and 4% of COS. Variable cost is 57% of COGS and 4% of COS. How much is the cost of sales? How much is the cost of sales? First, I'll have to get what is COGS, and based on that, I then can get cost of sales. COGS is equal to fixed factory overhead 230, relating to production 71,000, and 57% of COGS. 57% of COGS. Let me know what is the COGS number. 7. So COS is equal to 7 lakh plus another 68,000 and 4% of COS and 4% of COS. We did this again part of a bigger question. We had to spend a lot of time on getting to the number and then same formality we do. Any doubts on this? Answer is 8 lakh. Get me answer to this. Shouldn't take more than 30 seconds. How much? 50 per unit into how many units is 80% capacity? 800. So 50 into 800 is 40,000 minus the fixed cost is 25,000. You get a profit of 15,000. Number of units produced 2,000. Number of units sold 1,000. Selling price, variable cost. What is the profit? Again, a fairly straightforward question. All these have come as exam questions here and there at part of bigger questions. How much? The only thing I wanted to explain is it's on units sold, not on units produced. Your statement is on units sold. 1,000 into 15 rupees minus 10,000. 1,000 into 15 minus 10,000 and not 2,000 into 15. Not 2,000 into 15. This is the equation which we saw. Break-even point plus the margin of safety is equal to total units, which can be multiplied with contribution per unit, and you get fixed cost, profit and contribution. I can get any number of formulae from this. I can say contribution per unit is equal to fixed cost by BP. I can say contribution per unit is equal to profit by MOS. I can say contribution per unit is equal to contribution divided by total units. I can say total units is equal to contribution divided by contribution per unit. I can say total units is equal to BEP plus MOS. We can say contribution is equal to fixed cost plus profit. We can say total units into CPU. So there are multiple formulae which came out of it. At least 15-20 formulae I can take. This is at a unit level, and the next one is at a value level, where the connecting is what? PVR. The connecting is PVR. Any doubts on this? The most important equation. This is what we have extensively used in most of the question. Any doubts on this? The term contribution means it contributes towards recovery of what? Fixed cost and generation of profit. Formula and all is there: sales minus variable cost, profit plus fixed cost. Apart from that, 20 another formula I can add for contribution. Some question I'll do some other formula. So any number of formula can come for contribution. PVR basically measures the profitability by considering what? Only variable cost, because net profit margin considers variable as well as fixed cost, which can change when you change the sales. So PVR is equal to contribution by sales, contribution per unit by selling price, change in profit by change in sales, change in contribution by change in sales, 100% minus VCR, fixed cost divided by break even point, profit divided by margin of safety. I have no end to the number of formula I can keep writing for PVR. You will have to be very clear on the interlinkage. I don't expect you to remember any formula. Be clear on the linkage. You'll be able to take care. PVR of the product is currently 40%. Variable cost per unit is 6. Company has reduced the selling price, which has reduced PVR to 20%. What is the revised selling price? What is the revised selling price? Tell me what is the selling price today? Read and tell me what is the selling price today. 10 minus 6, 4, because it says variable cost is 6, which is 60%. Variable cost is 6, which is 60%. Company has reduced the selling price, which has reduced the PVR to what? 20%. 6 continues to be the same, and this is now 80%. This is 20%. This is 20%. Tell me what's the new selling price? 7.5. 7.5. Any doubts on this? Clear? So there is a 25% fall in selling price. We did this in one question. Quickly get the answer. We did in one problem. What's the formula for PVR here? Change in profit by change in sales. Change in profit under budget 180. Change in sales under budget 400. 180 by 400 into 100. I'll get 45%. Any doubts on this? Tell me which of this will impact the PVR. Increase in sale volume. Volume going up, going down. Will it impact PV ratio? 10,000 units, 20,000 units, 30,000 units doesn't really matter. Increase in fixed cost, that is beyond contribution, doesn't matter. Decrease in variable cost per unit, improve PVR. Decrease in contribution margin, reduce your PV ratio. It will reduce your PV ratio. Increase in selling price, 10% increase in both selling price and VC per unit. No change. In fact, around this, there are 2-3 questions which you would have solved. Question will say, I'm increasing variable cost by 10%. What should be the new selling price to maintain the same PVR? VC went up by 10%. Let the selling price also go up by 10%. Let the selling price also go up by 10%. A company has incurred a fixed expense of 4,50,000 with sales of 15 lakh, earned a profit of 3 lakh during the first half. In second half, the firm reported loss of 1,50,000. What is the sales for the entire year? I'll have to put it in the format. Format will only give me the answer. First half, tell me what is the sales figure? 15 lakh. Profit is 3 lakh. Fixed cost, contribution, variable cost. This is first half calculation. This is the first half calculation. Second half, what has happened? Just give me a minute. Sorry, yeah, second half, how much? Loss of 1,50,000. Fixed cost, contribution 3 lakh, which is 50% of sales, which is 50% of sales. So sales number is 6 lakh. 15 plus 6, overall year is 21. 15 lakh plus 6 lakh. 15 lakh plus 6 lakh. Any doubts on this? Tell me the answer to this. Simple question. Tell me the answer. How much? It is sales and loss, not profit. So change in profit is 10,000 is becoming negative 5,000, which is 15,000. Change in profit is 15,000 divided by change in sales is 20,000. So 15 by 20. Company had a cost of 20,000 in first half when revenues is 30,000. Cost of 25,000 in second half when revenues is 40,000. How much is the fixed cost of the second half? How do I answer this? Sorry. So difference, what will give? Difference will not be the fixed cost. Okay, two option. One, you do change in profit by change in sales, that is PVR. Or change in cost by change in sales is called VCR, variable cost ratio. Change in cost divided by change in sales. What is the change in cost here? 5,000. Change in revenue. If you had attempted change in profit also, you would have got same 5,000 only. And PVR would have been 50%. VCR is also 50%. So variable cost is 40,000 into 50%, which is 20,000 rupees. Balance is the fixed cost. Balance is the fixed cost, which is second half fixed cost is what? 5,000. VCR, change in cost by change in sales. PVR is change in profit by change in sales. When sales volume is 4,000, get me an answer to this. Get answer to this. We have done this in one question. You'll have to do a little bit of calculation. I'll wait. First thing you will do is change in cost by change in units. That will give you VC per unit. Change in cost. Cost is 16,000, 20, 21,000. So change in cost is 5,000. Change in units is 2,000. So VC component is 2.5. I substitute this 2.5 in one of the calculation, which is I substitute here. So 2.5 into 4,000 is variable. Leftover is fixed. Leftover is fixed, which is 6,000. 6,000 divided by contribution per unit is the break even point. Divided by contribution per unit is the break even point. What is the contribution per unit you get? 1.25. PVR is contribution per unit divided by 1.25 plus 2.5. Divide by selling price. 1.25 plus 2.5. In the end, you get 1.25 divided by 3.75, 33.33%. Any doubts on this? And very simple question only, but lot of things are tested here. Any doubts on this? So first I had to do VC per unit, then I had to use the formula of BEP, then I had to use the formula of PVR, which is contribution per unit divided by selling price. What is selling price? Is VC per unit plus CPU. VC per unit plus the contribution per unit. Break even point refers to the sales at which I make no profit, no loss. Technically fixed cost is equal to contribution. Variable cost per unit 20, fixed overheads 20 lakh, selling price 40. What should be the selling price to reduce the BEP by 20,000? First tell me what is the BEP today? What is the break even point today? Break even point today 1 lakh. I want this to go down to what? 80,000. 80,000 is equal to fixed cost by contribution per unit. By contribution per unit. Tell me what should be the contribution per unit? 25. Selling price is 25 plus 20. Selling price is 25 plus 20. We did in a class where they said bring BP2. Here it is BP by. BP by, and there it was BP2. Any doubts on this? Ratio of variable cost to sales is 60%. Margin of safety is 25% of the capacity sales. When fixed cost is 1,80,000. What will be 100% capacity sales? Try. You should be in a position to handle this. What happened? Attempt this. You should be in a position to manage this. What will you calculate first? First you will calculate BEP. First you will calculate BEP. BEP is 180 divided by 40%. PVR 180 divided by 40%. What's the answer? No, 180 divided by 40% is equal to 75% of sales. 4,50,000 is equal to 75%. Margin of safety is balance 25%. Overall sales is 450 divided by 75%, which is how much? 6 lakh. I've not kind of discussed this, but you can ignore this question. This has something called as not needed at your end. This was a CA final question. Get me the answer to this. Tell me what is the contribution per unit? ₹40 minus ₹4 discount, remove it, 36 minus 5% on sales. I assume it to be 5% on 36 because that is the selling price. That's the selling price minus 1.8. I'll get some 34.2 minus material minus labor minus variable overhead. What's the contribution per unit? How much? 40 minus 10% is 36 minus 5% of that is 34.2 minus ₹6 is 28.2 minus ₹8 is 20.2 minus ₹4 80 paise minus ₹4 80 paise. What's the number? 15.4. I don't need any of this. I'll explain now a simple question or simple logic. What are the fixed overheads? 51,600. This is for ₹100 of sales. If you do extra 20, you will earn extra 20% profit. Profit is 51,600 into 20%. Profit is 51,600 into 20%. I'll explain the logic again. ₹100 break even, ₹20 margin of safety. ₹100 break even, ₹20 margin of safety. ₹100 recovers fixed cost of 51,600. ₹20 gives you profit of XX. ₹20 gives you profit of XX. So this is a simple logic. ₹100 recovers fixed cost. ₹100 recovers what? Fixed cost. Extra ₹20 will contribute to profit. I can do detailed calculation. I'm not sure whether I've done detailed calculation, but net very simple. Can you tell me what is 20% of 51,600? This is what I said. Fixed overheads 51,600. Sales is 20% above BEP. 120% of break-even sales. If 120% of break-even sales has happened, contribution will be 120% of fixed cost. Contribution will be 120% of the fixed cost. If it's 100% of the fixed cost, no profit, no loss. You're 20% more, you earn 20%, and the final profit is 10,320. Any doubts on this? Get the answer to this. Apply the formula quickly. Again, we used to do all this as every question used to take 7-8 minutes for us to do. Same thing only we are doing here, but a little faster. Now, the given data is not in the way I want. What I'll write is sales for the first year is 8,000 into 15, 1,20,000, and loss is negative 40,000. In the revised scenario, it is 15 into 20,000, which is profit is 80,000. Change in profit by change in sales will give you PVR. Change in profit by change in sales will give you PVR. Change in profit is 120. Change in sales is 180. PVR is 66.67%. PVR is 66.67%. If PVR is 66.67%, in 3 lakh, contribution is 2 lakh, fixed cost is 120. Fixed cost is 120. Fixed cost divided by PVR will give you BEP in rupees and then convert into BEP in units. Any doubts on this? Any doubts on this? I'm not discussing the final answer, but logic is very simple. Any doubts? Again, another separate, I can present my answer in different ways. Here I've tried doing something else. Net, my final answer is going to match. That is what is critical. get me the answer on what is VC per unit and what is total fixed cost. Just get that alone. VC per unit, total fixed cost, everything else is of a formality. VC per unit and total fixed cost. Four 47 lakh was the number, I think. 470. Balance 8 lakh. Overall cost is 55 lakh. Balance is 8 lakh. 8 lakh divided by 400 rupees. 8 lakh divided by 400 rupees. What's the answer? 2000 units. Okay, this is not doing it. Almost similar. Give me answer to this. One question we did around this. We did one question on this. Which of this is fixed, which is variable? OH1 and OH2. OH1 is variable. So in denominator 25 minus 5 minus 10. OH2 fixed 5000 into 20 or 10,000 into 10, you get the same amount. So if per unit remains same, it's variable. Total remains same, it is fixed. So numerator is 1 lakh. Denominator is 25 minus 5 minus 10. What's the answer? 10,000. Some of it I'm avoiding. Give me answer to this. If you have got the answer, let me know, else I explain. Not a very tricky one, but slightly different. If anyone got an answer, let me know, else I explain this. Can you tell me what is the PVR today? 40%. Whenever their selling price is reduced by 10% and all, very simple. Earlier 100 rupees, 60 cost, 40. 60 remains same. 100 will become 90, 30. PVR is now 33.33. Fixed cost divided by 33.33% is break even point. Fixed cost divided by 33.333%. Any doubts on this? MOS refers to the sales which is contributing towards profits of the company. It is, in other words, profit making losses or allowable drop in sales. Margin of safety 8 lakh makes a profit of 320. Fixed cost is 5 lakh, then actual sales is. Okay. Try. You can get the answer still. Not a very difficult one. But if you are clear on the linkages, you will get the answer, else you will get stuck. How much? 20.5, I think. This will give me PVR. What's the PVR? 5 lakh divided by 40% is break even point. 5 lakh divided by 40%. Tell me 5 lakh divided by 40. 12 lakh 50. 1250 plus 8 lakh is the sales. 1250 plus 8 lakh is the sales, which is 20 lakh 50,000. Get answer to this. We did this again, different questions. I've just picked it from multiple places. Contribution is 3 lakh 70. Profit is 10 lakh into 25% into 37%. 10 lakh into 25% into 37%, and fixed cost is 10 lakh into 75% into 37% into 75%, which is the break even point, or the balancing figure, whichever way you say. 277 500. Try answer to this. Let's see if you're able to get this. One 187 500 divided by 75% is total sales. Total sales minus total cost is profit. That's all. Total sales minus total cost is profit, which is what? 56 250. Total profit of the product is 3 lakh. Present fixed cost is 7 lakh, which means today the contribution is 10 lakh. Our target 10 lakh. Company plans to sell 1 lakh unit. And MOS is what? 40% of sales. How much is the, okay, so let's ignore this number. This was part of that problem, black and white. We had one question where they wanted to know what is the reduction in fixed cost. So my total profit is 3 lakh, and fixed cost has to reduce from 7 lakh. How do I do this? We have kind of done it there. How will I get answer to this? What can we calculate here? Okay, BEP is there. What is the use of BEP? BEP, MOS is 40,000, BEP is 60,000. Then what should I do beyond this? 40% of sales. CPU. We did CPU in the class, and based on CPU we reverse worked. 3 lakh divided by 40,000 is 7.5. Use the same 7.5 and you got 4 lakh 50,000. Use the same. Question has given 7 lakh. I need a reduction of 2 lakh 50. Any doubts on this? Get me answer to this. Simple computation only, but a lot of points I've added there. So be a little cautious and get answer. Fixed cost is 30,000. PVR is how much? 30%. So BEP is how much? 40% is equal to 1 lakh. 30% is MOS. Why 30%? Because companies are only 70%. Companies only at 70%. So 40% is break even, 30% is MOS. 40 is equal to 1 lakh, 30 is equal to question mark. Get me the answer to this. Little tricky. Let's see. Not very difficult, but yeah, little bit maybe you'll have to see. One, change in profit by change in sales will give me PVR. Change in profit by change in sales. Change in profit is 12. Change in sales is 30. PVR is 40%. Fixed cost by PVR 10 lakh divided by 40% is 25 lakh. 180 minus 25 is margin of safety. As you do more and more questions, the best way, I've been repeating this only, do MCQs continuously. Your speed will also improve and ability to link will also improve. Sales to achieve desired profit plus fixed cost divided by PVR or contribution per unit. This I've told in any of the formulae. If PVR is used in denominator, answer will come in rupees, and if contribution per unit is used in denominator, you will get the answer in units. MOS is 120 crore, PVR is 30%, break even is what? 400 crores. Indicate the sales figure with the working that will be needed to earn what? 30 crores over and above the present profit, and also meet 15% interest on the additional capital of 100 crore. Tell me what is the present profit first. What is the present profit here? Very simple number. 36. What is the present fixed cost? 120. Fixed cost from 120 will go up to 135 because extra interest. 15% on additional capital. So 120 will go up to what? 135. 36 has to increase to how much the question is saying? 66. Desired profit 66 plus fixed cost 135 divided by PV ratio. Divided by PV ratio. So the answer is going to be 6. Get answer to this. Either apply the formula or do an equation. Please do an equation, otherwise. Number of units is X. Do it. Number of units is X. Either write the statement or write the formula. You keep doing this. Yeah, do this. Form the equation. If you put it in marginal cost statement, automatically you will get to the answer. 1. 20 is the selling price. Sales is 20x. 14, 14x, 6 and 6x. 6x minus 792 is equal to 2x. What is 2x? Is 10% of 20x. 792 divided by 4 is how much? 1,98,000. This selling price to earn a profit. This is selling price to earn a profit. So take the selling price as X and do it. We did this in one problem on bottles example. Take the selling price as X and do it. Put in the statement. Put it in the statement. You will get the answer. Selling price will be X. Put the data in the format, automatically you'll get to the solution. Do the statement, please do the statement. This percentage calculation and all, you'll not be able to do it in the calculator. Number of units is how much? 5,000. So sales is 5,000 x, variable cost is 50,000, commission is 500x, commission is 500x, contribution is 4,500x minus 50,000, fixed cost is 25,000. So net 4,500x minus 75,000 is equal to 10% of 5,000x, which is 500x. Answer will be 18.75. Any doubts on this? Get answer to this. Sorry, 1 lakh? 9? No. Answer is 5 lakh. I can explain in multiple ways. My simple explanation is contribution is 25% of sales, profit is 20% of sales, which means fixed cost is 5% of sales. Fixed cost is 5% of sales. 25,000 divided by 5% is sales. 25,000 divided by 5%. I can take sales as x, variable cost is 0.75x, contribution is 0.25x minus 25,000 is equal to 0.2x. You will get the same answer. Tell me the answer to this. Again, statement format, everything has to go in that format only. Formula can be done, but statement, if you do marginal income statement, you will easily get the answer. Statement will easily give you the solution. How much? I think 10,000. One irrelevant data is this total cost in the question. I don't know why he wanted. 550x is my sales. Number of units is x. Variable cost is 350x. 200x minus 10 lakh is equal to 100x. Profit is 100. Profit is 100 per unit. So 100x. 200x minus 10 lakh is equal to 100x. Net 100x is equal to 10 lakh. X is equal to what? 10,000. This is not needed. Profit, the concept says is it has to be PBT. Profit has to be PBT in all the formulae. In case PAT is given, convert the same into PBT. Very simple formula, PAT divided by 1 minus tax rate. That is what you need to ensure in calculation. ABC Limited has current PBIT is EBIT of 21.6 on a total asset of 120 lakh. company has decided to increase asset by 30 lakh, which is expected to increase the operating profit before depreciation by 8.6, net increase in depreciation by 1.7. This will result in ROI. This is technically not related to profit calculation. It's technically an FM adjustment. ROI, what is the formula of ROI I had given there? ROI is what's the formula? EBIT by capital employed is technically total asset. Capital employed is technically total asset. So 21.6 divided by 120. 21.6 divided by 120 into 100. What's the percentage? 18. Now this 21.6 will go up by, they're saying the company has decided to increase assets by 30 lakh, which is expected to increase the operating profit by what? 8.6, deduct depreciation increase of 1 point, it's PBIT. PBIT means depreciation has to be subtracted. Depreciation has to be considered in the calculation. This is my numerator improvement. Denominator from 120 will increase by what? 30 lakh. Tell me the new ROI. 19%. So net, my ROI improves by 1%. This is more of your financial management adjustment rather than the costing adjustment. But this can come, question can say, my profit has to be 20% of capital employed, 10% of capital employed. For that purpose, this understanding is needed. Get answer to this. PAT of 60,000. Apply the formula. PAT of 60,000. PAT of 60,000. $60,000 divided by 1 minus tax rate 1 lakh. 1 lakh plus fixed cost 20,000. 120 divided by 2. Rate of return on sales. Rate of return on sales is net profit by sales. Try to get both the number. Net profit and sales. Rate of return on sales is net profit by sales. Net profit divided by sales. Fixed cost 240, PVR 40%, break even 6 lakh, margin of safety 9 lakh, put together 15 lakh. On this 15 lakh, profit is 360. Profit is 360, which is MOS into the PVR, and 360 divided by 15 lakh is 24%. Get me answer to this. 10% return after tax. PAT has to be 10% of investment. PAT is 10% of investment. PAT is 10% of investment. Get PBT plus fixed cost divided by PVR. Volume in this question indicates value. How much? PAT is 10% of 30 lakh, 3 lakh. 3 lakh divided by 1 minus tax rate is 3 lakh 75. 375 plus 175 is 550. 550 divided by 40%. 550 divided by 40%. Change in sales. Many question will say that I want you to calculate a new profit by changing the sales and all. Any change in sales means change in units sold. Any change in sales means change in units sold. So sales of the company can change based on change in selling price or number of units. Many question would ask us to fix a selling price or number of units. In case it is silent, Sales will change based on unit sold, and hence unit sold would be taken as X. Some question you don't have units data, then overall sales is X. Same PV ratio continues, and then you get your variable cost and contribution. If selling price changes, same PV ratio cannot continue. Cash BEP means you'll have to ignore fixed cost. Quickly get the answer. Cash BEP. What's the answer? Sorry? It's not 5,000, it's 10,000, because the word is very clear. Other fixed cost, not total fixed cost. So no need to remove depreciation from there. Depreciation is separate, other fixed cost is separate. 30,000 divided by 3. 30,000 divided by 3. Normal BP is 30,000 plus 15,000. 30,000 plus 15,000. Indifference point is the level of production or volume at which two alternatives will give me same result. Above indifference point, high fixed cost. Below indifference point, low fixed cost is better. Change in fixed cost divided by change in VC per unit, change in contribution per unit, change in variable cost ratio, change in profit volume ratio. If you divide by ratio, you get the answer in rupees. If you divide by contribution per unit or VC per unit, you get the answer in units. A company can produce product A either through method A or method B. Method A, high variable cost and low fixed cost. Method B or product B has low variable cost and high fixed cost. I should have mentioned not product. This is method B. Which method is to be preferred if there is a heavy demand? Get me an answer. If there is heavy demand, which method is to be preferred? Product. If there is a heavy demand, we prefer high fixed cost. We prefer high fixed cost and low variable cost. Get me answer to this indifference point. You have to either do the statement or visualize the statement. Change in fixed cost. Change in fixed cost is how much? 6 lakh divided by change in PVR. 50 lakh is the sales, profit is 20, fixed cost is 2, which means contribution would have been 22 lakh for the first product. Contribution would have been 22 lakh, which is PV ratio of 44%. Second product is 37 lakh. Second product is 37 lakh, which is a PVR of 74%. So change in PVR is 30%. 6 lakh divided by 30%. If you do the statement, it is kind of simple. If you do the statement, it's going to be fairly simple. BP for multiple products. When I have multiple products, the problem for me is I cannot use PVR or contribution per unit in the denominator because I have multiple products. So we have two choices. If the given mix is in rupees, I calculate composite PVR. What is composite PVR? Is total contribution by total sales into 100. In case it is given for units, we'll say one set contains so much and do contribution per set. In this case, we have multiple products leading to different PVR or CPU, cannot be directly used. This is to be followed if given mix is for what? Units. If you give it for units, we do what? Contribution per set. If it is rupees, we calculate composite PVR. We calculate composite PVR and accordingly we do the calculation. Any doubts in this? I'm not doing a question on this. Plant merger. What is plant merger? It refers to a situation where I'm merging plant A and plant B together. Now onwards, they are going to be single plant. Earlier, it was separate plant. So merger said only one thing. Before you merge, bring everything to 100% capacity, add up together and make the combined marginal cost statement. So first could be at 40, make it 100. Second could be at 50, make it 100. Add them together and do all your analysis with the merge statement. Do all the analysis with the merge statement. Two manufacturing plants will merge together, operate as single plant. Because of merger, cost dynamics will be weighted average. Prepare individual statement for both plant at what? 100%. Income statement of merged is 100% and do all your requirements with this. Do all the requirements. Can you give me answer to this? Please do the combined statement. Take it to 100%, do the combined statement. Do 100% statement. First plant, what will be the sales at 100%? 1000. Contribution will be 200. Contribution will be 200. Second product, what will be the sales at 100%? 500. Again, its contribution is also 200 because 40%. So 200 plus 200, 400 divided by 1500. 400 divided by 1500, 26.67. If you do the statement properly, you will get to the answer. Statement I have not been doing in every question. Next, shutdown point refers to the level at which company is saying we are not able to even recover something called as avoidable fixed cost. So formula is fixed cost during operation minus fixed cost during shutdown minus the additional fixed cost to resume operation divided by contribution per unit or PVR. If your operations is below shutdown point, close it. Above shutdown point, continue running the operation. This is just a temporary phenomenon. Company has a normal fixed cost of 8 lakh. Thinking of temporarily shutting down, the company will incur a fixed cost of 2 lakh during shutdown, additional fixed cost to resume operation. What is the shutdown point? Apply the formula. Shutdown point, apply the formula. During operation minus during shutdown minus additional fixed cost to resume operation, divide by PVR or CPU. 8 lakh minus 2 lakh minus 1 lakh, 5 lakh is the avoidable fixed cost, divide by what? 40%. BP with multiple variable cost. In case you have multiple variable cost or multiple fixed cost or multiple fixed cost, you do trial and error. What is trial and error? You get first answer, check whether it is fitting in the class interval. Not fitting, ignore it. Fitting in, it is valid. So that is if you have something called as multiple fixed cost. Multiple variable cost or multiple selling price. We saw a question where selling price was changing or variable cost per unit, the homework question, that overtime which you had. So where what you need to do is very simple. In case contribution per unit is changing, you will have to say total contribution is equal to total sales. First set of units you earn whatever number, balance set of units A into the contribution per unit, A into the contribution per unit, and that will give you the answer. Multiple fixed cost, tentative break-even point. Multiple fixed cost is tentative break-even point, and based on the tentative break-even point, you will see whether it is fitting in the class interval or not. Then absorption versus marginal costing. It classifies cost into 4 categories: variable fixed cost, variable production cost, fixed production cost, variable non-production cost, fixed non-production. Absorption costing said consider all production costs for inventory valuation, whether it's variable or fixed. Marginal costing said only consider your variable production cost. Fixed is not to be considered. So that is the only difference we have. Here both are considered. Here there is a difference. Fixed production cost is considered in absorption costing, not considered in marginal costing for inventory valuation. And when I write my fixed production cost, I have to go with OAR concept. I have to go with the OAR concept. This ensures that my cost per unit does not vary. In case there is a variation in variable cost, you can assume it's normal, consider for inventory valuation, abnormal, ignore for inventory valuation. We did in class ignoring, and the printed solution had something called as when you consider for inventory valuation. And when you do your marginal costing, sales less variable cost, contribution less fixed cost and profit. Variable cost is variable production cost, add opening FG less closing FG, variable COGS, other variable cost, any under or over recovery, and then you put it in the statement. X Limited has a marginal cost profit of 128,600. Opening stock is 1,600. Closing stock is 1150. Company is considering changes to absorption costing. Fixed overhead absorption rate is what? 4 per unit. Profit under absorption costing will be very simple. Marginal costing was a profit 128,600. My opening stock will go up by 1600 into 4 rupees because fixed cost will also be considered. Fixed cost will also be considered. 1600 into 4 will be the increase in increase in opening stock and technically decrease in profit. Technically the decrease in profit. So from 128,600 profit will go down by 6,400, but good part is closing stock is 1150. Closing stock is 1150. 1150 into 4 is 4,600. So from 128,600 add 6,400. Sorry, deduct 6,400. Deduct 6,400 and add 4,600. What's the number you get? 126,800. Any doubts on this? Any doubts? When sales exceed production, what will happen to profit is the requirement. Listen, when sales is exceeding production, let's assume this is sales. This side I write production, opening stock, closing stock. Sales is 20,000. Production is 15,000. Opening stock, let's assume is 10,000, some random number. Opening stock 10,000. What will be the closing stock number now? 5,000. In short, my opening stock is high and closing stock is less. Opening stock is high and closing stock is less. High opening stock will depress the profit of absorption costing, will reduce the profit of absorption costing, or in other words, you can say opening stock is 5,000. Zero closing stock. Understand, there is no closing stock itself. So if you have opening stock and no closing stock, absorption will show lower profit. Marginal costing will show higher profit. Marginal is higher than that of absorption costing. Clear? Any doubts on this? This can come as an MCQ in exam. Understand the calculation. What I did, sales have taken one number, production have taken one number. Opening stock is balancing figure, no closing stock. No closing stock. Clear? Any doubts on this? If you do not have closing stock and you have opening stock, absorption will end up showing lower profit. Limiting factor is the one which is going to constrain or limit the level of activity. For every company, demand will be the primary limiting factor. What is demand as primary limiting factors? First I go with demand. Do I have adequate capacity? Yes. Go ahead and meet the demand. In case you are not able to, then you will have to find limiting factors one whose demand is what? More than its supply. Selling price less variable cost, contribution per labor hour, and then I do allocation. Product units hours consumed, balance hours and contribution. When I did in class, I gave a format: product units hours per unit, hours consumed and contribution. Doesn't really matter. Almost the similar format. Contribution per unit of product is 10 and B is 15. Labor hours required to produce is 2 and 5. Which is the better product if labor is limiting factor? Think and let me know. If labor is limiting factor, 10 divided by 2, 5. 15 divided by 5, 3. So rank is, product A is rank 1. This is rank 2. Contribution per labor hour. Get me the answer. Simple calculation. Contribution per labor hour. 5. 30 minus 20 is 10 rupees contribution. 10 divided by 2. Make or buy decision. This we saw in one of the question. So first thing is, concept is, do you want to make a product or buy a product depends on your manufacturing cost. If you can manufacture something at a cheaper cost, then obviously you want to make a product. And if you can buy it at a cheaper price, then obviously you would want to buy. So the rule is, cost of make is to be compared with what? Cost of buying, and based on that we'll do a decision. In case cost of making is lesser, make the product. In case cost of making is higher, buy the product. Along with this, if you have limiting factor, then you will have to do ranking based on what? Savings per unit and not contribution per unit. Ranking should be based on what? Savings per unit and not contribution per unit. A toy manufacturer finds that it costs how much? 8.5 per unit to make the component. 8.5 per unit to make the component. A supplier is ready to provide the same component at what? So outside guys 7.25, you are doing 8.5, but continuous supply is also assured. Breakdown of cost. Material how much? 3.6, labor 2.4, other variable cost 1. This is irrelevant cost. Depreciation and other fixed cost is irrelevant. Anyway, this will be incurred. Depreciation cost is anyway going to be incurred. Fixed cost is always irrelevant for decision making. So cost of making the product is 3.6 plus 2.4 plus 1 rupee, which is how much? 7. And your purchase price is 7.25. I'll obviously make the product. I'll obviously make the product at what? 7 rupees. Okay, we saw this in one of the question. Tell me what is the break even point here? It's not technically related to this area, but we saw in one problem. What will be the formula for break even point? Fixed cost divided by saving per kilometer. Fixed cost divided by saving per kilometer. 20,000 divided by 6. We saw one question, price elasticity of demand, where the question said price elasticity of demand is one time. If it's one time, overall sales of the company will remain same. Overall sales of the company will remain same. Get me answer to this. $5,000 into 100, 5 lakh is the sales. Price has gone down to 80. 80 into the number of units will be 5 lakh. 80 into the number of units, which is 6250. Clear? Any doubts on this? Done? Take it. With this aligned it. Okay, let's now revise budgets and budgetary control. First, we understood a budget is basically a financial statement or a quantitative statement which is prepared ahead of time. Why we prepare this? Because to do some forecasting. The forecasting can be of income, can be of expenses, can be of capital, can be of asset, can be of liabilities. In the ratio analysis chapter, when we forecast a balance sheet and P&L, that's technically this only. Budgeting, we are trying to budget it. In order to do this, the first category of budget is called fixed versus flexible budget. A fixed budget is rigid, which does not change with the change in level of activity. That is, production going up or going down does not change the budget for a fixed budget. Flexible budget is one where you will have to revise based on the level of activity, where we have three types of cost. One is fixed cost that does not change with volume. Variable cost is directly proportional with volume. Semi-variable cost may or may not change. Fixed cost at the overall level remains constant. Total fixed cost remains constant. Variable cost at a per unit level remains constant. VC per unit is constant. Semi-variable is neither constant at a per unit level nor constant at a overall level. It neither remains constant at a per unit level nor remains constant at a overall level. Now, how do I split my semi-variable cost? Change in cost by change in units. This will give me the variable component. I substitute this in the semi-variable cost and get to the total fixed cost. Get to the total fixed cost. Repairs and maintenance for 1000 units is 4000, and for 5000 for 1400 units. What is the repairs and maintenance for 2000 units? First divide and tell me, are you getting same number at a per unit level? 4000 by 1000 is 4. 5000 by 1400. No, which means it is what? Semi-variable. So VC per unit is equal to VC per unit is equal to VC per unit is equal to change in cost by change in units. What's the change in cost? 1000. Change in units, which is, I substitute this 2.5 in any level. So I substitute here 1000 into 2.5. I get 2500. Balance is the fixed component. What is the fixed component? 1000. 500. So cost for 2000 units is 2000 into 2.5, added another 1500, added another 1500, we get 6500. Power cost of last year is 10 lakh. 80% was incurred on production, balance on employee quarters. We have done this in one question. The production has doubled in the current year. What will be the power cost of current year? What should be the power cost of the current year? 10 lakh is the overall power cost. In that, 8 lakh is related to production, which will double because production has doubled, which will double because production has doubled. Employee quarters will remain same. Employee quarters could have, the question could have said the production has doubled in the current year and number of employees have gone up by 10%, which means employee quarters expense would have gone up by 10%. It could have gone up by 10%. So 8 lakh will double to 16 lakh, 2 lakh remain same. Put together 18 lakh. Factory overhead is 3 lakh 20 for 550 units, 360 for 650 units. Variable factory overhead will increase by 8%. Fixed factory overhead will increase by 15%. What is the factory overhead for 850 units? Excellent question. Test all our concept which was there. I'll wait for a minute. It will take at least a minute time. So take your time and then give me the answer. It will involve some calculations. Good question. Kind of test most of the concepts which are related here. 4. Variable cost per unit is add 8% to the per unit. How is it 400? 360 minus 320 divided by 650 minus 550. Add 8%. Any change in variable cost means a change in variable cost per unit. Fixed component is if I substitute 400 into 550, I get 220. Leftover is 1 lakh. Leftover is 1 lakh. So add 1 lakh. Any change in fixed cost means a change in total fixed cost. So 1 lakh 15 plus 432 into 850 was the answer you get. 482, 200. Selling expense 20% fixed. Selling expense 20% fixed is 15 per unit at a capacity of 20,000 units. What will be the selling expense if volume is 15,000 units? Volume is 15,000 units. Two lakh 40. Fixed expense is how much? 3 per unit. 3 per unit you will have to multiply with 20,000 and write it as 60,000. Leftover number is 12. Leftover number is 12. That 12 has to be multiplied with 15,000 units. That 12 has to be multiplied with 15,000 units, which is 1 lakh 80. 180 plus 60 is 2 lakh 40,000. Any doubts on this? Any doubts on this? Clear? Give me the answer to this. We have done this in one question. Not independent. Products are not independent. Implement for both X and Y. If they are not independent, calculate the overall profit, which is 180. Again, calculate the overall profit, which is 2 lakh. Overall profit is going up. Please implement for both. If they are independent, reject for X, implement for Y, because X profit is going down, Y profit is going up. Y profit is going up. Tell me the answer to this. This number will be 32 lakh, I think. Extra zero. 30. Okay, first is it's 50 units, 75 units. Let us see it as 100% capacity is 100 units. Change in cost is 10 lakh. Divided by change in units is 25. Change in units is 25. 10 lakh divided by 25 is how much? 10 lakh divided by 25. 40,000. 40,000 into 50 is the variable component. Balance fixed component is 10 lakh. Balance fixed component is 10 lakh. 10 lakh plus 40,000 into 60. 40,000 into 60. All put together, you get how much? 34 lakhs. Any doubts on this? Clear? Whenever they give percentages, please assume 100 units and then proceed it. Then we saw functional budget. Functional budget is prepared for various functions of the company. First budget is sales budget, which will give me units sold, selling price, value of sales. Under this budget, the quantity will mostly be given in the question. If not given, sales to achieve desired profit is equal to desired profit plus fixed cost by contribution per unit. If a one product, do contribution per unit. If a multiple product, do contribution per set. One set contains so many units and then close it. Once the sales budget is done, I prepare production budget, where sales, add closing stock, less opening stock, production. Closing stock, if it's given as a percentage of production, if it's given as a percentage of production, then please write 0.1x, 0.2x, production is x, and then solve it and then get to the answer. In case there is any wastage in a question, then apply sales, add closing, less opening, and call it as good production. Call it as good production. Then add provision for wastage and final production. Provision for wastage and final production. Sales, add closing, less opening, production, cost per unit, cost of production. Once the production is done, production is prepared for product 1, product 2. Sales budget is for product 1, product 2. Raw material consumption budget will be for RM1, RM2. Raw material consumption budget is for RM1 and RM2. So whatever production is there into input by output ratio, and I'll get raw material consumed for product 1, raw material consumed for product 2, product 3, product 4. Put a total, that will give you total RM consumed or total good RM consumed. Total good RM consumed, provision for wastage, and final RM consumed. In case it's a uniform wastage. In case the wastage difference is different for one FG, second FG, third FG, fourth FG, then do it at the FG level itself. We did in one question. At the individual production level itself, do it. And then in the end, you put a total. So material consumption, production, input output ratio, raw material consumed, cost per unit, value of raw material consumed. For value of raw material consumed, in one question we have to follow FIFO method and then get to the answer. Then raw material purchase budget is equal to raw material consumed, add closing stock, less opening stock, and you'll get raw material purchase. You'll end up getting raw material purchase. Normally, my closing stock of raw material depends on next month raw material consumed. So if a question has 6 months of sales budget, then I may prepare 5 months of production budget. I'll be able to prepare 5 months of production budget, because production last month closing stock is depend on the next month sale, So 5 months production budget can give me 5 months raw material consumption, and that can give me 4 months raw material purchase. So always see what is the last requirement, 3 months, 4 months, 5 months, and then keep reverse working and then do the calculation. Manpower budget will give me number of employees needed, and sometimes it can help me in calculating the overtime cost. Sometimes it can help us in doing overtime cost. So production hours required, total hours, working hours per employee, number of employees needed, wage cost per month, and then total employee cost. In this, I may have to use the formula of efficiency. Efficiency is equal to ST by AT. ST by AT. So if you are having lesser efficiency, I may need production into hours required per unit. Total hours required is 20,000. Like we did add provision for wastage and raw material, here provision for inefficiency. Provision for inefficiency, and my overall hours required will go up. Overall hours required. So the formula is standard time by actual time. Variable cost per unit 1000, total fixed cost 20 lakh, estimated sales 100 lakhs with profit margin of 20%. Calculate the number of units to be sold by the company. Think and then give me an answer. Not a very tricky one. You should be in a position to get this quickly. You will do 6,000 units. No sales to achieve desired profit. All that formula will not work here. Sales is 100 lakh. Profit is 20 lakh. Fixed cost is 20 lakh, which means variable cost is 60 lakh. Variable cost is 60 lakh. 60 lakh divided by 1000 per unit. 60 lakh divided by 1000 per unit. So it is 6,000. They have not asked for selling price. Selling price is technically 100 lakh divided by 6,000. 100 lakh divided by 6,000. Sales 14,000. Okay, similar to one we did today. Please give the answer. Similar to one which we have done. 14. 14,000 is my sales, good units. 14,000 is good units. Stock increases again, good increase. So 14,160 is good production, add rejection, final production. Final is 100, rejection is 4, good is 96. 96 is equal to 14,160. 96 is equal to 14,160. 100 is equal to question mark. What's the number you got? They have given stock increase, it can be a stock decrease also. So this adjustment takes care of that problem we did today. That problem didn't have anything else. We were just doing that adjustment, and after that it was just a formality. So every question has been framed in such a manner that you can revise your bigger question, provided you have clarity on doing the problems. Give me the answer to this. This was there in another question. Don't you'll remember the answer. Answer is 49,000. Sales is 48. Closing stock is zero point 0.1 production. Opening stock 3,900. I have not changed the numbers. Production 48,000 plus 0.1 P minus 3,900. Minus 3,900. You'll get production as what? 49,000. But as I said, the important part is when you revise this, you'll be able to revise that bigger question which I wanted to. My objective is very simple. Please keep revising the MCQs, because I have told this in the past batch also. They have not tried revising this. They were trying to solve the bigger question. Bigger question, you mark questions. You, for example, moment you solve this MCQ, I wouldn't want you to solve that question itself. That question has nothing else beyond that. I don't see anything else is there in that question beyond this. If you solve the earlier MCQ, that other question which we solved, I don't have anything beyond that. If you have anything beyond, then mark it. Otherwise, there's no point in repeatedly doing those questions, because those will take 20 minutes. This has taken us 1 minute to do it. Exactly the same adjustment. It's not a different adjustment I've done. That took me 20 minutes to do. This has taken me 1 minute. I can just close with this also, but you'll not get the comfort to do the full question. So always please revise all these MCQs. Give me answer to this. Sales is 250. What is closing stock? 40,000. 4 days of sales. 4 days of sales is 2,50,000 into 4 by 25 into 4 by 25, which is 40,000, minus opening stock is 20,000, minus opening stock is 20,000. You get a number as 2 lakh. Okay, think through this. I'll explain in some time. We have done this in one question, where one of the component we were making in-house rather than buying it from outside. So think through it. It's slightly tricky. This we did in the previous session. I'll discuss it in a minute. 20. 1 lakh into 2, 2 lakh is the first product. 3 lakh is the second product. 5 lakh is the third product. This product we don't make it in house. We don't make it. Sorry, we don't buy it from outside. We don't buy it from outside. In order to make this in house, I need 4 units of component Y. So to make this 5 lakh, I need 20 lakh. To make this 5 lakh, I need 20 lakh. So what I am going to buy is 2 lakh, 23 lakh. This will not be purchased. So we will be writing 0 here. We are not going to buy this. 2 lakh and 23 lakh is what I need as the component X and component Y. Component X is 2 lakh, component Y is 23 lakh. We have done this as part of a bigger question. So those adjustments are pulled out here. Give me answer to this. 1 minute and you should be able to get the answer. Nine lakh. Production is 3 lakh unit. 1 unit of finished product requires 3 kg of raw material. So 3 lakh into 3 is 9 lakh. In that 9 lakh, add closing stock is 10% of 9 lakh, which is 9 lakh 90, minus opening stock 20, minus opening stock 20. Purchases 9 lakh 70,000. Get answer to this. Again done as part of a bigger question. One lakh. It says standard time is 80,000. Efficiency is equal to ST by 80. 80% is equal to 80,000 by 80. 80 is equal to 1 lakh, and on top of this 1 lakh there's another 20% hours actually work. The employees were working in that 1 lakh hours. Employees worked for 1 lakh hours. They were not able to get the output. They were not able to get the output. So 1 lakh plus another 20%, 1 lakh 20,000. Get me answer to this. Forty-four. Let others check. This we discussed in one question. I need how many hours to complete manufacturing? 2 lakh hours. In this 2 lakh, 1000 into 160 is normal time. 1000 employees into 160 is normal time. 1000 employees into 160 is normal time, which is 1 lakh 60,000, and balance is, which is 40,000. Normal you will pay at the rate of 20. Overtime you will pay at the rate of 20 plus extra 50% plus extra 50%. 1 lakh 16 to 20 plus 40,000 into 30. Any doubts on this? Okay, we have seen this in the one segment of the question. Budget ratios, efficiencies, labor chapter, standard time by actual time into 100. Calendar ratio is technically called actual days by planned days into 100, which has another name called possible hours by budgeted hours. What is actual days of working? So this I can say it as actual days by budgeted days into 100. Activity is basically how much did I produce as compared to what I wanted to. What is produced is called standard hours. How much output? Standard hours is always calculated with the help of actual output. So what is produced is called standard hours divided by what we were planning for. And in the capacity ratio, we have three types of capacity ratio. One is called standard capacity usage ratio, actual capacity usage ratio, actual usage of planned capacity ratio. Standard capacity usage ratio is how much did we plan to work as compared to maximum possible. How much we are planning to work as compared to maximum possible. How much did we achieve as compared to maximum possible, and the numerator of both the formula, actual as compared to budget. Actual as compared to budget. These MCQs I'm not discussing. With this chapter gets over. Okay, so today we are going to first do the revision of standard costing, which we have covered. The regular videos we have covered it in extensively. What we learned in standard costing is its extension of budgets and budgetary control, where an organization prepares a budget, and based on the budget I want to evaluate how my actual performance has been and get to know various variances which occur, and in the end, based on the variances, I'm going to fix some responsibility on few people. Somebody would be made responsible for some of the variances. So standard costing refers to the standard refers to the planned performance, whereas the actual refers to the actual performance, and there is obviously going to be a variation between the planned performance and actual performance. This variation I'll have to analyze through a tool called standard costing, which is going to analyze the difference in budgeted profit and actual profit. In fact, in the last session, in one question, we did a reconciliation which started with budgeted profit, found out various reasons for difference in profit, and we got to know the actual profit. First term is budget, standard, and actual. Budget means, or standard means same at a per unit level. At a per unit level, budgeted profit, standard profit same. Budgeted cost, standard cost same. Budgeted quantity, standard quantity same. At a per unit level, there's no difference between the term budget and standard. Budget is a flexible budget for budgeted quantity. Standard is a flexible budget for actual quantity. It's a flexible budget for your actual quantity. You're technically preparing a budget only. Budget is for the entire output which you are planned to produce. Standard is for the actual output. Refers to the cost to be incurred for budgeted output. Standard cost refers to the cost to be incurred for actual output. One is for budgeted output, one is for actual output, and actual cost refers to what we have incurred, because these two are apple versus apple, actual output versus actual output. So I can compare only orange with orange. So AO both are comparable. AO is comparable. So all our variances is the difference between standard and actual. Sometimes we write it as actual minus standard depending on what you want to prioritize, or some rare scenario it can be budget minus actual, like fixed overheads, where I cannot have any variation in cost just because volume is going up or volume is going down. So budgeted output 40,000, budgeted cost 20 per unit. When you multiply these two, that's called budgeted cost. 50,000 into 21 is called actual cost. Standard cost is 40,000 units. Standard cost is 40,000 units, sorry, standard cost is 50,000 units into 20. Standard cost refers to the cost to be incurred for actual output. So 50,000 units, which is the actual output, into 20. That will give me standard cost, and then I compare the difference between standard and actual. There are multiple formulae for variances which we learn through a chart route. In order to quickly revise the chart, there is a link which is presented there, which you can use it when you do your revision. They will give you a quick summary of all those charts which are there. I'm not discussing the charts again now. Material variances, what we do is we have two situations. One is called single raw material, second is called multiple raw material. Under single raw material, I start with SP and AP in the side, SQ and AQ here, SP into SQ, SP into AQ, AP into AQ. In between an item come called as RSQ, which is in case of multiple material. SP into SQ, SP into RSQ, SP into AQ, and AP into AQ. So single material, multiple material, these are your formulae. I'm not revising the formulae again. And in between an RSQ will come, which will give you the mix variance and a yield variance. Yield is otherwise called as sub usage. Yield is otherwise called as sub usage variance. And we also learned one variance called material purchase price variance. We saw this in the last session. Material purchase price variance, which is SP into AQ minus AP into AQ, but AQ is AQP, actual quantity purchase. Normally what you do is AQ is actual quantity consumed, AQ is actual quantity consumed, SP is price to be paid, AP is price actually paid, SQ is quantity to be consumed, quantity to be consumed. Let's look at this. Standard price of material is 20, standard usage per unit of production is 5, actual usage of production is 100, or for 100 units is 520, all of which is purchased at 22. Material cost variance, material cost variance, I'm writing the formula, you do the calculation and tell me. SP into SQ minus AP into AQ. You'll have to do this calculation, SP into SQ minus AP into AQ. What is the standard price in this example? 20. Standard quantity. Standard quantity refers to the quantity to be consumed for actual output. 100 units, actual usage of production, 100 units is 520 kg. So 100 into input by output. What is the input by output? 5:1. So 20 into 500. What is the AP? 22 into, what's the answer you get? 14. Negative answer would indicate adverse. Actual material cost 96,000, material price variance 4,000 favorable, material usage variance 20,000 adverse, standard price per kg of raw material is 20. What is the actual output if the company needs 2 kg of raw material for 1 unit of finished product? 2 kg of raw material for 1 unit of finished product. We are required to compute what here? AO. SQ is always calculated with the help of what? Actual output. Now it will happen reverse. How is it going to be reverse? SP into SQ, SP into AQ, AP into AQ. What is the AP into AQ number in the question? 96,000. If price variance is 4,000, think in the mind what is the formula for price variance and tell me first or the second column. One of them will get created. SP into AQ. Okay, 92 minus 96 is what? The answer says 4,000 favorable. This is 1 lakh. Material price variance is SP into AQ minus AP into AQ. So 1 lakh minus 96 will become favorable. If usage is 20,000 adverse, what is the first column? What is the formula for material usage variance? SP into SQ minus SP into AQ. What will be the answer for the first column? 80,000 broken down into 20 into, tell me the SQ, 20 into 4,000. 4,000 is equal to AO into input by output. AO into input by output, and this will give you the actual output. This will give you the actual output, which is how much? 2,000 units. A company produces two products A and B. Raw material C is needed to produce both product. Two units of C are needed to produce one unit of B, whereas four units of C are needed to produce one unit of A. The company has produced two products, 200 units of A, 400 units of B. What is the standard quantity? Give me the answer. 200 of A, 400 of B. What's the answer? 1000? 200 into what you said? 200 into 4 plus 400 into 2. I've changed the order here. Be a little cautious. 4 units of C are needed to produce 1 unit of product A. So 200 units into 4 plus 400 units into 2. You get 1600. What is the standard quantity of raw material A? These are straightforward calculations. First, SQ is equal to AO into input by output, 270 into, which is, and split that in the ratio of 3 is to 2. Split that in the ratio of 3 is to 2, you get 180 and 120. Try to get to this. Try to put the table, you will get the answer. If you put the table, you will get to the answer. 1 SP into SQ minus SP into AQ. Your usage variance is minus 600. Standard price is 5 rupees lower than the actual price. So which is 20 SQ minus 20 into 200. If you solve this, you'll get answer as 170. Any doubts on this? Okay. Material price variance is 50,000 favorable. Standard price is double that of actual price. The company has consumed 2000 units of raw material. How much is the standard price? How much is the standard price? Tell me the formula for material price variance. SP into AQ minus AP into AQ. This is how much? 50,000. SP into 2000. SP into 2000. And this is 0.5 SP into 2000. Why 0.5? Standard price is double that of actual price. Standard price is double that of actual price. Solve this and tell me what's the standard price you get. This is 0.5 SP into 2000. First one is SP into 2000. Second one is half SP into 2000. What's the standard price you get? 50 per unit. Material purchase price variance. Standard price of material 20. Actual price of material 20. 21. Quantity consumed 250. Quantity purchased 300. Material purchase price variance. Material purchase price variance. So MPPV is equal to, what's the formula for material price variance? SP into AQ minus AP into AQ. Purchase price is SP into AQP. AP into actual quantity purchase. What's the standard price? 20 into 300 minus, And if you do normal price variance, it's 20 into 250 minus 21 into 250. 20 into 250 minus 21 into 250. A chemical is manufactured by combining two standard items, input X, whose standard price is 20, input Y, standard price is 25, in the ratio of 60 is to 40. 10% of input is lost during processing. During a month, 1800 kg of chemical is produced, incurring a total cost of 49,560. They've asked for only one variance, which is called material cost variance. For material cost variance, I need what? SP into SQ AP into AQ. I have two materials here, X, Y. I have two products, X and Y. What's the standard price of X? 20. Y. Please calculate SQ and tell me for the two products. Tell me what is the SQ for the two products. It is easy to calculate it. SQ for both the products. Major chunk of our time will go only in SQ calculation. 1800 into 100 by 90. 1800 into 100 by 90 split in the ratio of 60 is to 40. So 1200, 800. What's the total of the first column? Total of the first column. 44,000. Last column is 45,960. I don't know how much is X, Y and all, but last column is 45,960. The difference is what? 1,960 adverse. Standard material required to manufacture 1 unit of product is 4.5 kg. Standard price per kg of raw material is 3.2. Cost accountant record, however, revealed that 16,000 kgs of material costing 54,000 were used for producing 3,500 units of product A. Material price variance. I think a straightforward question. Get me the answer. Material price variance. Material price variance. What is the formula for material price variance? Formula. Tell me the formula. SP into AQ minus AP into AQ. The question has given a lot of irrelevant data like 4.5 kg and all. I'll directly take the 16,000, multiply with 3.2 and subtract 54,000. Subtract 54,000. Why 54,000? That's the AP into AQ. So 16,000 into 3.2 minus 54,000. What's the number you get? 2,800 adverse. Information relating to direct material cost of a company is as follows. Standard price per unit 6.5. Actual quantity purchased 2,000. Standard quantity allowed for actual production is 1860. Material price variance. Material price variance on purchase. On purchase technically mean MPPV. Technically means material purchase price variance. What is the actual purchase price per unit? MPPV is equal to material purchase price variance is equal to SP into AQP, AP into AQP. What is the purchase price variance given in the question? 1000 is equal to 6.5 into how many quantity purchased? 2000 minus AP into 2000. Get the answer for AP. 6 rupees. That is the purchase price. That's the actual purchase price. In a factory where standard costing system is followed, production department consumed 1500 kgs of material A, resulting in price variance of 3000 and usage variance of 1500. What is the standard material cost? Standard material cost is SP into SQ. Check and let me know the answer. What is SP into SQ? Put the table, you will get the answer. SP into SQ, SP into AQ, AP into AQ. I want to know what is SP into SQ. Three columns I want: SP into SQ, SP into AQ, AP into AQ. AP into AQ is given in the question. How much is AP into AQ? 1500 into 10, which is 15,000. Price variance is 3,000 favorable, so this will be 18,000. Usage variance is 1500 adverse, it will be 16,500. Usage variance is 1 minus 2, 16,500 minus. So my standard material cost is 16,500. Company has a opening stock of 10, purchase of 400 units, closing stock of 20, standard price is 3, opening stock is valued at standard price, and company follows FIFO method. Company follows FIFO method. They've asked for material price variance. Material price variance formula is SP into AQ. What's the standard price given in the question? 3. What is the AQ? What is AQ here? Opening stock plus purchase minus closing stock, which is FIFO method. First 10 units consumed at 3, balance 380 units, which is the current year purchase. Balance 380 units consumed at what? 4. Final answer, you subtract, you will get to know the variance. 380 adverse. FIFO method means you consume the opening stock first and then consume the current year purchase. And when we did a question, we said we'll assume that opening stock is at standard price. No assumption here. They have clearly given opening stock is at standard price. Any doubts on this? Then we saw labor variances. Labor variances had 5 situations. So they had 4 situations. I had something called as single labor without idle time, single labor with idle time, multiple labor without idle time, multiple labor with idle time. We started with something called as SR into SH, then we did SR into RSH, not there for single labor. RSH is not there for single labor. Then we did SR into AHW. If idle time is there, you put a tick for that. AHW. Then we did SR into AHP. AHP is AH. AHP is normal AH. AHP is nothing but normal AH. SR into SH. SR into AH you used to write. So that's technically called AHP. And then we had AR into AHP, which will come in all the items. Which will come in all the item. When you do single labor, you have 3 variances: cost variance, rate variance, efficiency variance. When you do with idle time, cost, rate, efficiency, idle time. When you do multiple labor, cost, rate, efficiency, idle time can be there in situation 4, may not be there in situation 3, and then your efficiency is broken down into sub efficiency, which is called yield, and mix, and the mix variance or gang variance. So standard hours, revised standard hours, actual hours worked, actual hours paid, standard rate, actual. I'm not explaining the formula again in case when you do revision stage and you don't want to quickly revise how the formula came. You just need to go through this. Every variance would be explained in 10 minutes. In 10 minutes, every variance would be explained. I'm not explaining the chart again. Labor mix variance 10,000 adverse. Original planned mix is 2:1. Actual mix is 3:1. Actual hours worked is 4,500. Standard wage rate of grade B workers 10. What is the standard rate of grade A worker? Little lengthier calculation. I'll do it together. Labor mix variance is asked in the labor mix variance. What's the formula for labor mix variance? SR into RSH AH. What are the two categories they've sent? A, B, grade A and grade B. What's the standard rate for grade A? I call it as A. That is what we are finding out. That is what we are finding out. Grade B is 10. Actual hours is 4,500. The actual mix is 3 is to 1. Actual mix is 3 is to 1. Split 4,500 in the ratio of 3 is to 1. RSH is the total of actual hours, which is 4,500 in standard mix. What's the standard mix? Just a minute. Okay, sorry. My mistake, sorry. 4,500 is only of the one worker. So this is 4,000. Which worker is it? Is grade A. So actual mix is 3 is to 1. Actual mix is 3 is to 1. So 4,500 for them, and the other one is 1,500. Put together is 6,000. Split in the ratio of 2 is to 1. No, 2 is to 1. Originally planned mix is 2 is to 1. So into 4,000 into 2,000. Total of this is 4,000 A plus 20,000. Total of this is 4,500 A plus 15,000. This minus this is minus 10,000. Minus 10,000. Let me know what you get as A. If you subtract, you will get minus 15,000. So minus 10,000. Minus 10,000. 30 per hour. Check again. Yeah, 30 per hour. When you subtract this, you get minus 500 A plus 5,000 is equal to minus 10,000. 5,000 goes the other side, it becomes minus 15,000. 5,000 goes other side, it becomes minus 15,000. A is equal to what? 30. Standard output of product EXE is 25 units per hour in a manufacturing department employing 100 workers. Employing 100 workers. You only go with man hours concept, okay? Company has produced 500 units. What is the standard time? First tell me what is the standard equation. 25 units is equal to 100 hours. What is 100 hours? Is 1 hour into 100 workers. 1 hour is into 100 workers. AO equal to ST. 500 is equal to question mark 2,000 hours. Company has worked for 17,500 hours. 15,000 hours were paid at the standard rate. Balance were paid at 4 higher than the standard rate. How much is the labor rate variance? Think and then give me an answer. You may have to take an assumption. Without an assumption also you can do it. If you are logically clear, you will be able to get to the answer. Any idea what's the answer? Simple. 17,500 hours we have worked. On 15,000 hours, no variance. On 15,000 hours, there is no variance. Extra 2,500 hours, you are paid extra 4 rupees. Extra 2,500 hours, you are paid extra 4 rupees. Standard rate is not given. If you want, you can say standard rate is 2 rupees. Actual rate is 6 rupee. Gap is 4 rupee. And 2 rupee for 15,000. It's going to remain same. So 10,000 adverse will be the answer. Any doubts on this? A company has estimated to use 1000 kg of raw material and 800 hours. Standard loss in processing is 10%. What is the standard time if company has produced 9,000 kg? We saw this in previous session one problem. First, tell me what is standard equation here. What is the standard equation? 800 hours is equal to 1000 minus 10%. Now this will look very simple because this is the only information there. Your mind only focuses on this. It was a part of a bigger problem. You will start struggling with it. So that is where the clarity is needed. 800 hours is equal to 900 kg. ST equal to AO question mark equal to 9000. So you get an answer of what? 8000 hours. Company paid 8 per hour to 20, 10 per hour to 50, 50 employees, 12 per hour to 30 employees. What is the weighted average rate? Tell me the weighted average. A straightforward calculation. Weighted average rate. Eight into 20 plus 10 into 50 plus 12 into 30 whole divided by 20 plus 50 plus 30. 10.2. A certain process needed standard labor of 24 and 30 at the rate of 60 and 40 respectively as the standard labor rate. 20 and 25 were used at 40 and 50. Then the labor mix variance will be adverse, favorable, zero, favorable for skilled, unfavorable for unskilled. Now, I have not given full information. This is a question to test the logical concept. What's the formula for labor mix variance? SR into AH or AHW depending on whether there's idle time or not. What is the standard rate given? Let's for an imaginary sake assume that 1000 hours got used. Any number you can take. 1000 hours got used. What is the breakup of, sorry, 20 and 25? They have given 20 and 25 labor hours. 20 and 25 is used. 20 and 25 used. 20 and 25 put a total and split in the ratio of 24 is to 30. Split in the ratio of 24 is to 30. 20 and 25 split in the ratio of 24 is to 30. 20 and 25. Now you can answer this. This is became simpler. Labor mix variance will be 0. Now what can happen is, in case they give a different mix, then one worker will have favorable variance, one worker will have adverse variance. You'll have to do that calculation and check. One will have favorable and the other one will have adverse. Labor efficiency variance 10,000 favorable. Incentive scheme is an operation whereby employees will be paid a bonus of 40% of the direct labor hour saved at standard direct labor hour rate. Calculate the bonus amount. I did this in the previous session. Bonus amount. What's the answer? What is the formula for labor efficiency variance? Minus SR into AH. Or I can say it is SH minus AH into SR. So this is called time saved. This is called time saved. Multiply this with 40%. So technically it's 40% of labor efficiency variance. 40% of labor efficiency variance. 10% of the labor time was lost due to idle time. Standard idle time is 7.5% of labor time. Company has made payment for 10,000 hours. What is actual hours worked? What is actual hours worked? 10,000 idle time is not 10%. not 7.5%. Idle time is extra 2.5%. Extra 2.5%. So 10,000 minus what? 2.5%. A company plans to produce 2,000 units in a week of 40 hours by employing 25 skilled worker. 40 hours by employing 25 skilled worker. What is the standard equation till this? 2,000 units is equal to 1,000 hours. Company has produced 3,000 units. 3,000 units in 50 hours employing 20 worker. Abnormal idle time. Abnormal idle time due to machinery breakdown is 100. Standard rate per hour is 10. What is the requirement? Labor efficiency. What's the formula for labor efficiency variance? SR into SH, SR into AH, W. There is an idle time. There is a idle time. What's the SR given in the question? 10. What is actual hours paid? What is actual hours paid? Actual hours paid. 50 into 20,000. In that idle time is how much? 900. I get 900. SH is, our original equation was 2,000 units is equal to 1,000 hours. 3,000 units is equal to 1,500. Get the answer. 6,000. Any doubts on this? Standard labor hourly rate is 7.5. Actual rate is 6.8. This is simple. Get me the answer. Labor rate variance is given. Your labor rate variance formula is what? SR into AH minus AR into AH. SR minus AR is 0.7. 0.7 AH. 0.7 AH is 2,800. AH is 4,000 hours. Standard hours planned 450. Standard hours worked 498. Actual hours worked 498. Standard wage rate 3.58. Actual wage rate 4.28. Idle hours 7. Total labor efficiency variance. Now this becomes very tricky. This AHW, many times we interpret it as actual hours paid. We interpret that as actual hours paid. I assume it will be actual hours paid and I check the answer. If you say no, this is actual hours worked and idle time is separate. Idle time is separate, then answer changes. Normally they'll not give a, they'll say whatever overall hours worked and then idle time is a sub part of this. Idle time is a sub part of this. So assuming that, let's calculate SR into SH, SR into AH, W. SR is 3.58, SH is 450, 3.5 into, I'm writing 491, can be 498 also in the solution. Can be 498 also in the solution. Logic is very simple. The hours worked includes the idle time is my sense. 491 is what they have taken. You get an answer of what? 146.78. For producing 1 unit of product X, standard labor hours are 25. Wage rate is 3.5. In April, output is 2,000. 53,000 labor hours were actually paid, costing 217,300. 600 hours due to machine breakdown. Labor rate, I think simpler one. Get me an answer. Lot of irrelevant data is there. Focus on labor rate variance formula. Labor rate variance formula. Lot of irrelevant data is there. What's the formula for labor rate variance? SR into AHP. AR into AHP. What's the SR given? Into minus 217,300. What's the answer you get? 31,800 adverse. Direct labor cost data. Actual hours worked is 30,000. Actual direct labor cost is 2,40,000. Rate variance, efficiency variance. standard labor hour rate will be. Try to put the data, you'll get it. You'll have to write SR into SH, SR into AH, AR into H, all the three. SR into SH, SR into AH, and AR into H. Then only you'll get the answer. SR into SH, SR into AH, and AR into AH. The table will give you the answer. Could be right. Let me just check it. AR into AH. Last column is 8 into 30,000, 2 lakh 40. Rate variance is 20 to 500 adverse. So 240, what is this number? 2 lakh 17,500 broken down as 7.25. Any doubts in this? RSH is the total of what in standard mix? Actual hours, paid work. Two options are there. Actual hours worked in standard mix. Standard composition of a gang consists of 10 men, 5 women, and 5 boys. Company has employed 12, 6, and 2. Each employee has worked for 160 hours a month. What is RSH of men? Revised standard hours of men. RSH is the total of actual hours in standard mix. Total of actual hours in standard mix. Your actual hours is 160 into 12 plus 160 into 6 plus 160 into 2. All put together it's 3,200. Split in the ratio of 10 is to 5 is to 5. 3,200 split in the ratio of 10 is to 5 is to 5, which is 1,600. Labor efficiency 110%. Actual hours 5,000. Standard rate per hour 10. What is labor efficiency variance? What is labor efficiency variance? If labor efficiency is 110%, actual hours is 5,000. First tell me what is standard hours. What will be standard hours? What's the formula for efficiency? Standard hours by actual hours. 110 by SH by 5,000. SH is what? So efficiency is SR into SH minus SR into AH. SR is 10 into 5,500 and then 10 into 5,000. 10 into 5,500 and 10 into 5,000. 5,000 favorable. Standard output of a gang consisting of 100 workers for 40-hour week is 1,000 units. 100 workers for 40 hours. How much is the standard time if the company has manufactured 3,000 units in 1 month? Standard time calculation. What's the standard equation? 4,000 hours is equal to 1,000 units. 4,000 hours is equal to 1,000 units. Question mark is equal to 3,000. You get that question mark as what? 12,000. Company has 100 workers and each week has 40 hours. How much is the actual hours worked per week if the company has lost 5% due to abnormal idle time? Actual hours worked per week. 40 minus 5%, 38 into number of workers. It's always man hours concept. It's always man hours concept, which is what? 3,800. Wages budget for the last period was based on a standard repair time of 30 minutes per unit. 30 minutes per unit. And a standard wage rate is 50 per hour. Actual data for the last period is as follows. Number of units 30,000. Rate variance 7,500. Labor efficiency variance nil. Find out the actual rate of wages per unit. What is actual rate of wages? Is actual wage cost divided by actual units. Let's put it in the format SR into SH, SR into AH, AR into AH. What is the SR given in the question? 50. Tell me the SH number. Tell me the SH number. Calculate and tell me SH. What will be SH number? No. 15,000 hours, 30,000 units into 30 minutes, 30,000 units into 30 minutes, which is 15,000. I get 7 lakh. Labor efficiency variance is nil. So this is also rate variance is 7,500. What will be the last column? Rate variance is 7,500. What will be the last column? 757,500. This divided by 30,000 units. Actual rate of wages per unit, not per hour. They've asked for per unit. 757,500 divided by 30,000. Per hour, if they ask, divide by 15,000 because there will be no difference between SH and AH in this question. No difference between SH and AH. So 757,500 divided by 30,000 is what? 25.25 per unit. Any doubts on this? Then we saw variable overhead variance. Good part here is there is no separate category and all. We have only single category, which is SR into SH, SR into AH, AR into H. SR into SH can otherwise be called as SR into AO. SR into AH can otherwise be called as SR into SO, and AR into AH can otherwise be called as AVOH. It can be SH, it can be SMH, which is machine hours, or it can be even SQ, which is raw material, or it can be even output produced by the company. It can be any driver for the company. These are the conversion factors and formulae. Standard time for 1 unit is 20. Actual variable overhead 14,000. Units produced 10,000. SR per unit is 1.25. How much is VOH cost variance? Straightforward question. VOH cost variance. What is the VOH cost variance formula? SR into SH, or technically this is SR into AO minus AVOH. 10,000 into 1.25. 10,000 into 1.25. That's the first column. 1.25 into 10,000. AVOH is how much? 14,000. Subtract. Budgeted fixed overhead 10,000. Budgeted variable overhead 5,000. Budgeted semi-variable overhead 3,000. Semi-variable cost consists of 60% of fixed, 40. What is the SR per hour? What is the SR per hour for variable overhead? SR per hour for variable overhead. SR per hour per unit is budgeted variable overhead by budgeted units or budgeted hours. Get me the answer. Budgeted variable overhead divided by budgeted hours. 5,000 plus 5,000 plus, what is the plus? 3,000 includes how much variable? 40%. So add 1,200, divide by 2,000. You get an answer of 3.1. Actual hours work 10,000. Actual hours paid 12,000. What will be actual hours for VOH variances? Because you are doing a continuation of labor. If these two are there, what is the actual hours for variable overhead variances? We have done this in some question. Actual hours worked. It's only actual hours worked. Reason is very simple. Variable overhead will be incurred only when somebody is working. Only when somebody is working. So variable overhead is always having a driver of hours worked, which can include normal idle time. I'm not talking about now. I'm not distinguishing normal idle time. Normal idle time can be there, but any abnormal idle time when a worker is not working, assumption is power cost will not be incurred. If machine is not working, how will power cost be incurred? So it will be what? Actual hours worked, which is 10,000. Premier Industries has a small factory where 52 workers are employed on an average for 25 days a month. They work for 8 hours per day. Normal downtime is 15%. Firm has introduced standard costing for cost control. Monthly budget shows that budgeted variable and budgeted fixed. What is the SR per hour for variable overhead? This is not this chapter. You have to go back to your overheads chapter. Budgeted variable overhead by budgeted suitable base. Calculate and tell me. Budgeted variable overhead by budgeted suitable base. Suitable base, you'll have to go back to your machine hours concept. Machine hours or labor hours concept. One lakh 6,080 divided by 52 workers into 25 days into 8 hours, subtract 15% downtime, subtract the 15% downtime. What's the denominator you get? So you get 12 per hour. This is not this chapter. This we have done when we did overheads chapter. Then we saw fixed overhead variances, where we have two category of question. One with calendar, second without calendar. The only unique part about fixed overhead variances is they do not change with actual volume. So sum of our formula is going to be budget minus actual, budget minus standard, all those capacity variance and other things. The first variance is called expenditure variance. Expenditure is budgeted expenditure minus actual expenditure. Volume variance is actual volume minus budgeted volume. Actual volume minus budgeted volume. Efficiency self-explanatory, SH and AH. Capacity is AH as a proportion of BH or PH. If you have PH, it's a proportion of PH, and calendar is the gap between PH and BH. Budgeted fixed overheads 2,40,000. Budgeted working days in a month 20. Actual number of days is 22. What is calendar variance? Tell me the formula for calendar variance. Calendar variance formula. SR into PH are technically called PFOH, and SR into BH technically called BFOH. BFOH is 2,40,000. Simple logic. 20 days. Okay, 2,40,000 is for a year. So this is 20,000 for a month. We are doing monthly calculation. 20,000 for a month. 20 days equal to 20,000. 22 days equal to question mark. 20 days is equal to 22. 20 days is equal to 20,000 rupees. 22 days is equal to question mark, which is what? 22,000. 22,000 minus 20,000 is the variance for a month. For a year will be into 12. Budgeted fixed overhead 160. Number of working days 20. Number of man hours 1000. Output per man hour in units is 2. What is SR per unit? Think and give me the answer. SR per unit. For 1,60,000 divided by 20 into 1000 into 2 per unit. 20 into 1000 into 2 per unit. Budgeted fixed overhead 1 lakh. Budgeted variable overhead per unit is 10. Company has budgeted production of 20,000. Actual production is 15,000. Actual. What is overhead volume? Volume variance is related to only fixed overhead. Volume variance is related only to fixed overhead. Volume variance formula is SR into AO. It is SR into SH my R, SR into AO. What is the SR per unit for fixed overhead? SR per unit for fixed overhead. SR per unit for fixed overhead. Please participate. 1 lakh divided by 20,000 units. 1 lakh divided by 20,000 units. 5 into 15,000 minus budgeted fixed overhead is 1 lakh. So I get 25,000 adverse. How much is the same? Okay, budgeted output 200 units. Budgeted fixed cost per unit is 1000. Variable overhead per unit is 1500. Company has incurred overhead cost of 5 lakh 50 and produced 150 units. 5 lakh 50 and produced 150. How much is the overhead expenditure variance? This is doing it together. I'll not be able to break it into two. If you prepare a flexible budget, tell me what should be the cost for 150 units. What should be the cost for 150 units if you prepare a flexible budget? If you prepare a flexible budget, what should be the cost for 150 units overhead cost? Here I cannot do it separately. We have done this in one problem. This is not separate analysis. 150 units, what will be the fixed overhead? What will be the variable overhead? Tell me. What will be fixed? What will be variable? Variable. Okay, fixed. Fixed is going to be 200 into. This is called standard expenditure. You compare that with the actual expenditure. Variable is okay, 2 lakh 25. 2 lakh 25. So put together is 4 lakh 25. So listen, overhead expenditure variance we normally do separately for variable, separately for fixed. Separate analysis not possible because there's no data in the question. So we do it together. We do this together. So when we are doing this together, what we are doing is we are calculating standard overhead expenditure. What is standard overhead expenditure is how much should be the fixed overhead, how much should be the variable overhead. Fixed overhead do not change with volume. That is why 200 into 1000. Variable overhead is 1500 into 150. Put together is 425. Compare that with what? 5 lakh 50. Overhead cost variance 12,000, expenditure 4,000, efficiency 4,000, capacity variance. Try to get this. Try to establish the linkage, you will get the answer. Cost is 12,000 adverse, expenditure is 4,000 adverse, which means volume is what? 8,000 adverse. Volume is equal to efficiency 4,000 favorable plus capacity. Capacity will be on 12,000 adverse. Volume is 8,000 adverse. In the volume, efficiency is 4,000. Balance is 12,000 adverse. Cost variance is equal to capacity, efficiency and expenditure. Capacity, efficiency and expenditure. Capacity plus efficiency is called volume. Capacity plus efficiency is called volume. Any doubts on this? Records reveal the following data. Fixed overhead, capacity variance 2000, efficiency 1000, expenditure. Similar question to the previous. Quickly give me the answer. Capacity 2000, efficiency 1000, expenditure 5000 adverse. 2000 adverse. Capacity plus efficiency put together is called volume. Volume is how much? 2000 favorable. Expenditure is 5000. Sorry, 3000 favorable. Expenditure is 5000 adverse. So net answer is 2000 adverse. Following figures are extracted from the books of a company. Budgeted overhead 20,000, fixed 12,000, variable 8,000, budgeted as 2,500. Actual overheads 2,100, actual as 3,000. Variable overhead and fixed overhead expenditure variance. Variable overhead and fixed overhead expenditure variance. Variable overhead expenditure variance is SR into AH AVOH. Tell me variable overhead, what is the SR per hour? Variable overhead, what is the SR per hour? Variable overhead, what is the SR per hour? $3.2. Actual hours is 3,000. Actual variable overhead is 10,000. Actual variable overhead. I'm doing the variable overhead. 10,000. What's the difference you get? 400 adverse. The answer ends here itself because the other one has to be 200 favorable. I can do the calculation if I want. which is your budgeted fixed overhead 20,000 minus actual fixed overhead 11,800. Budgeted fixed overhead minus actual fixed overhead. Any doubts on this? Budgeted fixed overhead for a budgeted production of 20,000 is 16,000. Certain period the actual production is 23,000. Actual expenditure 62. Volume variance. Volume variance. I'll write the formula here. Volume is SR into AO minus BFOH. SR into AO minus BFOH. It's basically SR into SH, but here units only is possible. SR into AO minus BFOH. SR is how much? 3 into minus 60,000, 9,000 favorable. A company operates a standard costing system. Budgeted fixed production overhead last year is 5 lakh. Budgeted output is 2 lakh 50. When you read this, you get SR is 2 rupees. At the end of the financial year, fixed production overhead debited to the account is 470, which means actual fixed overhead is 470. Output achieved is 2 lakh. Under our over absorption is nothing but FOH cost variance. FOH cost variance is called under our over recovery. Tell me the FOH cost variance here. FOH cost variance, negative means under recovery, positive means over recovery. 70,000. Formula is SR into AO minus AFOH. SR is 2 rupees per unit into 2 lakh. AFOH is, so 4 lakh minus 470. 4 lakh minus 470. PQR Limited has normal monthly machine hour capacity of 120 machine hours, working 8 hours per day for 24 working days in a month. Budgeted fixed overhead 450, actual production 4,500, actual fixed overhead 475. What is expenditure variance? What's the answer? There isn't any calculation needed. Calculator is not even needed. What is the formula for expenditure variance? BFOH minus AFOH. Lot of irrelevant data is there. BFOH minus AFOH. 450 minus 475. 4 lakh 50 minus 4 lakh 75. All other data is of no use. That data can give me SR and all. I can use that in case I have to calculate the other variances. Capacity variance 36,000. Calendar variance 2850. Expenditure variance 5,000 adverse. Volume variance will be, I think there is an error. I'm not sure if there is an error. This should be efficiency. If it's an error, this should be efficiency. Okay, there's no efficiency variance. Without efficiency, then this question works without efficiency variance. Assuming efficiency variance is 0, tell me the answer. 15, 150 favorable. Budgeted overheads is 9,600. Absorbed overheads is SR into AO. SR into AO. Fixed overheads at actual hours is 10,000. Actual overhead is 11,650. Overhead volume variance. Overhead volume variance. Tell me the formula, you'll get the answer. That's all. SR into SH minus SR into SH is 10,650. Absorbed overheads. Absorbed overheads is what? 10,650. Budgeted overheads is 9,600. I can do other calculation and all. I don't need it. I don't need all that calculation. Any doubts on this? You get an answer of what? 1,050. Standard overhead absorption rate per unit 20. Rate per hour 4. VOH per unit is 15. What is FOH rate per hour? We did this in one question. FOH rate per hour. No, it's not 5. 4 options, you can tell all the 4. So I'll tell one of them is right. Answer is 5. Yeah. Answer is 1. 20 is broken down into 15, 5, 4 is broken down as 3 and 1. 4 is broken down as 3 and 1. Overhead cost variance 1400 adverse. Actual rate of recovery of overheads is 8. Budgeted fixed overhead 6000. Volume variance is 1000 adverse. How much is the actual hours? How much is the actual hours? Now let's write this SR into SH, SR into AH, BFOH, AFOH. What is the information available in the question? BFOH is available. How much is BFOH? 6000. BFOH is 6000. Use use volume variance and tell me the first column. Volume variance and tell me what will be the first column figure. 5000. Use cost variance and tell me what will be the last column. 6000. That is broken down as 8 into 800. That is broken down as 8 into 800. Clear? Any doubts on this? A factory has budgeted working days of 16,000 for a month, 20 days working. Company actually worked for 17,000 hours, 22 days. What is the capacity ratio? This question has data on actual days as well as budgeted days. We had a format where we said SH, AH, PH, BH, SH, AH, PH and BH. What is the actual, whatever data we have, budgeted working days is 16,000. 16,000 is equal to 20 days. What is 22 days? 16,000 equal to 20 days. What is 22 days? 17,600. Actual hours is capacity ratios AH divided by PH. AH divided by PH. 96.59%. Clear? Any doubts on this? With this, my entire segment of costing gets over along with revision. Only request, as I've been saying, please keep using the concept videos multiple times so that you get grip on the subject. Whenever you want to revise something, you can use concept video, but along with that, first some preparation has to be there at your end. I'll take a break and then start with FM part.